Friday. Are we live? Wait for it. Wait for it. Live. Oh, there it is. Good morning, ladies and gentlemen. I hope you're having a wonderful day. If you're watching this and it does not say live at the bottom of the screen, unfortunately, you're watching the recap. The good news is we are live Monday through Friday, 30 minutes before open. Drop your thumbs up on the video. Make sure you're subscribed. You're on mobile. Press hot chat. X out the chat. Hit the thumbs up button. Second link for the nightly watch list and main channel. First link for the Scream Alerts boot camp and real estate course. But, ladies and gentlemen, boys and girls, we have a wild day ahead of us. You got Netflix after the bell. Procter & Gamble was kind of in the middle, but slightly disappointing. I think they missed, it was in the first time in 5 years, they reported sales slightly a little bit lower, but everything else was pretty decent. But then the data. So a lot of people were tripping out about the recessionary data that we had yesterday. You had more bad data today. It was not as bad as yesterday, but the jobless claims, it keeps going lower, meaning employment is really strong. And I'm telling you, it is perplexing people. It is perplexing them all. So, Chad, we have a wild day ahead of us. Again, the earnings are going to be good. It's going to set us up into Friday, and we're going to see where it is. But globally, everything kind of took a breather. Even the bonds, they were up yesterday, and then they calmed down. So we are going to see. But, Chad Adonia, I hope you're ready. I hope you're locked in, loaded, and let's make it a good day. But Chad, good morning. Wait, before that, I went members only because I saw more people voted on the survey than liked the video. How the hell is that even possible? I'm just saying, y'all ready to participate? Oh yeah, y'all taught me yesterday that y'all hiding them likes, huh? I'm gonna sell y'all the member chat, the non-member chat now. Yeah, what's up, man? Good morning. Yeah, what's up? Good morning. I'm making Carissa be like, what's up, bro? Well, Carissa's like, what's up with that ratio out there, huh? Yeah, they like, where's the 10? I got the 10 right there. You trying to get in the chat or what? Look at that. See? I know you can vote. I know you can like the video. Oh, good morning, baby. Yeah, no need to save the likes. Let me see. Let me say what's up, bro. Yeah, hit the like at 6 a.m. Good morning, baby. Good morning. So I'm gonna periodically have to hit them with the shockwave. You know what I'm saying? I'm gonna have to periodically hit them with the shockwave. There you go. But I gotta say good morning, baby. I gotta say good morning. Good morning. How you living? How you living? How you feeling, Chad Adonia? What's up, baby? We gonna have a good one. What's up, Reaper? What's up, Battleborn? What's up, Laker? Jay. Oh, look at that. See, there you go. Now we got a better ratio. There you go. What's up, Dunanis? What's up, Michael Bono? What's up, Young Blood Flav? Kevin, Banek. Oh, Shaching. Cha-ching, is that like cha-ching? Kyle, Max Capital. What's up, Hamid? What's up, Tony? Mr. J. Cole, Nepal, bright and early, baby. What's up, Lateral? Jade, Acevedo, Alpha. Oh, open face sandwich, baby. Good morning. Look at the chat. Look at the chat. Nate McAllister. What's up, baby? How you doing, Kevin Connolly? Are you famous? Are you in Entourage? Oh, what's up, Uncle Terry? How you living, Z-Trade? Mr. Schaefer. Oh, we even got some new people in this squad. What's up, Riley? Good morning, baby. How you living, Ari, Joanna? What's up, 333, Tilo, Payday, Battleborn, Amor Fati. Oh, the Mr. Spence, Sizzler, Picchiotti, Ace Bleeze. And, bro, Jake from State Farm, bro. They were even saying, they're like, yo, I've been noticing Jake from State Farm is borderline just as consistent as the Peach, dog. I'm just saying, it's an observation, man. It's an observation, Chad Adonia. Good morning, man. So I hope you guys are ready. The data was bad today. The Philadelphia Fed came in lower, but it wasn't as low as expected. So it's kind of a relief compared to yesterday, which was all literally hard landing data. But then jobless claims came in very, very low. And then real estate data was low, but it wasn't as bad. It was expected to come in at 4.8% month over month on housing starts, but it only came in at 1.4. Building permits barely missed. So it's like the data wasn't as bad as yesterday. It was still negative. Wasn't as recessionary, but then the jobless claims, I'm telling you, bro, people are tripping out right now. Everyone's like, wait a minute, after all of the bad data we've been getting, All of the, like, like some of the data is awful if you really look at it, but then they're like, why aren't the jobs coming down? So the jobs is really, again, I mean, surprisingly, we're holding up pretty good. We were down 0.8 when it came out. You went down to almost 1%, and then it came back up there. But realistically, I think we're going to find out more with Powell. And guess what? You got a lot of Fed speakers today. So, Chattadonia, let us get into the news. What do we got? Don't fight the Fed. Jerome Powell's top two lieutenants, John Williams and Lael Brainerd, they offer updates on the trajectory for rates in the economic outlook today. They will be closely watched after Lori Logan joined Patrick Harker in backing a slower pace of rate hikes starting at the next meeting, though she favors keeping financial conditions restrictive. Non-voter Susan Collins also speaks today as well, too. Fight the Bank of Japan instead. UBS and Schroders stuck with bets on JGB yields will rise on expectations, and the bank will stop capping the 10-year at 0.5. The mother of all pivots is underway, but it will come in phases. Pinebridge Investment said investors have little to lose by shorting the JGBs, one CIO said. As for the ECB, leading hawk Klaus Knott called for a constant pace of multiple 50 basis point rate hikes. Christine Lagarde vowed she will also stay the course until the bank is in restrictive territory. Futures fell and Treasuries erased gains as investors weighed the risk of an economic slowdown and the outlook on rates. The dollar was steady. Oil fell for a second day while gold rose. Bond bonanza. Global debt sales have got off to a record start in 2023, reaching $586 billion through January 18th after last year's rout. A boom in new issuance has seen bonds of all stripes, 4.1, the best performance in date since 1999. Bloomberg sees U.S. high-grade debt returning 10% this year, more than double junk, while EM notes may advance 8%. It's a bond. The bonds are coming back in 2023. Oaktree's Howard Marks says the junk rally won't last. Current prices are roughly sustainable, he said, but they're not going to keep up with yields, and they're not going to keep coming down. Guggenheim is shifting their portfolios to have a bigger focus on high-grade bonds, expecting credit markets will get a little bit choppier, according to managing partner Ann Walsh. The number of bankers and traders in the EU earning more than $1 million rose to a record 2021 as securities firms took a bumper revenue and investment banks relocated staff to the bloc after Brexit. The number of such high earners surged 42% from the previous year. The EU's best paid bankers were in Spain, earning between 14 and 15 million euros. Another wealthy banker, Jamie Dimon, told CNBC the Fed will probably take rate hikes higher than 5. He called Bitcoin hyped up fraud and said the government shouldn't play games with the debt ceiling. Okay, Jamie. Okay, I see how you really feel, Jamie. Goldman will continue to hire international head Richard Node. Recent job cuts realized its footprint, but the firm expects to add 3,000 more graduates and recruits selectively at all levels. Apple is working on smart home devices to challenge Amazon and Google, including displays and faster TV set-top boxes, people familiar said. Procter & Gamble reported higher prices are more than offset a decline in volume of goods, and they boosted their revenue outlook. That was Procter & Gamble. Netflix is due post-market, with analysts looking for 4.5 million new subscribers and updates on its new ad-supported tier. And then New Zealand Prime Minister Jacinda Ardern will step down, saying she lacks the energy or inspiration to seek re-election. The surprise resignation brings the curtain down on a political career that saw her achieve global status after becoming the world's youngest female leader at 37 in 2017. Polls indicate an uphill battle to win a third term in October's election, with her Labor Party trailing the opposition. 9 a.m., you're going to get Fed Collins. 11 a.m., EIA U.S. oil inventories. 11:30, $70 billion of 4-week bonds and $60 billion of 8-week bills. 1 p.m., $17 billion of 10-year tips and $60 billion of 44-day CMBSs. 1:15, Fed Brainerd is speaking. 2 p.m., ECB Klaus Knott. And then 6:35, Fed Williams. And then Biden visits California to speak on extreme weather. Thank you, Biden. Thank you, Biden. Bro, I had a request the other day. They said we should do the morning news and all of it in the Biden voice. And I said, how? How would that even, like, I would be dying if that was the case. That'd be so difficult. Housing starts fell less than expected, 1.4 in December, to an annualized 1.38 million units from a revised decline of 1.8 in the month prior. Building permits slipped 1.6. Initial jobless claims unexpectedly fell to 190,000 last week. Janet Yellen and China's Li Hu privately discussed points of disagreement during a break from the official proceedings in their first face-to-face meeting, a sign that the two countries are seeking to downplay tensions. Senator Joe Manchin wants Democrats to seek a deal with the GOP to avert a debt default, putting him at odds with Joe Biden. Brazil's President Lula questioned the advantages of an independent central bank in Globo TV. He also argued for higher central inflation target and vowed to bring January 8th rioters to justice. He doubted the central bank. They gonna Gaddafi him. Just saying, bro. French labor unions led a mass strike in protest against government plans to revamp the pension system. Workers in railways, schools, hospitals, and air traffic control are taking part of the 24-hour strike. SMB head Thomas Jordan threatened rate hikes. We are roughly at 1% now, and inflation is still above 2%, so it's clear some tightening is probably in the cards. Bank of England Andrew Bailey said 2 months of slowing headline inflation signal the economy maybe getting past the worst. The most likely outcome is that it'll fall quite rapidly this year, probably starting in the late spring. Two Swedish brothers were convicted of espionage on behalf of Russia's GRU military intelligence, with the eldest facing life in jail. The two men who were arrested in September obtained 100 classified documents from Sweden's Security Intelligence Service. Kazakh President Kazim Jomart Tokayev announced snap parliamentary elections for March 19, calling the final stage of a political reset. Malaysian Central Bank kept the rate unchanged at 2.75, halting their tightening cycle. Bank of Indonesia raised by 25 basis points. Bridgewater is strongly bullish on short-term Chinese debt after their onshore enhanced all-weather fund gained 7.4 last year. The performance was mainly driven by a 4.1 excess return relative to cash generated by quantitative part of the strategy. Its December investor letter said. They're also bullish on bonds. I don't know why they call it Chinese bonds. They said short-term bonds. China is gearing up to start a new trading link with Hong Kong, giving global investors access to onshore interest rate derivatives. The Bank of China shared draft rules for the swap connected with some Chinese firms last month. People familiar said Hong Kong will end mandatory quarantine requirements for the COVID for January 13th. Japan and trade deficit narrowed more than expected in December. Australia's unemployment rate unexpectedly dropped. Bank of Japan fails to crush the big short at UBS. China's opaque keep well bonds face new test as ruling nears. China's mass take on COVID fight into its own hand as Xi sits back. U.S. crude stockpiles continue to surge, rising by 7.6 million barrels last week. The API is said to have reported that would be the fourth weekly gain and take holdings to the highest since June 2021, if confirmed by the EIA. Inventories at Cushing climbed 3.7 million. Gasoline stocks also rose, while distillate inventories dropped. Oil fell for a second day after the report and economic growth concerns. The medium-term outlook remains buoyant, PVM Oil said. Base metals except nickel retreated on renewed concerns about global growth. Gold was the only precious metal to trade in the green. Copper's cash price on the LME is trading in backwardation to 3-month futures for the first time since November, signaling insufficient immediate supply. Citi expects the metal will hit 10,000 a ton in the near term amid liquidation on short positions. Some Chinese investors are sounding a more cautious note. Demand is soaring for oil storage tankers in Singapore, and a sign that a flood of Russian fuel is being blended and re-exported globally. This trend may further re-intensify as new curbs on Russian exports take effect. Elsewhere, China's Unipec bought 17 to 18 cargoes of upper Zaycam equivalent to 9 million barrels this month on March loading. China will further boost soybean production to trim their dependence on imports from Brazil and the U.S. The country plans to raise the planting area by about 6% in 2023 to 10 million or 667,000 hectares. Is it hectares? Hectares from a year earlier. 5 companies are considering selling fresh U.S. high-grade debt. J.P. Morgan gained full control of their China mutual fund. China regulator approved the bank's purchase of a 49% stake in China International Fund Management from Shanghai International Trust. Clayton, Dublier, and Rice is moving to clinching a $20 billion fundraising for their latest flagship buyout vehicle. Global Switch's discussion regarding a potential sale has almost ground to a halt, people familiar said. Musk has more to lose if he tries to skip Twitter debt payment, but Morgan Stanley CEO gave him a positive note today, or a positive comment. Abu Dhabi expects Israel companies to list on ADX this year. Americana said it may file for bankruptcy protection in the next few hours. The cash position evaporated of 154 million. The announcement comes just 8 days after 20 billion reals is an accounting inconsistencies were revealed. Citi is said to have Mooney businesses halted in Texas after the state's AG office said the bank's anti-gun policy discriminates against the firearm industry. Alcoa slumped pre-market after saying aluminum shipments will be weaker than anticipated next year. Oh, did I put Alcoa on there? I forgot about them. That one big. That one very, very big. Nomura trims Amsterdam, Paris, Milan, and Madrid deal-making team. Asia hedge funds avert 2008 scale disaster on China reopening. Tesla route overshadows bigger Rivian and Lucid plunges. Apple to expand smart home, taking on Apple and Google. IBM raised to market perform at MoffettNathanson, price target 140. JP Morgan gets CSRC nod to take control of China Mutual Fund. And then Visa rated at outperform at the CICC. I think what's the price target? 267.79. Ooh, and then fake news. Beyond Meat and Impossible Foods wanted to upend the 1 trillion meat industry, but the plant-based products are turning out to be a flop. Meatless meat seems less of a world-changing innovation than any other food trend whose novelty is wearing thin. That is the big take on the day. Top Gear last year was challenging for both car makers and buyers of high interest rates and dodging inflation, but luxury automakers like Bentley, Lamborghini, and Porsche reported increased sales and expect more success in 2023 as cash remains king for high-end car buyers. Not so smiley, Amazon will halt their decade-old Amazon Smile program that let customers pick a charity to receive a donation from the company equal to 0.5 of their purchases. It's a sign how the tech industry cost-cutting may ripple through the nonprofit world. That's sad. Oh, this one sucks too, bro. Jamaican Olympian hero Usain Bolt found $12 million missing from an account he had in Kingston-based stocks and securities, leaving only $12,000, according to his lawyer. Lytton P. Gordon, regulators have taken control of SSL. If Bolt doesn't see the money returned within 8 days, Gordon said he plans to take the case to the Supreme Court in Kingston. Bro, they scammed Usain. They got Usain Bolt, bro. You ready for my tinfoil? You ready for my tinfoil? Oh, wait. You got to like the video because now I can't tell you stuff because you won't like the video. Oh, and now we have double the amount of votes than likes? Okay, here, hold on. Hold on. Yeah, so now you get tinfoil and your access to the Chad. I forgot. My bad. My bad, Chad. This is how they wanted it, Chad. Oh, I got mad Usain Bolt tinfoil. Oh, but I guess we're going to have to get the equal ratios. Yeah, you see? Carissa was trying to save y'all from the dictator. Aladdin, but no. Food for thought. Investors in Glasgow in 1970s chicken tikka masala changed the British palate. It traveled to India, where some restaurants serve as its kind of curiosity, and now it's finding its way to the U.S. and Europe. Bloomberg's Bobby Ghost reveals how he learned to stop hating this fake Indian dish. What? Chicken tikka masala ain't a real Indian dish? It's influenced by the British? What? That's crazy. And then on this day in history, Dolly Parton was born in 1946 in a one-room cabin in Tennessee, the fourth of 12 children. She's known primarily for her 5-decade-long career in country music, having been named a living legend by the Library of Congress in 2004 for her enrichment of American culture heritage. Her hits include Jolene, I Will Always Love You, and 9 to 5. Wow, beautiful. Beautiful. Look at that. I like chicken tikka masala, bro. That's crazy. I didn't know it. I didn't know the history behind it like that. That's crazy, bro. So that's crazy. So yeah, you guys are like 200 likes short for any tin and or access to the Chad. That's crazy, man. So I need to go to the bathroom, but I feel bad leaving y'all locked in with that without getting the tin. So I'll give you guys a discount. You know what I'm saying? We just need like 50 more likes. It's okay. 50 more. We're gonna be there. 300, 400. There's a 400 surplus on the votes. So I think you guys are able and willing. You know what I'm saying? You're definitely able and willing. But I got some good tin. I got some really good tin related to Usain Bolt getting scammed $12 million. Are you ready? All right, there you go. You hit it. See? I'm glad you guys are here. I'm glad you guys are here. You know what I'm saying? I'm glad. Amen. Good morning. All right, are you ready? Here it is, Chad. I bet you Usain Bolt's money manager, the bank, they put their money in FTX. Yeah. I've heard of people getting scammed, but like he didn't get scammed. He just put his money in an account and then couldn't get it. And he's like, I don't have $12 million anymore. Uh-huh. Yeah. Come on, that's good tin. Think about it. It's not like he gave his money to like Britney Spears to invest in something. You know what I'm saying? It's not like he gave it to an investment. Nah. It was just like he just literally woke up and it was gone. So, Chad, that's a good one. The data has been crazy. Oh, we have pre-market movers. I need to go pee, though. So we're going to get to it here in a little bit. But, Chad, I love you. God bless you. And follow me on Instagram, @TheTradingFraternity. Let's have a good day. Hit that thumbs up button, baby. I know we've been doing it through, I just was through more force today. I was just you reminded me. Y'all reminded me.
Pandemic, there was
right,
rapid acceleration. I think we are going to go through a phase today where there is going to be some amount of normalization of that demand. Quite frankly, we in the tech industry will also have to get efficient, right? It's not about everyone else doing more with less. We will have to do more with less. So we will have to show our own productivity gains with our own sort of technology.
Layoffs piling up from coast to coast. Two of the world's largest tech companies, Microsoft and Amazon, cutting 28,000 jobs this week. Cost-cutting measures making their way to Wall Street as well. Bank of America, the latest to hit the brakes. CEO Brian Moynihan saying, quote, "We were hiring to match the Great Resignation earlier in the year, and it was sort of overachieving." Shnali Basak on top of this story. Shnali, a key feature of earnings over the last week or so.
A key feature is those costs just ballooning. And remember, simply said, John, the pie is getting smaller. There's a bar on how high revenue can get. And you have headcount at Bank of America alone, which is causing a hiring freeze right now, headcount ballooning by 8,500 last year. Remember, wages are also rising here. All in all, this means the big six banks are expected to spend a record amount of money this year, $320 billion, 2/3 of that coming from labor costs, personnel expenses, compensation. Remember, technology spend is also higher on the year for many of these firms. So they're going to have to make a trade-off on these long-term investments they make versus the personnel moves they make this year as they hope to get out of a slumping market in some of these businesses. Now, remember,
let's go, baby.
This really just...
Chad, how you feeling? You feeling good? Your goal is don't get annoyed by Yash. My goal is to not get annoyed by you. What? What's this guy saying? What's this guy saying? We got so much hype today. How you coming in with that? Like I said yesterday, y'all got to go back to sleep. If it ain't a good mood today, I'm telling y'all, because the market going to go up and down, and everyone's going to say it's manipulated, and then we going to look at it and go, "Arr." Everyone going to turn into an elite from PHILO too. You ready for it? So, Chad, we got a couple of plays. Alcoa slides 6%. Aluminum and producers adjusted EBITDA for the fourth quarter fell short of analysts. Allstate shares are down 4.9 after the company reported preliminary adjusted net loss for the fourth quarter. Analysts were also negative on the report. Bluebird Sciences 1.2 higher after the stock offering priced in 20 million shares. Price action pairs a 17% sell-off. CureVac gains 8.9 as UBS upgrades the stock. Discover falls 8%. They said net charge-offs were much higher at 3.5 to 3.9 instead of 2.8. International Business Machines, IBM, what a name. I've never said the full name. Is upgraded to market perform from underperform at MoffettNathanson. Shares are down 0.5. NRXP gains 1.6 after the drug competitor said it had a meeting with the FDA over their lead compound. Olynic Holding is down 17 after an offering priced at 5 million shares. Procter & Gamble slides 3.4 after fiscal quarter showed that volume trends are worsening, with organic volume growth declining more than analysts projected. The consumer giant maintained full-year EPS outlook, though some analysts had expected it would withdraw comments about being on the lower end. Roblo falls 6% after the global gaming platform was downgraded to underweight from equal weight at Morgan Stanley, which expects slower bookings in the second half. I think they gave them a $19 price target. And then Tesla shares are down 2 after at least 2 more Wall Street analysts lowered their price target on the EV maker, citing the company's recent decision to cut the price on cars. Teva declines 1.9 after Jefferies downgraded the drug maker from hold to buy. Zymeworks gains 8% after Ecor bought about $9 million worth of shares in recent days, adding to their stake. So, Chad, we only got 2 more minutes. What do you got? I need your play. First play of the day. What are you holding, man? Let's go. Are you ready to play or not? Chad? What you got for me? Oh, man. Short love. Yesla getting cheaper. Tesla calls. SPY puts. Melly calls. CLSK calls. NOC calls. Oh, upcoming strike, long SPY, SPX calls, Netflix, 390 calls, SPY full port, closing my cap puts, Peloton, not ready. I'm sure. What does that mean? Zen long, Tesla calls, SPY puts, 393 calls, SPY calls, 389, SPXU calls, Tesla, SPXU, Micron puts, SPX, long Tesla, AAL, Mara calls, Huddle shares, Pfizer calls, long NGS, watching the video below 170, get Tesla when it'll be 110, cutting 4K loss, PRVB, hoping it works out, snipe some Netflix. Oh, yes, let's do Netflix. Roblox puts, Huddy shares, huddle shares again. Tesla, Biden, long Cardano, Roku puts, short SPY, then buy Boyle, Patience, finger to the sky, coin puts, Kit shares, Netflix calls, IWM, Mulan calls, Bank of America puts, BA calls, Netflix puts, Microsoft puts, SPX, let's go, Apple puts, FRZA shares, Amazon puts, Bros, Holden, Mulan, short QQQ, SOSX, Iron Condor, Amazon puts, Airbnb puts at resistance, Mosaic shares, buying Fubu, SPY calls. Am I buying Netflix? I will. We're going to do something today. Let's go. And SOSX buying more Newegg, UVXY short CL, VIX calls, sipping coffee, watching the SPY puts, closing out the GME short, UVXY, hello there again. And then Platinum Futures, and I want a steak. Let's go, baby. Let's go. Let's go. Chattadonia, it's game time. Again, this is earnings, man. And we got earnings after the bell. And then Friday, and now we got, oh, man, it's going to be exciting. But before we do anything, before we get too excited, before we chase a dollar, we got to pay homage to the people that made that sacrifice, baby. And that is the veterans of the United States of America. On behalf of the cult, it's an honor to say thank you each and every single day. For real, if you have served this country, past service, active service, anybody who has served this nation, even down to the families, man. We love you guys and thank you for your service. I hope you know it is appreciated. And if you serve your local community in any capacity, I don't know if you volunteer, maybe a nonprofit, maybe you coach a team, maybe, I don't know, maybe you just give money to the people who need it. Maybe you just give your time to the people who need it, man. If you're a doctor, a nurse, a teacher, a police officer, firefighter, anybody, man, for real, I hope you know you're appreciated as well, too. And thank you for your service as well. Ladies and gentlemen, please rise. Place your right hand over your heart. Say it with me. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all, baby. Send in the Jets! Oh, it's game time, baby. Horna, let's go. Good morning. Oh, did you wake up today, Chad? Are you awake? Are you awake? You got a minute and a half to decide. Wake up or go to bed. I'm telling you. It's, oh, what the hell, Meta? What are you doing? What are you doing? Oh, man. I am going a little crazy today. I don't know why, honestly. I don't know. I don't want to lose my voice, but I don't know why I got so excited. I was up like $2,000 on the bonds, and I woke up down $1,000 on the bonds. I don't even know why I should even be excited like that. But oh yeah, I got plays too. Procter Gamble. Again, I'm still in that one, down like 700. We're gonna see. Hopefully it bounces. Otherwise it'll get ugly. Meta for the downside. Netflix. So I'm just gonna keep flipping 5 shares back and forth on Netflix today. We'll see. I'm gonna try to at least, and then watch the bond plays. Watch the yen as well too. That one's gonna be interesting. Then Lockheed, they have earnings coming up next week. Tesla as well. I want to see how they perform, and then Alcoa, XLB, and then what was the other one? And then Discovery DFS, Discovery Financial after the charge-off downgrade, and that's about it. We got about 50 seconds, Chad. So let's go. I need you to hit that like button. You guys are a little bit behind. You guys are a little bit behind. That's it. You know how it is. You know how it is. The government hitting the debt limit is going to be important once if there's actually like a credit downgrade. That's it. Up until then, I really wouldn't worry about it. Quite frankly, I'd be more worried about the macroeconomic data. Again, that's why today's data it wasn't good. It was better than yesterday, but the jobs are just tripping people out. The jobs won't go down at all. The labor market is still extremely strong, but that recessionary data yesterday was really, really, really bad. So we got to see. What did my mom say about that? My mom doesn't like Tesla. My mom is not. Well, she likes the car, but she doesn't like Elon. Round 1. Fight. Procter at only 1.6. They were down double. So watch for Procter Gamble post earnings. Again, there's a couple of others. We should have been up on the Meta, but they had that bounce. Again, damn, Discover's down 6. If that bounces, I'd be down to short it. I want to keep up the bonds, but I feel like we need to keep up a Netflix today. So, like, literally, my plan, I just want to keep flipping those 5 shares over and over and over again. I'm down $12 on the upside, but again, they have earnings here today, so we'll see. Amazon pop. Price hikes are propping up profits. Looks dicey. I think that's word to Procter and Gamble. So we'll see how that plays. Again, you're only down 0.47. You were down like 0.96 at one point throughout the morning. After the data, Apple's down 0.5. And remember, Microsoft and Tesla are the next big tech earnings after tonight. So keep that in mind. I guess Tesla's still above 127. I guess we'll take it. Walmart's actually up. Where's the Dow? The Dow is down 0.5 again. The Dow is underperforming. Not everything's there. Netflix earnings, I don't know what's going to happen. I know fourth quarter, this is usually where things get worse for them or they spend a lot more money. However, I think a lot of people, just like last quarter, they're going to really be focused on the guidance for their strong quarter, which is Q1. So that's what I want to be on the lookout for. However, the updates to the ad revenue, that one will be very important. Tesla pop, still down a little. Google is the one flying now. Google's positive 0.5%. Man, so is Meta. Meta just even recovered real quick. And then don't forget about Alcoa. You could even watch the materials. They're only down 0.5. MDC on the low. Let me see. Oh shit, that's the wrong stock. Where is it? Hold on, I was gonna go with something. I'm either thinking Alcoa or materials. I think Alcoa is a little bit stronger. SPY's coming up here. Yeah, Meta and Google are gassing. Very slow today on the platform. XLU, Google, Amazon gassing, Baba. This is good. Again, only thing that's green right now is communications. That was very slow. All right, I shorted 100 shares of XLB at 81.27. I'll take it there. I wanted to do 200, but I'm just going to wait, kind of like you saw me do with Procter and Gamble. We'll see what happens. And then, dude, you're recovering big right now. Tesla breakout already. I think, bro, this cash open is strong. Netflix is not doing much right there. Again, I just went in on XLB. So that's going to be kind of related. I would have went with Alcoa, but I think XLB kind of has a little bit more upside, and that's kind of the value play slipping a little harder today. But that could change. But, yeah, bonds are even coming back up. Tesla's still down. I think Google, Meta, Amazon are the strong ones. Netflix ain't. Dude, Google's up 1%. Google is going straight up. Meta's about to go green, or Amazon's about to go green. So is Apple. Chat is also strong. That's why I hit the like button. Hit the like. I don't want to start selling y'all anything. You know what I'm saying? Like, you do U.S. stocks extend decline. Oh, yeah, where's PG? Still in that. PG's actually kind of recovering a little decently. I'm not as down as much as earlier. McDonald's is coming up. Booking is on the high. Where does Uber? Uber, you do good? Uber, okay, not bad, Uber. Oh, United's killing. That one, thankfully, we only did 50 shares. And then AA is already down too. I know that's AAL. Yeah, I went XLB short. Not a recommendation. You will lose money. but at least it's shares. That is the material ETF. And then bonds kind of move. Now we're finally getting your red candle on the day. Damn, futures are well below the line. Again, 3,900. You guys remember this 3,906, 3,907? Like, remember, 3,907 is pretty much 3,906. Those are those small levels. If you flush, you go 3,900. When was the last time I told you about these levels? I forgot. It wasn't too long ago, but we dealt with this, I think, a couple weeks ago, a lot more. So, believe it or not, maybe that's why we're moving a little slower. You're at a very, very key level here. Baba's going really, really good on the green. I did not grab any Bank of America. They're going down even more. Wow. I think, did Goldman drop too? Yeah, Goldman's actually getting back down to the lows after the earnings. Bonds are kind of coming up. Roblo got put in. Nice. Bro, Roblo they gave it like a $19 price target. Tesla is about to go green. So again, NASDAQ is outperforming again. SPY and Dow are in the same, but not every Dow name is down. So it's not like yesterday. Again, I think that's kind of the balance of the data being bad, but not as bad as yesterday. And then again, jobless claims are pretty awful, but we are firmly up since then. We've low-key been brushing off the jobless claims in a weird, weird way, but we'll see. I guess it's only been about 6 minutes. Where's Discover? Okay, I want to say, I hope Netflix doesn't turn into Procter and Gamble with that run it had yesterday in the earnings. UAL Airlines getting smashed yesterday. Roblo's falls after MS downgrades on slower bookings ahead. Inflation theme is behind us. No, it's still lurking there, and people are worried it comes back. But right now, the data, you're getting a lot of evidence for hard landing data. But then now tie that into the possibility that inflation is probably going to rear its ugly head again. And that's what's putting everybody in this weird, very, very weird way. Awful. The jobs data was awful in the sense it's strong, but it's very perplexing because, rarely have you seen PPI drop how it dropped. Rarely have you seen Empire Fed, manufacturing data hit, multi-decade lows, and then all of a sudden employment, no matter what, will not show any signs of weakness in the same period. So you're kind of coming up there. There's Discover. Discover gave up 7%. How come Discover's chart kind of look like Tesla? And then again, 3906 or 3905 you bounced off of. Damn it, why'd I open that one? I already missed that. We got to speed up everything. Can't have two active trader really slow down your TD. Keep in mind. 39.12. News on Meta, nothing, bro. They were down. I was positive on the short, and then them and Google just got the run up. Again, I mean, they do have earnings coming up right around the corner. Now there's Apple. Apple's about to go green. I don't know if Tesla did. Tesla went green. Almost near 130. Good for you, Habibi. Now only Netflix is the one that need to move, You know the Netflix guy? Apple on the high again. SPY hitting a new high. Still down 0.3. Dow Jones is going up, but everything's matched up now. You're literally 0.34, 0.3. NASDAQ, Dow, and SPY. I am not selling my Tesla today, no. It's weird. I get the question both sides. Like when it dumps, everyone's like, you going to sell it now? You going to take the loss? And then when it goes up, you like, you going to sell it now? I'm just going to wait, man. I'm scared of earnings, though. I'm not going to lie to you. Not going to lie to you. Yeah, HPI coming down. I think Redfin, they were up a little bit pre-market, but then they sold. Real estate data wasn't that bad. Bowen, a little pop. They're holding. LMT, they're fine. Again, LMT has earnings right around the corner. There's Discover. Everything's kind of moving. Bluebird. I forgot. I remember we read it, but I'm blanking on it off the top of my head. IEF, I'm playing the 10-year version of it. So, or the future version of it. Do you think hard landing? I think the landing is going to be a landing. And I think trying to describe it as soft or hard is just, I think that's used to kind of get people expected. It's like, I'm going to punch you, right? Let's say I'm going to punch you. It don't matter if it's hard or soft, you still getting punched. So it's just like, I think we're going to get punched no matter what at this point. And that's kind of just how we play from there. That'll be interesting. Jerome, I don't know. We have not got any health updates. Yeah, the Netflix, like I said, just watch. I'm waiting for it to pick a direction, but you might get everything both ways. HBI under 8. That one's not pretty. XOM, new high. Dude, the oil bro, it don't matter. Oil goes up or down, man. Them oil companies are the real W's. These bonds are coming back a little. I'm surprised. Oh, I have a new thing. I got a new line on the yen for you. I drew you 2 yen lines if you wanted to see. I gave you a new line on the bonds too, but right here, this is the money point on the yen. This is where I think it'll get to, and then you want to consider taking profits here, but if it gets past here, it's going to go up to like 8.3 or 0.083. So if it gets to here, it goes to here. Otherwise, it'll get here and kind of calm down. And then, again, with bonds, I gave you guys the update for that 3.25. We have it outlined here if you watch the watch list. Yeah, oil names going green now. Energy's still down on the day. And then real estate's positive, healthcare, and then now communications. Shout out to Meta and Google. So a couple of red candles here now. Amazonian, Apollonia, and then the bonds are up. Bonds are still doing better than stocks. There's XLB coming down. Watch out now. Some things are moving quite drastically. DFS bounced from the bottom. Materials are dumping now. So there you go. Dude, they're all over. There's that Amazon. Amazon's really, really flushing. And then Microsoft. Wait, Amazon. Amazon just flipped real quick. So Amazon went from up near a high, about to go positive, and then that's it. Manchkin says debt limit shouldn't be held hostage. So now we're back to the lows again. Now this is going to be the 39.05. If you break, we're most likely going to go to 3,900. It might get a little bit of dancing at 39.01, but it should flush, to be honest with you. And then again, I do have more levels for you below there. So 39.05, new low set. Pretty much 38.90. So if you flush this at 3,900, that's 10 points. And then 38.68 is the 100-day moving average. So if this does end up being negative like yesterday, I mean, the range is going to be huge. So 39.60. Again, remember we were talking 39.20 last night. Yeah, but they're saying you're going to go here. So these are soft levels, but if you fail, you're coming back down here is what it's looking like. unless we could find a way to string together some green. Bonds are even coming down too. Netflix low of the day. Yeah, Amazon just flipped. Morgan Stanley's on the low. I don't know why Meta is holding up like that. Procter & Gamble at least doing decent, but NASDAQ is worse than SPY and Dow. Dow is the best performer. Yeah, bro. Amazon and Microsoft, those just flipped out of nowhere. Check Apple, and Apple's about to do the same thing. Tesla's holding up a little bit better, but Tesla is prone to play along. But all of a sudden, like Amazon, Microsoft, those guys just flipped right there as the market hit that top. Baba was looking good. Did it turn too? I think Baba, yeah, the China names are holding. Switch gears. Lulu dove 1.7. Check the finance. Dude, that damn Discovery would have been nice. Google flipped. Then Energy. Energy is still a little bit more red, even though XOM's climbing. MS. Bro, Morgan Stanley CEO was like talking smack this morning. He was making fun of he was at Davos making fun of the people speaking at Davos, and then he called Elon Musk brilliant. And he kind of said, I trust Elon. He said, the guy's brilliant. He said, look at what he's done. So I think you have to pay for that. I don't know. Because remember, they were one of the only ones that did good. Let's check Wells. But banks aren't doing too bad, but they are the worst on the day because of MS. Nvidia is now selling off. 169. Nvidia's already down 2.5. Netflix, another low. What am I doing? What? Oh, I don't have the Netflix shares. I thought I was down 200 on 5 shares. I said, how is that even possible? I'm down $20 on those though. Bye bye, Miss Americans. Bye. This is bye. No. Okay. Then you have like $1. You have $1 to $8 to sell off here. Again, I tried to buy the run up on Procter & Gamble yesterday, and you guys saw that one turned out. So that's what I'm worried about, but we'll see. And PG's actually going up now. So this is great, but we're still down. NQ dying. It really is. Yeah, NQ's down 0.9. Shit. So really, as we just stayed steady right here, the NASDAQ has just dropped another quarter. Again, you have not broken below 3,900. 3,900 takes you to 3,890. And then if you can't hold 3,890, you're going to 3,860, which is pretty much where you almost started this rally. I don't want to say it, but it would take you 3,860 would be like right around here, I think. Give or take. Nvidia down 3. I know that one looks decent for the downside, but you're already deep in the hole if you go in late. These levels are arbitrary and self-fulfilling. I treat these levels like comps in real estate. You just know what sold for what on that day. So most of the levels that we have up here, you'll notice these are all just like the DMAs. Like this is where 3960 is, but these are all price levels where the market was. That was the price of that day. That's how I view it. So when you hit this high or you hit this close or you know what I'm saying, something of that nature, it's giving you an idea of the prices in that neighborhood on that in this recent time frame. That's why, you know, it's kind of technical, but it's also just very elementary, but it gives you an idea of how things are trading. I think VWAP has more of an algo influence than not. Bowen low. There's Netflix 318. Damn. Shit. All right, I bought 5 more shares of Netflix at $39.19.10. So now we have 10 shares of Netflix. Let's see, and then I'll buy the next low. I'm going to go 5 shares at a time till we can flip it. Martingale. Wouldn't Martingale mean I double it? So I would have bought 10 instead of 5. But I want to see, again, with 5 shares, we have a little bit more flexibility. I was down $20. So now if it does another 2%, we'll be down another 21. Is this greedy, Josh? Yeah, I'm getting mad greedy with my 5 shares. You know what I'm saying? My average cost, I don't know, is like $324 or a little higher. Remember, we just bought this one yesterday. You got to watch the watch list. But now I'm at $321.50 on 10 shares. IEF near open. It's coming back down here too. UAO clobbed. Amazon, JPM's on the high. That one's interesting. I think I played things too slow. I don't really think about that. As long as I have a general idea, that's all I kind of look for. I mean, sometimes my timing is really amazing. Sometimes it's awful, but I think it's more balanced control, balanced strategy, and then, I mean, it's keeping us alive. That's the best thing. So whatever I did, it got me through 2022, left me with a lot of good long-term plays. Trading account did fire. So I think whatever, I'm just trying to stay away from my options because those killed me by death of 1,000 cuts. And as long as I have the general idea and we could take away some profits, is money. And then God willing, above all. Out here on the short, take it, bro. Take it. The greedy short. Again, this is a big level. We were below it. So if we drop below that, it flushes. If not, we go from there. Inshallah, Habibi. Oh, thank you, Cheros. I appreciate you. XLB, I forgot we grabbed that one. Procter. Phase is down to $1. Damn. That's crazy. All right, you're going lower. How do you short Ethereum? Honestly, bro, you need a real good relationship with the Lord or whatever you believe in because it'll test you. I don't know. I feel like, are you sure? I don't even think, again, it's like I got to give you a Johnny Knoxville intro to teach you how to short Ethereum. But, I mean, hey, if it does, it's actually way more stable than anything today. I'm surprised. If you told me from last night till this morning, bonds would be down and Ethereum would be up, I'd be like, nah, bro. Yeah, the defenses. That's why the materials, I want to go for the Dow, but it's already bad. We're getting back down to 1% now. I think you're near the top end of the jobless claims candle. You're getting there, so we'll find out. Yeah, but the yen is I'm happy with the yen, man. Happy with the yen. KuCoin, yeah. I just, like I said yesterday, anything that sounds like cuck coin, I would stay away from it. So just be careful. Because my problem, it's just we could have shorted FTT, but then it would have been on FTX, so it would have been weird or anything else. So just be careful. We're talking about the futures, but even then, you have micro, like the Ethereum micros are tiny, and like they don't really pay you enough, I don't think. But if you the only way to really like get some good shorts on it is it's so much money. It's gonna cost you, like I think like $1,000 every 1% Ethereum moves. So Amazon kind of bounced in. SPY, little bounce there right at 3,900. So a little bit lower. 3,899 is your low of the day. Apple's coming straight up. My bond technical analysis is not, and I just shout out to the ones who've been watching here because, I brought up this bond level for years, but especially since middle of last year. I'm using like a 25-year just breaking point at 3.25. That's the next level on the 10-year. So that's right where almost you went just around that level, just below that level in 2018. 3.25, bro. Like when you take a look over 2011, 2010, 2009, this is where 2008 broke. And even then, just slightly above there where we're kind of at now. This was also the low of bonds in 2003. And again, that didn't break till 2008. So it's very, very good. High volatility is a feature, not a bug of the China trade. Long way to go. I don't think. Well, we said you didn't miss the bottom, but even then, I think this is humbling everybody, and it kind of shows you that we're not out of this crazy volatility year. You know what I'm saying? But at the same time, I just don't think the party is started. It could still get started, or it could still end. And we do have enough events approaching that will give us all of that. So let's see what happens. That's why I think go about it with respecting the market, and a lot of what you see, nothing's permanent. I think that's the best way to explain anything. Is just literally nothing is permanent in this market until we have some sort of data or info that actually is permanent, more or less. Down 7%. We're down in the last, not down 7, but this was the biggest drop since, I believe, December 15th. So right here, this was the biggest drop since then. You haven't moved anywhere of that size since around here. And sure enough, you're at the exact same level. And then this is also where we broke down various points throughout last year. Am I bullish on Netflix? I'm kind of in the middle. I mean, I'm in these 10 shares. I don't think 10 shares is going to hurt or kill me. I'm going to just look to flip it all day today. But more so, I don't know what's going to happen. I think they can be bullish, but also bearish. But I think they're at the right price no matter what. So in a weird way, I don't even think this earnings matters as much. Because if they do bad, they're just going to get back to these levels and, we're there. But I'm long-term bullish on Netflix. But I don't know if I would necessarily buy this earnings, hoping for something. But I do think it could be very telling for the rest of the market. Do you feel growth names are even going to grow this year? Some will. But right now it seems like, again, like we even brought it up at the beginning of the year, it seems like currency and bonds are the real money this year for now. We're going to find out, and then growth might just come from emerging markets. But really how it's going to play out, you'll get growth. I don't know if you'll get fundamental growth, but if you want your stocks to grow, it's buying the right growth names when they dump. And that is how you could walk away decent, even if it is a bad year. So that's kind of what I'm waiting for. So I'm not going to shy away from growth, but like I've been telling you, I told you it 2 days ago when we were a couple percent higher, I'm not going to buy into these highs. You know what I'm saying? There's 0 point to do it. So, I think if you get the right pickups, then that's it. But as growth, stock picking will be very crucial coming into this one. Yeah, we are going to see the ads on Netflix. That's what will be very important for them. Okay, Amazon coming back. Even Netflix gave that one up. I feel like everyone got the wrong timeline about the market going up this year or next year when it's really a lifetime game. Low prices is a blessing. I feel you. I feel you. That's why I own something, and it's just really just take it 1 year at a time. But, it's 1 year. We look at it yearly in terms of like trading and other things, but I agree with you completely. Google I'm not bullish. Google still has premium compared to stocks that are still up. So I've showed this a couple of different times. Just like you take a look, Google is still actually holding it. I guess they're now back to 2020 levels, but even then I know they ripped coming into that. So they still have a little bit more premium than other names. And Apple, they still got a lot of premium that they're holding. And then Microsoft is the one with a ton of premium as well. So those are the ones I want to wait on. But it's like there's still compression that could happen. I mean, stocks after the last year drop, pretty much it was like stocks dropped like 50%, right? On some growth names. And the overall S&P dropped 19% 2022. The weird part is, even after that drop, it brought things back to their historical average. It didn't make them cheaper. So your S&P was still trading 17, 19 times earnings even after dropping 19% in a year, right? Same thing if you go look at some of these names, they didn't get cheaper. They just came back to what would have been considered an average price or a good average forward-looking price. So it's like if you were looking for a deep discount, you didn't really get it. All you got was you didn't pay the higher premium anymore, but there is still some premium baked into every single stock in the world right now, unless it absolutely got, murked 95% like some names did. Like that's why I think like Redfin, like that one just doesn't apply. But even then, they don't even have EPS. They don't have profitable growth, right? So that's why this year is so crucial. You know what I'm saying? Is because wherever it goes from here now, it's like if we go down another 10, 20%, now we're talking discounts. But then again, we'll see what happens with the EPSs, and that's why this earnings season is so important, because then people are going to, we're going to find out if it really compressed or not. So, but it's like if things go up again, before you know it, 1 year if we just go up 5% this year, 7% this year, a very average year, and after recovering, stocks will still be borderline expensive. Depending on which ones you're looking at. Plenty of stocks with PEs below 5. Yeah, the individual ones and that, you got to compare it to the industry, but we're talking just even like the overall, the average right now, the S&P, the NASDAQ 100, the Dow Jones. If you take them all there as a base sign of historical averages of price to earnings or forward PE, they're not at a deep discount. You just got that. You're getting the average now, as opposed to, which was crazy because we were paying a lot more for that in 2021. Even at the top of 2022, I mean, even halfway of 2022, stocks were still, very, very expensive, even when we were down 10% on the S&P. Yellen says Treasury began extraordinary measures on debt limits on Thursday. FIS Coinbase on the high. Coin is positive again. FIS on the high too. Good call. Oh yeah, FIS popping. Fidelity. Wait, didn't they have earnings though today? They got a price target. No, there's somebody who did. I think that was State Farm. There's like some old thing on acquisition, but it's not new. Yeah, FIS is doing good. Amazon, I still think Amazon's expensive comparatively to where it was a couple weeks ago. MS is moving up, or Goldman Sachs. But you could think about earnings. I mean, if you're going for calls, if you are going to be playing options right now, I would legitimately just be trying to flip earnings premium. That's it. Like, I wouldn't try to guess the earnings. You might get lucky if you can make a couple of free, but if you really want to be smart right now, take advantage of every mother effer that's going to rush into options in a week from now, 2 weeks from now. But your only risk is a big run up or drop that will skew the premium. So I think if you scale in appropriately, I would just take advantage of the earnings premium. But so it's like, I think Amazon's really, really high, but if you could get it right now, it's like it could come down a little bit more, but if it bounces from here into next week and we don't die, that earnings premium is just going to double because of earnings. But then you could also lose 50 to 70% if you take one drop and then you set up earnings from here. Your first set is going to be off. So just balance that out, but I would go for earnings premium strategy. That's what I would be doing with the options. I wouldn't necessarily be like, yeah, I think I'm going to buy this for the earnings, and I think Amazon or Netflix is going to do good. It's like, nah, just flip the IV right now as people are, because if the things get bad, people are going to want puts. If things get good, people are going to want calls on all the big names. And then just how hyped up this earnings season is going to be, there should be that opportunity. So we brought that up on the watch list there with Netflix. I'd flip the premiums. I think you got an opportunity, calls and puts. I'm going to just be going with small shares, and I'm just going to go back and forth. But, you do definitely have some sort of opportunity in terms of that. But it is risky. You've seen me do it many times if you've watched our earnings strategies, but it's not a guaranteed where you win, but I think you have better odds than not coming into earnings. But not a recommendation. You will get clapped. You are blessed. Tesla. I said their name out loud. I don't know how that's going to play out. MasterCard on the high. I should have bought DFS at the bottom. I missed out on that one. I was looking at it. I contemplated it. I said, nah, I'll wait. Netflix is fighting. SPY's back above VWAP. So not too bad. That's 39.09. I think, remember, 39.10 leading to 39.12. These numbers should sound very familiar from 3 weeks ago. FIS takeover interest. Yeah, I saw a delayed one. I saw an old one, but I didn't think that was going to be recent. But that's a big pop. They went negative to positive, and they're holding their earnings level. Fidelity. The Yellen news. I mean, I think, again, you're going to hear the debt ceiling stuff here and there. I don't think it's going to have an effect unless it gets really bad. But then if it gets really bad, we should have a clear indicator. So we'll find out, but that's really all it comes down to. Is just wait till it gets awful. Meta, I know Meta hates us. I was positive for like 10 minutes in the morning. Now just so that could even be part of the earnings run up too. Yeah, Meta and Google. HD new lows. Dow is still only down 0.4 though. Nasdaq is the one underperforming. Or Nasdaq is, and then Nasdaq's the one outperforming to the downside. Test it. I guess if Meta could go up, that's fine. Purple on the move. Didn't they have buyout interest not too long ago? Coin on the high again. MasterCard, DFS. I'm mad I missed out on that one. Where's Alcoa? They're still down. PG still chilling. All right, hear me out. Save a dime of every dollar that you... Oh, man, don't get me started. Hey, I agree, dude. Oh, I agree. I realized it, though, yesterday. I was like, when people get mad that I bring up the 10%, they're like, you still talking about it? But it's like good because I'm like the angel on your shoulder. Don't worry, I'm not that, like, I don't think I'm an angel. I think I'm an asshole. But at the end of the day, it's like someone telling you to clean your room all the time. So I feel you. Some of you guys are like, thank you. And some of you are like, shut up. Shut up. I get it, but you got to clean your room, dog. 10%. Save it. Dime of every dollar that you get. Get some deals with that drip. Pass that to your kids. Just imagine if you had some discipline. A panel of judges in California ruled on Wednesday that operating a marijuana business is considered a crime. That prevented a California licensed cannabis grower from suing her former boss for participating in a fraudulent scheme. Interesting. I thought Cali is chill with that. About Airbnb. So a little bit of a flip here, but the outperformers are doing their thing. Like Meta and Google, they're still going. I don't know, where's Tesla? Tesla's at least green. HBI's still good. Yeah, HBI is great. But like I said, just like I told you guys, I told you not even to buy any of these highs. You know what I'm saying? Just like when it's all said and done, don't buy, if we have any picks that go up and they're killing it, don't buy into the highs. And this is just exactly what I've been talking about over the last couple of days. So, I know there's both sides. There's still a little bit of upside in there, and the party could get started. And there's a lot of good names, but this is what we expected. So, my thoughts on these companies are not changing, based on these movements. But, if you're willing to be a little patient and not be the greater fool and pay higher prices for no reason, you're gonna get a good price. You know what I'm saying? So do your thing on there, but my attitudes for almost everything don't really change unless there's actually new information to justify a higher or lower price. Yeah, those candles just hit real big on the downside. You're back to 3,900. That's a big rejection. 10 points. You're now below the level. What time is it? 7:15 almost? Jeez. Credit spreads. I think now is a great time to do credit spreads. I mean, again, if I'm not trading these options, I mean, the premiums are super high. I think credit spreads are in your advantage. The reason why I'm not doing them and going for shares is I'd rather have more of an upside, or that's why I'm even doing futures as well too. So I just don't want to be limited in a market where I think we're on the cusp of a real big dynamic shift up or down, So but I think credit spreads is a perfect season to do it. Is it your best alternative? That's what you're going to have to decide for yourself, but that's about it. FIS again? Yeah. Oh, wow. 3, that's it. That's the takeover interest. Again, nothing else. I see just only Benzinga. But takeover approach, that one's still running. And bonds are still dancing, but I mean, we're down 1% with the bonds only down 0.19. Bonds either need to get smashed or they're going to have to, maybe the market comes up with it. People buying into the hype. It's just it's like a mentality we all have. It's just like we think it's good when the price is going up, and then when the price is going down, we think it's bad. You know what I'm saying? It's just simple lot. It's just so human of all of us. And that's why, just be mindful, especially if you're adding to the long term, or again, some of these names like Redfin, HBI, you got to think about it. What is the difference? When we bought Redfin at $3, what was the difference between $3 and $5? Like, what really changed? Like, that's like just because it was dropping, I bought it on the day that they downgraded it and said, no, this company's awful. And I said, well, no, it's just this. I mean, I was like, hey, it's going down. I was like, that's a great price for Redfin. But you have to really like think about it when it's all said and done. Nothing has changed. There's not any real thing. But that's the wildness of the market we deal with because, there's a lot of sentiment and people get it moving up, So just like price going up doesn't mean it's good. Price going down doesn't mean it's bad. And if you could kind of get away from that mentality, I think you'll be good. My thesis with HBI when we bought it at $5, it was a great dividend stock that will be here for 10 years. And their payout ratio has never gone above 50%. And that was it. I just said I thought it was a shitty stock, but I said at that price, it's a good deal because I'm getting 10.5% yield. And it's not going to go away in the next 10 years. I could guarantee that, just because it's been around for so long. Their financials aren't that bad, That's it. But there's no difference. The only difference between $5 and $8 was that the price now was too high. I don't get as much yield. And I wasn't a buyer at $8. I like the neighborhood, but the price is a little too high. Now, damn, they're up 3.4. What changed? About 40%. Yeah, that too. Yeah, but like nothing really changed though. That's why I'm saying. That's why I was telling y'all, hey man, we got the play. It did great. I love it. It's awesome if you got it there, but I don't want you being the Chad who's buying into our plays after they go up 30, 40%. Again, we got there without y'all. You know what I'm saying? We're not here to pump anything. It's like, and even in general, I want you to get a good price because if you buy in too high, you get clapped. There's your bounce out of nowhere. Are we getting anything? Nope. There's no economic data too. That was literally, you just unwound that other 10-point downtrend. I think even Netflix starting to go up here. A lot of things just took a bounce. Chop City. All right. Watch if this extends. I'm keeping my eye on news. I don't see anything, though. But it just literally reversing that other quick 10-point drop. Everything just popped. Yeah. Google, baby. Everything went up. Well, let's see if it lasts. Otherwise, you guys don't remember. We've been doing this for the last couple of days where we're making all of these moves in the first 30 minutes, hour, and like you're right at the open. So some names are outperforming, some are underperforming, but like we haven't done anything. And that's because again, that's how that other day started with yesterday, literally after the Bullard and Powell. It was 7:30 was right. That's it. Everything changed. SEC charges Samuel Bankman-Fried with defrauding investors in crypto asset trading platform FTX. I thought so. They charged him with Alameda. I don't know. What does that mean? He's like, sorry. Well, that's just coming out now. Wasn't he already charged with? I don't know. That's why I'm like, what? Sorry. Bro, I'm telling you, Usain Bolt got scammed. Usain Bolt was like the second level of getting scammed. I feel like whoever was managing Usain Bolt's money got scammed on FTX. Microsoft sides with Google in Supreme Court case. What's this? Is this antitrust? That's coming out right now, too. It's full 10, bro. It's full 10. SEC charges Bankman. I bet you with how, like, I bet you, like they say they charged him. I bet you they gave him like a charge card. That's what they mean. They're like, we charged Sam Bankman and gave him $5 billion to make his wrongs right. Sorry. What? That's not. I thought. Man. Sorry. Yeah, ETH is killing it there today. Hurts my soul. But I'm proud of y'all. I hope y'all did good on ETH. Y'all should go buy a Lamborghini with your ETH 30% higher. Just in case it goes down. Take advantage of a strong currency. Big sales coming. I think we're just going to move at 7:30. We'll see. Compare this to yesterday. We're either going to rip or dump at 7:30 and see what happens. Boom. And then again, we got Netflix earnings. I'm excited for earnings, bro. I don't know why. I love earnings. Y'all remember the OGs remember. We would go on Netflix earnings when there'd be like 50 people in here. A Netflix earnings is like a tradition, guys. I don't know if you know. This is like the first day of Hanukkah, I guess. This earnings is like more than one day. It's like the first or like 10 days of Christmas. I don't know what you believe in or celebrate, but this is a holiday, man. This is a holiday. Netflix earnings is big, man. Tesla flip. Oh, switch gears. I don't even think a Tesla have gears, but it's switched. XLE popper. I got XLB. The only thing in the real estate's in the green by 0.5%. Energy 0.07 green. Healthcare 0.05. Communications 0.03. Then financials, discretionaries, and industrials are out. Or those are deep red. Oh, good guy. And then SPY's even kind of coming, dude. This is drop 10 points in 3 minutes, rise 10 points in 1 minute, and now you're like in between both of them 4 minutes later. Yen climbing a little bit. It was up a little bit more earlier. Netflix now real estate. O's at least coming down. I look at O for real estate, but there's also what is it? Not XLR. It's XL something. Not XLS. XLT. What is real estate? I think it's XLR. XLRE. No, it's up 0.4. That's the best performer on the day. But XLRE looks a lot like O. I think O does a little bit better. VNQ I think is one too. China Financial Minister Qin Gang speaks with Iran counterparts over the phone. All right, coming back down again. 7:24, 6 minutes till the first hour. Back to 39.02. What's the volume looking like? 15 million actually. Damn. I guess it's almost been an hour. That's great. We've spent an hour dancing around now with a slight down tilt after big 10-minute cash rip. And then you're like borderline slightly above the data level. And then right where the futures ended and opened yesterday. Look at that. That's where you are. technically you've been here from like 7 p.m. till now, which is crazy. If you really think we haven't done anything. Markets, I think this is kind of that earnings mode for you, unless we get some more development. And remember, at like 1 p.m., I believe, Eastern, in like an hour and a half, 2.5 hours, we are going to get, what's his name? You're going to get, what's her name? Bullard, I think. Or not Bullard, Brainerd. Yeah, at 1:05, you get Brainerd. We ain't going nowhere. We ain't going nowhere. They won't stop rate hikes because it's power for life. We ain't going nowhere. We ain't going nowhere. Nothing but rate hikes. Check the hit list. I'm going to get this. 5% to my name. It's still there. You rocking with the best. Don't worry if I hike rates. I hike rate cuts. Okay. Sorry. Please stop, sir. You have not contributed enough to tell me that. You know, you can't tell me that. I'm just saying, though. You know what I'm saying? Like, that's all. You know what I'm saying? Because you got a lot. You spam a lot of random shit. You going to get mad at me singing some old Puff Daddy? Come on, bro. You didn't even like the video. I see it. It says, Askia did not like the video. What are you doing, man? Why'd you do that, bro? Come on. You can't have that much negativity in your heart. I love you, bro. I rebuke it, man. I do. He is tied to currency. Yeah, currency and bonds. 100%. Thank you for the stream. Thank you, man. I'm hyped up. If you could tell, I'm excited today. That's why. So, you know, that's why you've been getting a little bit of clapback a little bit. But I just want y'all to like the video. That's all. I'm glad you're here. And make sure you subscribe if you haven't. You know what I'm saying? That's all. It's a beautiful day. I feel glorious. I hope you feel glorious. That's why. Let's go. And I hope all of you are really prepared. And I hope this year, you know, let's bring it home, Chad. Let's bring it home. H shares with you. What are you looking for? I'm looking for it to run up a little bit. We just went positive on the Nflx, and then I'm looking to short it again and then buy it again. That would be the best idea. So pretty much when I'm ready to sell it and we get profits, I would look to sell it. Yeah, no, today is a very, you are legitimately at the same price as where like 5 p.m. Pacific time, which is crazy. Love you all. God bless you, Moses. 28 months. Let's go, Habibi. What's up, JB? Save that 10%. Oh, the OGs came to tell you. They came to tell you. Bonds are dumping now, so this is going to get interesting, but bonds have a little bit more to catch up, and then we'll see if they match up and then go from there. Helping you through some dark times. Let's go, man. Colt is here for you, and let's get it, man, because you remember, whatever comes out the fire is gold, baby. Let's go. You know that. They could throw us in the furnace. We coming out. That's it. God willing. And even if we don't come out, that's because we weren't supposed to. They don't feel me, bro. I was reading Daniel 3 yesterday again. So they don't. So let's go, baby. We ain't. Well, yeah, that's a good song, man. That's a good song. Amor Fati. Pressure makes diamonds. Tell them. IEF 0.25. Yen slipping. I think yen and bonds are kind of more in line than not. Natural gas stockpiles fell 82 BCF last week. Estimate was negative 76. So that's a first bullish sign a little bit for them. So I guess a little less storage. That's the first decline I've seen in like 2 months. But then again, it usually will pop and drop off of that. Debt ceiling aversion. I really don't think anybody is pricing it in too much. So like I've heard more people talk about the yen and the bonds and all of that, where it just, I think the debt ceiling, it just every single year it loses its potency. And it just, again, if anybody would trip on the debt ceiling, it's usually me. And I just think at this point, maybe the time I don't trip on it is the time it happens. But I don't think there's that much, I just think it's a real non-event unless it like absolutely explodes and turns into a much bigger problem. Planet Bear Cave report. Planet Fitness. I don't know. I like Bradley. I was going to say Planet Fitness, but it's Bradley Frizzle in the Peach. Oh, my gosh. Ladies and gentlemen, boys and girls, Peach Nation, it has arrived. You better stand up. Stand up. I want you to stand up. Get out of your... Let's go. Nah. I'm standing up, bro. Peach Nation, stand up. I'm standing up. I'm up. I'm up right now. I'm standing up for Peach Nation. Oh, man, Chad. Yeah, you better stand up for Peach Nation. That's great. Oh, my gosh. Bro, the legend is alive and well. It's alive and well. Oh, stand up. Let's go. I stood up, bro. I had to. I couldn't sit down for that. Oh, my gosh. Thank you. I'm standing. I'm not anymore. I sat back down. You know what I'm saying? I had to just, that was a round of applause, a standing ovation. Am I high right now? No, I'm still down on a lot of different plays. I mean, my bonds and yen went a little higher, but, you know, I got sobered up with the Ethereum to the downside. That's good, though. That's a good sign. Thank you for asking me that question. That means we bring in an extra level of energy today. I see. Y'all do drugs. I do futures. Fuck out of here. I'm telling you, bro, go short Ethereum. Yeah, you think you started seeing shit with mushrooms? Yeah. Yeah, sure. Okay, whatever. Go short a full Ethereum contract and then tell me what you see. Yeah, you're like, oh, I had a real eye-opening experience. You want to know the meaning of life? Yeah, go buy 2 NQs and then tell me. Go buy 2 NQs on the day of Powell and then tell me what you see in life. Oh, yeah, you're like, I don't feel anything. I'm numb. Oh, yeah? They don't feel me, bro. They don't feel me. I'm crying. You know it's true. You know it's true. That's it. I don't need to... I've seen a lot, bro. I've seen everybody through this. I know my heart gets pumping. It's great. It's great. Getting nervous. MenQ, I forgot about that. The short contract is strong, bro. It hits. The debt ceiling has caused an issue in 2011, but then they fired everybody. So in 2011, we had an issue with the debt ceiling. This was like during Obama, and it was like very political. They hated Obama, right? So they were like, screw you, Obama. We don't want to support Obama. Thanks, Obama. And then they didn't want to hook up Obama in any way, shape, or form. And then they played the game of chicken between we're not going to vote, we're not going to raise it, right? And then after a couple of months of doing that, it was like getting really, really close to the deadline, and things were like getting really, really bad in that sense. And then all of a sudden, the S&P 5, or the S&P credit agency, they downgraded American debt for the first time. So, America was, AAA rated, and I think they gave it, I don't know what they dropped it to. It was just a small downgrade, but they downgraded American credit for the first time ever on this. They said with government fractions, they're saying that they couldn't get a deal and they're saying it wasn't looking good, and they say this lowers the credit rating of the United States. It wasn't a default, but it was a downgrade on American credit. And when they did that, the stock market dropped 10, 15%. And then they freaked out, and then they agreed to a deal, but then they fired the head of the S&P. Like, it was a big deal. Like, that, like, legitimately, like, even from then till now, especially with, like, seeing how they've managed things, I don't know if we'll ever see that again. Yes, and I have the same exact talk every year this happens. Every single year somebody asks, and every single year I bring this up because it's literally, it's possible, but it's not probable. And ever since that event, I don't think you will ever witness that happen again. Just because they were so mad at the end. They said, why would you do this? Like, everybody was like, why would you think this was okay? And I don't think they would ever allow. And right now, like, bro, everybody, like, do you think a credit agent, like, I feel like the government relationship and business and corporate relationships are so cozy nowadays. I don't think you'll ever see that happen. So that would be the only way we actually get clapped. But then if you actually, the real ultimate death blow would be if there was a true default on credit. If they can't raise the debt ceiling and the United States cannot meet their obligations, it would be the first time the government of the United States was never able to pay a bond, and then you would enter a default period. It would be like Evergrande, but like Treasury Grand. You know what I'm saying? So it'd be quite crazy. So the market gets scared, but until it has to get a lot worse for the market to really get scared. You need an action. That's it. Talking about it, the voting, until somebody has to move. You need a downgrade or a true vote that would lead to an actual payment being missed. That's all. Shouldn't they be independent? Why would they get pissed at the guy for doing that? Back then, that was the question, and it made more sense back then. But nowadays, just don't forget they forced you to do a lot of things last year that had a relationship between businesses and government. So it's not that's why it's like now I maybe I understand it a little better, but like back then, 2010, 2011, the government and corporations, they've always had a connection, but it wasn't as strong as what it is. The government works with damn Twitter, Facebook, and all of these companies. So it's like that's why they got mad at the person, because they're saying, hey, you're supposed to support, like I thought we were helping each other out. You know what I'm saying? Why would you make the situation difficult for us? Because that indeed, it forced everybody to act after this. You got a really irreversible action of downgrading credit. It is reversible, but it was just a bad look. And then it led to just a massive drop in financial markets, especially post-recovery. Yeah, Netflix is coming up. Win is running. And then Meta and Google, they're on the high. Win is actually killing it. Yalla Netflix, yalla. Gold. They all had calls back then. They didn't trade calls back then as much. That's the thing. People thought you were crazy if you traded options. They all just had millions of dollars of shares. maybe some futures too and bonds, but it just hurt America that day. Like, that's it. The debt ceiling, that was the first time. And again, we haven't seen anything like that in 12, 13 years now, where you've seen American credit actually get a downgrade. That just doesn't happen. If Netflix loses earnings, we're doomed. No. Not on your long term. If Netflix goes down 20%, we will still be up 17%. That's the beauty of it. So, and then if it moves 10% as expected, we will still be up 27% or something like that. And then some of the travel names are starting to run. And then if it goes up, I mean, that's it. Your Netflix position in the long term is about to rally. If they have good earnings and good guidance, I mean, I think we're looking 360, 370, which is where it was earlier, which, I mean, again, this is a very high price, I think. But you have to think about it. Netflix is down 36% right now, year over year, compared to the S&P, which is now down like 13 or 14. So, but then again, if it drops, it'll go to 300 first. If it can't hold 300, it'll go back to like 270, 260. But again, considering our averages here, you should be good on the long term. And then we're going to flip out of our shares here by the end of today. Yeah, Google and Meta both nice. Watch any of the travel plays if they start coming up. Bonds caught a bit after hitting the low, but I would like to see things more matched up. Again, you're getting one of these days where everything's selling off. Even value names are underperformers. They're doing a little better today, but it's like people are selling and buying bonds, but I do think there's more in line here. A warrant is just like an option. But honestly, I wouldn't really deal with them. So, you could Investopedia if you'd like, but it's just like an option on shares. But for the most part, I don't like, you could flip the warrants and make some money, but overall, I don't think that'll really just be the most optimal thing for people. But you could just, Investopedia has a great explanation and just view it as an option. Bank of America CEO says consumer is very resilient. Very resilient consume. Where was December 15th? Morgan Stanley still kind of clapped. Yeah, Meta and Google are ripping. Am I selling ones in the long term? No. I'm holding the Netflix in the long term. I mean, we stole it. I mean, at the end of the day, we stole it, and I do like Netflix. I use it every day. I'm a big Netflix fan, and it sucks because everyone's like, how do you support this? The stock is over. It's going to be like MySpace. But I just, it's something I've genuinely used for a long time. I even have it in my big portfolio. I've invested in Netflix since like 2015, 2014. But, it's good. I think our average on the portfolio is like 230 on Netflix. 230 or 260, I'm not too sure. I think I've watched almost everything on Netflix or anything that's at least good. Use Google every day. Yeah, I love Google too. I mean, if Google didn't have such a premium, I would buy it. Again, I bought Netflix in 2014, 2015. I also have old Google shares from back in the day. But I have a sizable Netflix position from back in the day. And literally, I didn't buy it for 5 years. It's like more longer. I waited until it came down. So like I even got pre-split shares and like I got split on there. So like, I'm around here on Netflix, like with a decent amount. And then I waited until right around this level where it went back 5-6 years in time. And then I picked it up. So, give me Google at 2015, 2016 prices, dude. Give me low 2018 prices. I'll buy it. But, to add it to our long term, it's just all about the patience there. But, if Google came back down to these prices or even like around here, I wouldn't hesitate to buy it. You know what I'm saying? So I do think it does have premium. You're still coming down. A lot of those tech names, even the Netflix coming down a little bit. Materials are still selling off. Yeah, you never have to sell on the long term. Amen, man. I mean, I showed you guys yesterday. That's just, dude, 3 years of that account, the only sell transactions have been covered calls, which we need to start doing. It sucks that we had this drop, but, you know, I'll be a little patient. The long term, I want Altria if they keep dying. And then, you know, just keeping my cash balance ready for any other big drops. Where's Netflix? Yeah, we're in 237 on Netflix on the big account. And then on the small account, we're at 218 on Netflix. So, again, I mean, we're technically around $100 per share of gain. So that's why it's like if they move $10 per share, it'll suck. But, you know, I think there's no reason to sell out of that. And then even then, if Netflix has another 50% down year, we'll be around break even or like down 5-10%. And then I would probably scoop up some more. XLB just gapped down. Everything. There's their new low. Again, be careful of this level here. 3892. 3890 is the level, and then we'll see. I think Jerome is sick. We haven't had anything else on him. Alec Baldwin expected to be charged with involuntary manslaughter. FTX has discovered new wallets in the last week, CEO John Ray says. Says customers are hurt by misinformation from co-founder Sam Bankman. Carol Ellisine and Gary Wang helped his team find assets. Wall Street Journal exclusive right now. Help you understand patience. Amen, man. And we're just getting started. You know, 3 years is nothing. You know what I'm saying? And that's why I really hope people have realized that. And it's just like, you know, we're here every day. That's the part that sucks is like I'm talking 7 hours a day. We're looking at every single micro move that happens. But, you know, when you take a step back, you realize what the long term is really doing. And hopefully you see it at this point. And you know, I truly believe a lot of people who have followed along and are sticking with this long-term strategy while at the same time, you know, and managing everything else. I firmly believe, you know, God willing, you're going to outperform a shit ton of people. And like literally a lot of your peers, a lot of people who just started trading in the last couple of years. Like, again, I really think we are going to see some very beautiful long-term success here. And you're gonna realize why I talk how I do. You're gonna realize how I've been afforded the opportunities that I had, and you're gonna see it firsthand, just because it's there. It's obvious. You know what I'm saying? Especially after going through one of the worst years in history. You know, we're ready to go, man. And so that patience is very key, and just that's why I'm saying I hope none of you cheat yourself on the, you know, getting caught up in the short term too much and missing out what the market really provides. And, you know, don't get so emotional with everything. If you really know what you are, like, go with what you know and not with how you feel. The market is going to be here for a long time, you know, and if it's not, then we're dead anyways. But it's just like you're going to have your opportunities with that. If I had everything in cash right now, I would move little by little. I would space it out. So I would take the amount, divide it by 12 to 24 months. I'd start with like 10-20% down payment and then go monthly and then start adding to it. But I wouldn't throw it all in at once. There's an eventual exit strategy. It can't go up forever. Well, the eventual strategy would be to live off of it. That's it. The eventual strategy 10, 20, 30 years from now would be to be getting enough dividends where it could give you monthly income, or your positions balloon to enough size where that will be your house. That will be your down payment. If you need $50,000 here, $100,000 here, you know, that would be the general idea of it. It's supposed to be your savings account on crack. And that's really what it is. That's at least what I believe. Bank of America sees 85% of wealth management clients using digital. Monahan says demand for small business loans is still strong. drip income estimators set out at 25 years are nutty. And just imagine if you get to live through an opportunity where you could scoop up yields even higher than today, right? And imagine now and then some of these stocks go crazy. I mean, you've already seen, you're only 3 years in on Abivi. Just imagine what happens in 20 years, but it's like, that's the idea. It's like it will get, at the very least, hopefully we're getting a lot of income, but at the end of the day, your equity valuations, it could do a crazy thing. So you're coming down again, 38.90, Chad. Or I guess it looks like, I thought we were lower. You're 38.94. The low is 2 points below it. Airbnb solidly below 100. 98. Let them keep going. See, but I think Roblo is the problem I have with Airbnb. And what I'm talking about is the analysts and how Wall Street treats these names. You got to realize Roblo just gave good data and they were like, yeah, we just killed it. We're doing good. And then it dropped, this amount based off of them saying, well, yeah, we're worried about next quarter. So that's what they did with Airbnb every quarter. And even though Airbnb would do better every quarter, it would still remember I had this talk with you the other day. So that's why let's just wait for prices to come down and let's do our thing. We are going to get the divvy from Procter & Gamble, but we're slightly clapped on it for now. Surprisingly stable, though. Imagine what cost of living is going to be in 25 years, though. And now imagine if you don't have a long-term NOR property to rise with it. So it'll be a lot of money in 25 years. I'm sure prices will be a lot higher too, but if you don't have it, your life will be noticeably different. That's why get the long-term. Yallah. Throw a property in there too. And remember, if you can't afford a property, you can always find a good deal. And people will give you money for it. Netflix, we have a lot of feelings towards it. I'm in a play to flip right now, but when it's all said and done, we got to be on the lookout for, it could pretty much go both ways, but I think it's going to stay within that 10% range, and it's all about guidance, and then updates to the ad tier will be the most important. They may actually kill the subscribers numbers now that I think about it. Just because if they end up, if they count the ad tier as paid subscribers and they sign up if they signed up 1 million, 2 million people naturally, and then the ad tier adds more, then there you go. So now bonds are rising back up as we're hitting a new low. Did anybody buy the ad tier? I didn't buy it, but I'm thinking they're gonna just pad the stats with that number. Because then if they think about if they bunch it in the same category, they're going to say we added this many ad tier, but then they're going to say total paid subscribers. That will technically count as a paid subscriber. So if that ended up doing better than estimates, then that's it. I know, I think ads on streaming is weird, but hey, good for you, Netflix. Mobile home parks are fire if you could find one. They usually have a high premium. Yeah, and I wouldn't buy a mobile home. I would buy a mobile home park. And if you are going to buy a mobile home, make sure you own the land. Oh, there you go, Procter, Dr. Gamble. Airbnb on the low, Netflix selling. I think Microsoft too now. Again, Microsoft has earnings next week. Amazon's down 2. Apple down 1. Tesla down 2 again now. No. Okay, a little bit of a flush there. This has to be 38.90 now. Yeah, 38.90. Next, there's a soft level at 38.80. But I believe the 100-day moving average now is at 38.68. So you could have borderline 20 points from here. Or 12. Or no, 22. Zero day to the long term. All right, I'm going to time you out. Next one's a ban. Don't play with my long term, dog. Don't play with that. Don't play with that. I'm very sensitive towards it. You know what I'm saying? I love you. I love you, but I'm very sensitive towards it. You know what I'm saying? Amen. Amen. Save 10%. I did not sell the 10% or the 10 Netflix shares. I should have. I had my gains. If I sold my profit and went short, it would have been beautiful. Don't lead the flock astray. Yeah, man. And I mean, it says, just anybody who sows discord, bad vibes. Bad vibes. Someone asked me about it yesterday. Like, why do you get so pressed at it? Because it makes sense. It's like the humble side of myself and the arrogant side of myself doesn't like joking about it. Because then it's like, because then it brings out, if I'm not going to be humble about it, I'm not going to be like, what's up, broke boy? Oh, what's up? You ain't saved it. Oh, you want to joke around it? How much money? Like, that's not cool. You know what I'm saying? But then the humble side of me is like, well, shit, man, there's people actually trying to save and there's people really trying to do it. And that's why I'm like, wait, and then why are we mocking that? So it's like, it's either I end up mocking somebody or somebody else is getting mocked. You know what I'm saying? That's why I don't like it. That's why I'm like, come on. So we got to do it. So that's why it's just a lose-lose. It's a lose-lose. Netflix, and then bonds came down. At least Procter & Gamble's coming up. Lurking and working. God bless you, Dustin. Let's get it. Get ready for earnings. I don't. Did Procter & Gamble, are they having their call or something? I thought they already did. Yeah, dollar. I actually haven't looked at the dollar. I need to check the yen. I think yen and bonds have really been going hand in hand. And 38.89. Yeah, bonds look exactly like the yen. ETH still outperforming. Yeah, Procter & Gamble. I don't know if the conference call has already happened or not. And then remember, we have 1 p.m. You're getting Lael Brainerd. So we're still got a lot of time. About 2 more hours. Today's Thursday. 8:30. Yeah, Procter & Gamble already had their call. I think Airbnb will ever hit 160 again. I think eventually, but eventually has a very eventual time frame. But I do think Airbnb will be around, and I do think in the next 10 years, Airbnb is still going to be one of the top companies in the world. All right, there's your little bounce. What is it? Meta and Google are just killing it today. Crude inventories rose 8 million barrels, EIA says. I don't know what the estimate is. Then you have a 3-month bond auction and a 52-week bond auction right now. Oil data and bond data coming in right now. Yeah, bro, the crude 8 million barrels. The estimate was for a draw of 3 million barrels. Crazy, man. Waiting to VWAP to short. Yeah, I mean, you're in a nice little range here. This one's a soft level, but it's not it's not a violent down streak like yesterday, but it low-key just looks like you're continuing this down streak from the last half. But again, it's not like Procter & Gamble didn't give people enough to like really get excited. And then we're going to have to see today. MO's popping. I want it deeper. TikTok must follow coming EU rules or face ban, officials say. I don't know if it'll continue. I mean, I think we'll find out here in 30 minutes, but I think now you're kind of, as long as it's not fast, it's good. Like yesterday was very, very quick. So if it's slow, I think we might get into an earnings move where we don't move too much. The problem is you've broken that 3,900, and now our range is a little bit different. MTB, smaller credit loss provision, fueling banks or fueling earnings beat. Yeah, Brainerd speaks at 1. That could be another thing that'll move it. But you know Brainerd is going to be bullish as hell. So low key, actually, if you really want to keep that in mind, unless she like wants to fight back against the bond market, which again, don't forget what happened yesterday. In like the last 2 days, I hope you guys understand what has actually occurred. Like, do you guys remember this? You remember I showed you this? But this number right here in June. Bro, that was 4.97 when we were ripping. And even as we were ripping in the last 2 days and it kind of changed, it's at 4.89. So literally a tenth of a basis point, a little bit more, you've had a reduction in the Fed futures in terms of the peak rate on the bonds. Not what that's the game of chicken again. This could be highlighted through the dot plot, but this is literally just telling you that the bond market is even, again, the data yesterday and all of that, it is shifting decidedly more that, yeah, the Fed isn't going to get there. So the more this goes, maybe the Fed will try to step up the pressure. You know what I'm saying? So we'll find out. And then Tesla, new low. I'm short on Meta. I was up in the morning, now I'm down. But it sounded like progression. So I'm down $2.90 on it, $2.95 a share. But I was literally up in the morning. WDC popping. Didn't they have like some buyout stuff earlier, or what was it? I guess they have earnings coming up. But WDC's at the high. Say I'm sick. I hope you feel better, man. Drink that water. THC shares, oh, they're down now. Do they have earnings? Yeah, I played XBI and Netflix, or XBI. XLB, we're up on that like 50, 60 cents a share. And then I added 5 more Netflix shares. Clorox is starting to run. So a couple of value names. The Dow is actually not. Yeah, Dow's doing the best, but not by much. Jobless claims came out and it was very strong, which was bad. And then Philadelphia Fed came out, and that one wasn't as bad as expected. Neither was the real estate data, but still came in low. No, I'm going to sell Netflix, these small shares before earnings. I will be holding my, my long-term shares, though. Meta strong like bull, I know. I think last time I shorted it and we made money on it into these highs, it just you need like bad news. Like that's it. Otherwise it's just gonna keep ripping. It's literally like Netflix. So it's like we need to wake up. Like remember I shorted it up here, we made like $1,000 on that one. But then it's like you only get that if it will just keep running until there's like an actual bad news event that happens. But it was down a pretty penny today. I was down with that. Like I liked it, but I said, hey. Like I was up almost $1 per share on there, and I think that's the lowest it hit in the last couple of weeks. Kind of leveled it out, but it's been holding very, very, very nice. And that was only pre-market, then cash bid got eaten. The best sector, I mean, it's hard right now because value still kind of has its risk. Now, if things end up doing a little bit better, you could lose on value. So it's like I want dividends, but I also want growth at the right price. I just think unless you added to the end of last year, I don't really like anything to start the long term this year. So I'm glad because I didn't want to do anything at the end of last year, and then we just kept selling off, and things became really attractive, like even Redfin or what was it, HBI. But yeah, we're 30 minutes from Euro close. But it's just like I would actually just wait right now. I don't think anything for the long term is too attractive yet. Because we have a full long term now, and I'd rather get a better idea because if growth keeps going up, what's going to happen? You know what I'm saying? Like this is why I'm telling you guys this. You got to really think about it. Let's say the market does rally. Let's say everything is really good this year and growth comes up. If growth starts ripping, all of those dividend and value names we want, they're not going to go up the same way. They are going to probably go down or they're going to stay more steady. So that's where I'm like, hey, if that's the case, then there you go. Like I think a good example is Coca-Cola. They went up in 2021, 2022, but growth did a lot better than them. Like look at 2021 for Coca-Cola. They didn't do anything while the market absolutely ripped. Right? And then so it's like that's kind of what I'm waiting for. But right now I would keep stacking and saving. And once we know really where things are going this year, we'll have a better idea of how to, pinpoint some of the better prices and opportunities. But the broader range of what I'm looking at is the same, just high quality. I want high quality names, blue chip names, stuff with dividend. And if it's growth, it better be top tier growth for the most part. You need to eventually take profits on growth. Yes, but I would make sure your time frame, I would do minimum 10 years. HBI, I've already answered that question for you, my friend. So just be patient, bro. I know you want it. Just wait. Again, I think it's going to move around a lot. Anything's possible. Just don't overpay for it, and you're going to be good. But thinking about it a lot, asking the same question over and over, it won't change it. This is the beauty of executing this. Just give it patience, and we'll know. You'll know when it's there. I'll let you know. But I think it could go up to $10. I think it could go back down to $4. So it's just a matter of where the rest of the market goes. Then they have earnings, the performance, all of that. Apple is leading a little bit off that bounce. What about Amazon? Where was it? Where's PG? All right, so PG, we're back to almost yesterday's levels. That's nice. If that could come. Apple's really launching low key. I don't know. I think SPY, we were leaning a little downside. We're going to have Brainerd. Bro, Apple is going crazy. Yo, that's a huge candle on Apple. Check Apple. I'm looking for news right now. Union membership hit record low. That was the only thing a minute ago. union membership in the United States. It's not really. Apple was mentioned. Apple is looking for top sales executive to spearhead a giant advertising push in sports. That was a couple minutes ago, but I don't think that's it. That's huge, though. That was the biggest candle there out of tech. No, there's no news on it. Again, there's that other headline, but just let it do its thing. Let it do its thing. Yeah, I don't see anything either. And Planet Fitness still down after that Bear Cave report. UNG now selling after the draw. No, Apple for Premier League. I thought that was just a rumor. I don't know. But Apple, that's just strong. That just went red to green in like 5-10 minutes there. But then those last 3 minutes of candles are getting huge. Yeah, Apple's dominated the high ticker. Did Tesla go? No. I don't think anything else did that. Like, that's single-handedly Apple. Maybe he's just catching up with Meta and Google. Because Google's even running up there a little bit. That pop is still holding on Apple, but we just don't have news. WDC was going up earlier. So actually the only thing I could compare it to would be WDC. I think both of those are kind of doing their thing. And again, I think WDC has earnings coming up. MS on the low again. Times we got 15 minutes till Euro close. 15 minutes. Okay, I need to go to the bathroom. Follow me on Instagram at the Trading Fraternity. Keep an eye on Apple. You're at VWAP. And we still got a couple more events and then earnings. I love you, Chad. God bless you.
Pricing in terms of the
Subscribe.
ECB, and then how do you position for that?
How the
If
likes
we're looking at 50 bips in February and then a downshift, but more hikes for longer.
Yes, look, Alex, clearly we think that core inflation, which is the crux of the matter, is going to be high for quite a long time. In fact, in our view, going back to sort of 2%, that's not going to happen before the end of 2024. So let's be clear, no rate cuts for sure for quite some time to go, and then indeed some rate hikes to come. In terms of the market reaction, Guy, and you were mentioning earlier on, frankly, the market has to digest a lot because you've had massively surprising growth numbers from China, quick reversal of their COVID policy, feeding hopes of a strong pivot, so to speak, on the China economic front. But then, of course, that brings an inflation fear. So we have to accept that the market has to play with the news flow as it comes. But I agree that inflation will be quite sticky for quite some time, for sure.
So given all of that, what have you made of the rally that we've seen since the start of the year? We've been talking about this over the last few days, Charles. The European equities feel early cycle. They don't feel like we're in the kind of maybe latter stages of a hiking cycle, but still some way to go in a hiking cycle. It feels like we're on different pages, certainly from an asset point of view versus where the central bank is, where the ECB is.
True. Look, Guy, there's the economy and then there's the valuation, so to speak. So we've been early buyers of European equities when they touched what we thought were low points, back in fall. In our view, the market has sort of overrun. And so the idea, I think, that's beneath the surface, European equities really have been the value play. So what you've seen is, in fact, a rotation because of an overall rising bond yield environment that had people just saying, look, Europe is cheap. We've gone through the winter. There has been no energy crisis really to speak of on the continent. And so people have been reassured about the consumer, which is why, for example, if you look at some of the banking names, they've had fairly strong, upwards earnings revisions, which may have come as a surprise to many people.
So does that mean that you should be selling this rally that we have seen and then buying back at when the valuations reset again?
In short, yes. I'm a seller of the US at this point. I also think that European equities are fairly somewhat expensive, not as expensive as their US peers. And where I'm trying to find some pivot, some switch, I actually have to look at Asia. And really what we're seeing is that if you think of the turnaround in the China story, the right move is to look for a rotation out of South Asia into East Asia, sort of out of India, Indonesia, into Taiwan, Korea. The former, you pay 21 times earnings. The latter, you pay 12 times earnings. That's, for me, the best geared play at this point in time, rather than trying to hope and chase for some rally, which we think has overrun on the sort of developed market side.
If you want to play that narrative, though, via Europe, Europe does have significant exposure to that part of the world. Where am I playing it? Is it in UK mining stocks? Is it in energy stocks? Is it in French luxury stocks? How do I play the Asian story via Europe if I think that that is potentially a safer way to do it?
The way I look at it is to think about the short-term moves that we've experienced on the inflation front, on the pickup on China, and also the sort of medium to longer-term themes. Earlier on this program, you were talking about ESG with some of your peers, and what we've seen is a rise in what we call greenflation, which I think is going to be here to stay. So when we combine the two, yes, indeed.
Greenflation. I think he was just saying 10%. I feel you. That's kind of what I got out of it. They were very, what's it called? He said just sell the rally. Greenflation. I know. What a term. You want some bubbles? I got you, Doc. Please hold while I connect your call. JPM, are they dumping? Or I think dumping because it was on the high ticker earlier. Yeah. JPM was the best bank though this earnings. JPM, and I forgot who. I don't know if it was Bank of America, but JPM actually had a growth compared to some of the other ones. Greenflation, pretty much inflation caused by, pursuing certain green policies. Again, you get certain inflation by, transferring to a system more or less. So the bubbles for the 20th, that's tomorrow. Again, same thing. The 380 puts low-key came back. Those were dead. Now 385, 2 billion, 390 puts, and then 400 calls, and then 390 calls as well. And then 389 has the most. Damn, so these are in the money. The biggest sets of puts are already in the money. And then 388, then 387. Actually, there's a lot more puts than calls right now, but every 5 points higher, there's a couple billion notional on calls. But right now, I think 387, 388, and then 389 puts are the biggest. And then even 390 puts are very large. Again, these bubbles haven't, that whole Max Payne shit has gone out the window for the last month and a half, maybe even quarter, if you guys have noticed. I feel like ever since they introduced the daily options, it's kind of changed things a little bit. Because we've seen many days where you would expect it to be Max Payne, and they just drove it $10 in the money on the biggest set of open interest. So, we'll see. Send it the Jets. Oh, what's up, Trevor? Hey, man, I saw you on the real estate yesterday, baby. Hey, man, send it. Hey, man. Hey, man, Merck running. Where does a Pfizer? Oh, Pfizer's actually. How about Myrna from yesterday? They're down to 193. It's a good guideline. It like, remember like a couple months ago, it was like really hitting on the bubbles and like Max Payne, but then like they flipped the script low key because it just it went from like, bro, there was multiple days, even on the call days. I remember on some of them where the data was bad, and I'm like, oh, dude, no way they're gonna let all these calls pay out. Oh yeah, they did. So it's pretty wild. So bonds hit the high of the day, but still negative. SGen, FDA has some calls. CGen, I think they do have something coming up. They even had a bigger pop a couple days ago, I think. 33,000, yeah. And then XLB is just, that's kind of part of the Dow short. That keeps dying. So that's decent. Nflx is trying to work. I mean, if we could hold up from here and not set a new low, this could be a nice bounce, but VWAP has been decisively going lower. Who is paying for the profits of futures and calls? The counterparty, the other person. So somebody's taking that trade. That's the whole dynamic of the stock market. You know, whether it be a financial institution or an individual, or the financial institution will fill it at that moment, and then they will transfer the risk to another counterparty who's willing to buy it, a customer. So that's the whole idea there, is somebody else is taking it. So, you know, like, you got to think that's all of us together are kind of either we're taking money from each other or giving it back to each other, but borderline, it starts with the financial institutions, and then based on their brokerages and their clientele, they manage it throughout there. CGen move in. So let's see. This is kind of a big level. Is this 38.90 again or nah? 38.93. In other words, all transactions equal 0. Yes, unless you are Sam Bankman. And then it's a slightly different situation. Okay, so if the bonds go up, I mean, I want to see how the market will take it, but bonds still outperforming today, even though they're negative, but I think they're following in lines more with the yen. Alta Fox calls for leadership change. Amazon's going lower now. So watch out. Apple gave up half of that move. Netflix kind of fighting. GNS. Genius Group. 169%. Is this the same Genius? Big volume on that. It's a penny stock. 174. I don't know why they do this. Genius Group names ex-FBI official to head task force to investigate illegal trading of stock. I think that's the news that came out this morning that I think is getting hyped on it. Sounds like it would get the traders hyped up on that. It was illegal. We hired ex-FBI to the moon. Be careful with genius. I know. I'm not really gonna. I think everyone be careful on everything. You know, as long as you're saving 10%, you do what you need to do. Do whatever you want after that. But at the end of the day, you know, this year is gonna be all about high quality. You know, I bought HKD the other day. That was the only non-biotech gamble that I took. Otherwise, if I'm gonna gamble on anything, I have to make it a biotech. Keep it below 500, $1,000 if it's not. And even then, I'm going to try to avoid them as much as possible. And I'd rather just go for the other stuff, the high quality. Or you could learn how to trade. Why are you talking smack to me, man? I don't want to talk smack to you. You know what I'm saying? Because then both of us get our feelings hurt. You know, I hope you could listen some solid advice about being wise with your money, and you'll appreciate it when you get older. You know, I guess here's the deal. I heard this the other day. Would you trade lives with the person you're taking advice from? That's it. Simple as that. And that's everything. It's not just monetarily. It's how they live. Everything. Would you trade lives with the person that you are taking advice from? And that is that. Shorted Apple? Nah, probably. I mean, that was weird. That was a weird move on that. I don't want to live. Yeah, so a lot of you said I wouldn't trade lives with anybody. So that's good. Then don't listen to anybody. I feel you on that heavy. You know what I'm saying? So, but I hope you are able to build your foundation of knowledge on wisdom. And a successful strategy is not about does it make money or not right now. The question is, are you on a path financially that will be sustainable? That's it. Because we've been here for a while now, right? This isn't, and if you've already made it 1 year, guess what? You've made it past the year. So the money you made last January, last February, March, it doesn't matter. What really matters is, are you doing something with your money and your trades and your 10% that will be sustainable for you to actually pursue this in the long run? That's what it's about. It's not about, oh, well, if you made money, you made money. It's like, no. It's saying, are you going to be able to make money every year? Are you going to be able to not lose your money on whatever you are, what strategy you are approaching? So that's why, that's word to quality for you. But that's how you should be judging it. But that's on you again. And if you want to build the life for yourself, I mean, don't listen to anybody. And I mean, but that same regard, I would ask you, where did you get this idea to trade these, low quality stocks that are filled and fraught with scams and dilution? And, like who taught you that? You got to really think about that. You got that idea from somebody. As much as you want to say, I'm building my own life, I'm doing that. So that's something to ponder on. Money in 5% or try your luck with the market. I think a mix of both when it hurts you, but I'm always a believer in stocks, long term. Where is Nflx? We're down $1.50, I think, or just under $1. I have 20 shares. No, I have 10 shares. $1.50. Your brokerage might yield close. It might, low key. depending on where you put it in. We get some money on the money markets. FTT token. Oh, yeah. I don't know if I told you that. The CEO of FTX, John Ray, he floats the idea of reopening FTX. There's more than 10% supporting people working on building. Amen, man. That's what it's about. But I'm excited. The truth will be revealed to people at the right time. You know what I'm saying? I'm not trying to get caught up with, if you disagree, you disagree. But I am very excited because I think we are going to have, we're going to have a very successful base of people in here. And that's, I'm telling you, the back end, man, Colt, let's go. I can't wait. Y'all going to buy me a house, man. Just don't forget about me. That's all. But I know it. I know someone going to buy me a house at this rate. It's looking good, bro. It's looking good. It's looking good. Is ETH going up on that? No, just FTT. So it's like, I hope the wisdom reaches your ears, and I hope you apply it. If not, maybe it never will, but maybe it will at the right time. But, at the end of the day, it's everybody has their life. And, I'm very excited for the people who have already stuck with it and receive it, man. They say you give knowledge to a wise person, they become all the wiser. For the opposite, it does nothing. What percentage of your mortgage payment every month? Well, you should just pay the mortgage. But usually they won't even let you borrow more than 60% of your income. I think in most people it's 30 to 60%, but I think around 35%. I think 35% is the average mortgage payment. I want to say I think it's a lot higher, but if you're financially or fiscally responsible, it's 30%. But I think just pay it is kind of my outlook, and save your 10% first. EVFM sold to Costco. I could check. Costco adds Phexi to member prescription program. That was on December 10th. So that was 9 days ago. MTB, are they on their call? Oh, wait, and then 8-week bill auction just came in. But MTB, they had earnings. I don't know if this could be a conference call. No. Is it? Yeah, 11 a.m. So their conference call started about 30 minutes ago. And then it's starting to move all over. They had earnings, and they're doing decent. Teslonian, they're dropping. I see Tesla Q on the high. Bro, TSLQ is such a disrespectful name. You guys know because you put, when a company goes bankrupt and still trades, they put a Q at the end of it. That's so disrespectful. Now we're coming down a little bit. Microsoft backs Google in Section 230 Supreme Court case. Recommendation algorithms are essential, Microsoft argues. Microsoft cites own products on need for liability shield. QQQ is 3 times disrespect. That explains the QQQ. I don't know where the QQQ came from, actually. I guess technically that's 3 times good. Or 3 times bankrupt. What? Delta again. Airlines are getting clobbered. And Netflix is kind of holding, but we're coming into the lows again. Bonds hit a high, but they weren't able to break out. You're below the 38.90. So honestly, no real respect at that level. I guess it's kind of been here twice, but watch out. Remember, soft level at 38.80, but anything below here, really the door is open to 38.86. And you guys should have remembered that. Dude, 3880, when was the last time, man? Yeah, so last time you were here was last Tuesday, but I feel like we were here another time before. No, even in the last 20. Dude, you haven't been here in 20 days. My goodness. The only other time you were here, and then remember, it was Powell level when we were saying 38. Remember 3886? And we were talking about it opening up that door. That's what we got to be careful of. But that takes you back to December 15th, the last time we dropped the size of yesterday. FTX at 239, yeah. I think FTX is up like, FTT token is up like 250 or 60%. They doing good, bro. They doing good. Please hold. ES at 250. Rivian getting pummeled. That's what they were talking about earlier. They were saying how, what's it called? How Rivian, Tesla's drop has overshadowed the drop in Rivian and Lucid. Very typical. News on Enphase. Well, I think just energy in general. Damn, they're down a lot. 8%. Okay, everything. It's chill for what time is it? You still got like an hour and a half till Brainerd. U.S. trade. Catherine Tai speaks on Bloomberg. Biden committed to effective approach on China trade. Playtika drops to 6%. I think they said they're reviving something. Or reviving one of their businesses. Playtika. That's just fun to say. And then I need to check Enphase, but they do look, could have been earnings. No, they got a price target cut 2 days ago. And that's it. And then materials are kind of coming up. Alcoa's slipping. Again, PLTK. I forgot. I need to check the news. They're like reviving some business point. They all cash proposal to acquire Rovio Entertainment. So they're buying somebody and market don't like it. And then SPY coming down a little bit more here. Watch out at this break. No, Brainerd is usually bullish. Brainerd is actually, I would argue, the most dovish Fed member ever. Ever. She's going to be at 1. JPM on the low. Is Meta still up? JP Morgan's dumping now. JB Hunt, I think they had earnings earlier or yesterday. Last year was non-farm days. I'm almost up on it. We got a lot back. I mean, it sucks. I wish I took the other ES, but now as long as the bonds are in pole position, we're good to go. But that was a quick 14,000 down, back down to 6. But it's still between both of these. It's 12. But now the difference is not down as much on any of the other ones. And then the yen is still able to climb. It's honestly kind of crazy how fast we've moved. Because I remember the non-farms and all that. What was it? Was it the CPI before? That one was BS. And then we kept running off of that. But you're right back there. You're below. Was this the non-farms day? I think the NASDAQ just has to come down a little lower. AFL, Aflac. I like insurance companies. AFL going to be there. I don't know if they've performed the best. I think they have a lot of premium. That's the only downside, but that's some blue chip. UVXY on the high. You're coming down. 38.86, new low. So watch out here. These are the two little levels, but like low key, the door is now open to like a 20-point move to the downside here. But we'll see how patient we will be on it. Solar ETF falls 5%, most since October. That could explain the Enphase stuff. I think it's just all the solar names. Well, the interesting part is I wonder if we're already down 1%. We'll see what Brainerd ends up doing. But then, I wonder if Netflix ends up bad. Are we kind of already taking some of that cushion? The solar ticker is TAN. TAN. A pretty decent cheek lay there to the bottom. Again, 3885 is the low. Soft level at 3880, 3875. But really, I'd just be on the lookout for 3886. Or 3868, excuse me. Boeing, and then Dow's actually still doing the best. PRVB went red on our position or the day? Oh, on the day. I was like, what? That's crazy. You still got one more month, a little less now. Meta is just a scam, bro. Well, we'll see. I think maybe if Netflix is bad, it'll finally bring it down. The video is down a lot in the morning. Another candle here to the downside. You're a couple points away from the high. There's a lot of support on the book map. That was 2,000 contracts in that 1 minute. So see, there's a lot. 3,900 flat on the futures. There's a lot of support there. So we might do either a dance a little bit or get a flush and a bounce, or if it bounces here, it might flush really hard into it. But there's a lot of bid support here on the futures. Yeah, Meta's last 4, has it even been longer? I guess 10, 11, 12, 1. Yeah, 4 months. Seems like longer, but that was a monster rally. Apple's doing good, but Google and Meta are the real winners today as far as big tech. And then Amazon, one of the bigger losers here. How do we pump on low employment and then drop on the same jobs data? There was a lot of it today, and we're barely down from the non-farms, I think. Yeah, you just recently went below the low on the non-farms, or excuse me, on the jobs list claims. And again, people are shocked on it, but the rest of the data was just slightly better than yesterday. So like the Philadelphia Fed, that came in bad, but not as bad. That like if this followed the trend of yesterday, the Philly Fed would have just plummeted even further, but it didn't. So that was decent. And then real estate data came in. It's still bad, but not as bad as people were expecting. But then the jobs were strong, which should have had a lot more negative of a reaction. But I think people were a little bit more calmed after yesterday. But I do think we are still kind of digesting things now and then factoring in those earnings. Yeah, we were just at 4,000 on the SPX, and now you're below 3,900. Even now the futures are about to fall. How long am I holding Tesla? 18 years. And on the 18th earnings, you find out it ain't his. So, yeah, not 18 years, but I plan to hold it for a decent amount of time. At least until I could have a clean exit. Another new low. I am still dealing with off-market homes, yes. 100%. So that was a new candle or new low on that candle, but it's not dumping. Again, there's a lot of bid support on the futures for 3,900, so it needs to flush it. You might get a little bit of these bounces. So if it bounces and then dribbles right back down, it'll flush. Otherwise, it should just flush here. The YM. I want to short the Dow. I was thinking about it, but after there's a lot of cushion. I think it could go really, really low below 33,000, but the problem I have with it, we just gave up, pretty much 1,500 points on it, which kind of sucks. So maybe if it goes lower, bounces up again, I'd want to short the bounce. But I like the idea. That's why I got a mini one. Pretty much material short this morning kind of covers it a little bit. Len puts, Lennar, oof. I think home builders got to upgrade there, but 95 put, you're almost in the money. If they report tomorrow, you might be better off selling pre-earnings, but if they do have a bad earnings, they have bounced a lot. It could be good. I think KB Homes, I think they did bad and then they bounced, though, a little bit. Yeah, remember, they did bad and then bounced. So it's kind of up to you, but chances are leading into earnings, you'll probably be getting a little bit more premium. Playtika raises proposal to buy Rovio. Again, that's why they're dropping. Yeah, the Apple pops are crazy today, just out of nowhere. So, again, there's a lot of money on the futures at that level, like we were saying. So just watch. If this doesn't hold up, yeah, Fed Collins isn't a voter. Brainerd is, and she's very dovish. And number 2, Brainerd is going to be here in just about an hour. And then Fed Williams is after hours. So actually, you'll hear from Fed Williams by the time you probably are digesting Netflix earnings. I think I have 300 shares of Tesla. I have 3 kids. It's a battle, man. Yeah, NVIDIA, again, even below 170. So it's been down 3-4% all day. You sign up for the Coinbase settlement? I did not. How much did you get? So watch out. That was that little bounce. If this immediately fails, we're going to flush. If it has enough steam to clear. Again, that's a lot. That's going to be another. You had 2,000 contracts, 2,500 there. So keep that in mind. Volume 27 million by hour, 2.5. Actually, volume's kind of low now. They waiting for earnings. Yeah, the GNS is still running. That's on the high. NVIDIA, Netflixonian, G-Sun, Boeing. Boeing's going up. Boeing just reminds me of McDonald's right now. I hate it. Because I'm like, oh, if I want to short the Dow, why not just go for Boeing? But then I'm like, nah, man, Boeing is, I guess, kind of high. But it's just, it reminds me of McDonald's, bro. It reminds me of McDonald's. $150, but I only made a couple hundred through Coinbase altogether. Damn. This is nice. I'm scared to short the Dow. Well, I don't know. The Dow is getting, I just don't like, I wish I kind of realized it a couple days ago. But it's better to wait for a bounce, but it kind of makes sense. Because it's like, remember, the Dow ripped before everything. And it's like, if the market ends up good and things continue to rally, the Dow isn't going to, everyone's going to probably want to get out of the Dow and get into the NASDAQ and get into any of the growth. But then also, too, if we really start to get a hard landing, you know, people are going to just buy the bonds and then sell out everything. So I think the Dow short is compelling, definitely. But it's also you're 1,500 points behind the mark now. And I just don't think that's it's not as safe, especially considering how strong it can be. Shorten, good luck. Good luck. I like the idea. I think if I didn't, I wish I shorted that instead of Ethereum. Like if I didn't have other stuff working against me, I may be down to go with it. But that 1,500 or even with the micro, it could be decent. Flush incoming. You may be right, sir. Look at where'd all these bids go. There's one fat one that showed up there then disappeared. Bookmap looked mad laggy. So watch out. That's one of the little bounces. Clear out a couple more orders and then just watch what it does around here. Reports after the bell. It's going to be Netflix. And then we are going to get Netflix, PPG, and SIVB. Then tomorrow morning, you're going to get Ally Bank, STT, and SLB. And then next week, Tesla, Microsoftian. All right, it's holding there. It's not, bro. They're trying to get you with the pump fake. Netflix, I think it's tricky. But I do think it all depends on the ad tier because that could help them pad the stats. However, this is a bad quarter for them. So usually this is the quarter where they spend the most money. Their margins drop, the cash flow drop. You know, fundamentally, a lot of things aren't really, you know, this is the quarter they spend a lot of money. But then now they have this new ad tier. Then that could pad the stats in terms of paid subscribers. But I really think it's going to be about the guidance. You know, don't forget, Netflix did really, really good last quarter. But Netflix also, they guided up tremendously. Where was that in October? So, and then it had the follow-up, but it was their guidance for this quarter, which people were expecting to be abysmal. So hopefully they do good, but that's it. There's nothing good on Netflix. I'm biased. See, the stock, I don't know, but I love Netflix, man. I hate it. I feel bad that I like it that much. They've not released. Come on. Why does everyone say this? Y'all didn't watch Wednesday? That one was a hit. That was a banger in the last 3 months. The Glass Onion one, that was a banger. That was a movie. There was another one. There was another even show, bro. And then even I think Dahmer already factored in the last quarter. Americanas files for bankruptcy protection in Brazil. Nah, Wednesday was popping. The Glass Onion was popping. Oh, The Recruit, that one. Yeah. And Kaleidoscope. Wednesday and Kaleidoscope were like social media that got some traction. But that's it. How do you mess with Wednesday but not White Lotus? I'd like White Lotus, but I think it didn't. Like, Wednesday was good, bro. I loved Wednesday, but like the White Lotus was just like, I don't know. It wasn't. It was decent. It made me keep watching, but it wasn't like yeah, that's the one. Like, I didn't feel the same way about it. And I guess I like the Addams Family. I like more the nostalgia. But Wednesday was good. Recruit is very watchable. I feel like it's there. It's not too witchy for you. No, it was the perfect amount. It wasn't like dark. Like you think I'm my mom, where I'm like, oh no, you can't have any witchcraft. You can't watch Harry Potter. It was just like, it was good. It wasn't it wasn't even that. Like, I love the little crawling hand too. I love Thing. That was good. Nah, but I'm down the Recruit. If y'all haven't seen Recruit, that's a solid 10 out of 10, I'd say. People, that's why I don't know. I feel like what period where, like, I don't know. I think the area right before when, like, they came in hard with the last quarter. But again, the question is if it led to, you see what I'm saying? We're not talking about content here in a weird, that's the sad part, is that I think Netflix has they're always going to produce content and they're always going to have it. But like for today, it's really about paid subscribers and then the ad tier. How well did the ad tier do? How much did they make from advertising revenue beyond just people doing it? You know what I'm saying? And then the guidance, too. We need to see how they're going to do next quarter. And then also for, for Asian Pacific, that will be also important for them, or anything overseas. Okay, getting your pop. No flush, man. No flush. Yeah, everything. All across the board. Chips, Apple, even a couple of down names. I think even Boeing's moving up too. No, Boeing's just flipped. Dollar flush. Could be the bond auction. U.S. mortgage rates fall to 6.15, lowest in September. I think you have a 10-year tips auction. But yeah, dollars plummeting right now. Not plummeting, but I mean, compared to anything today, this is the biggest 2-minute dollar decline. And then bonds took a candle. Dude, you've done this pop about 3 times today, just out of nowhere. KKR extends to a session low. Materials pop too. Where's PG? Are they still up? No, they gave up that. Premium gone. I think they're still gonna. I think your premium, you might lose some premium depending on where you pay, but don't underestimate across the board. Every play, assuming you have enough time for it, but there should be earnings premium starting to get baked in, whether it's Netflix or even anything on the market. Now, Brainerd comes on in an hour. So, but again, she should be expected to be dovish than not, but we'll find out. JPM, they got a little bit, but JPM was underperforming. Again, financials are one of the worst on the day. Now it is industrials and consumer discretionary. XOM, I don't know. I feel like oil is going to have, we got to see oil by the first quarter, but no matter what's been going on with the price of oil, XOM and Chevron and Phillips have just been killing it. So I don't know, but I feel like shorting something with strength comes with its own risk to reward, right? I think I like XOM short because it's high up and you have had so much bad oil news and all of that. But then I don't like it because if that strength continues, then there you go. But actually, they came down today. Remember, they were green. But I do think XOM is appealing to the downside. It's kind of like the Dow, but you haven't given back too much. But this is it's a decent price there. But I've shorted it around 110, 111, and it really does like this price. Towards the end of the quarter, we're going to finalize, nat gas, either take losses or double down on it. I want to bet big on Netflix because of Wednesday. I feel you. The only problem is Netflix is literally up like 30, 40% from last earnings. But then again, Netflix is still down 36% compared to the S&P on the 12-month. MGM, remember Wynn was rocketing earlier. Again, dollar and bonds dropped. That gave you a little bounce from the flush zone. No, you should see earnings. You should see Wednesday on this earnings. Wednesday's not even new. Yeah, I saw the headline. Mortgages just hit the lowest in September. Disney's starting to pop here a little too. Keep an eye on MGM. How many shit shows does Netflix have to make before they find a Wednesday? I think it's just how many billions do they spend. So they do. There is a call. They had one. I know we're talking all the good Netflix shows, bro. They made one movie. I wonder how much they spent on it. That one with the white noise. It's called White Noise, I think. That was probably the worst movie I've ever seen in my life. They tried to make it all artsy. They had to pay Andre 3000 for a couple scenes. That was the worst movie I've ever seen in my life. I couldn't even watch. I couldn't even keep it on in the background. I was like, this shit is stupid. Stop. So they spend a lot. That's always their key. But at this point, you got to realize that their problem isn't how much they spend anymore. Believe it or not, Disney has the spending problem now, and it's because they're still making $1 billion a month, more than that, right? I think they're expected to do $7 billion in revenue. So I think their monthly or their yearly budget is $21 billion. That was at one of the high points. And that's assuming, so they spend $21 billion a year on movies. Assume all of them are bad. They're still going to walk away with $7 billion. And I'm speaking really, really top line right now. You know what I'm saying? But so it's really about ad spend. And that's why it's just slowly but surely, as long as they keep memberships up and keep growing, that's it. And as long as you on that 20, it's like private equity. They spend $20 billion a year. I think they lowered it maybe even to 11, but I like to use the $20 billion number. But it's if you hit one of them, you're going to get your money back on the year. Because if it leads to 1 million more subscribers, 2 million, 3 million, whatever it may be, if one of them hits, then that's it. It's literally private equity. That's how movies are, if you're even familiar with movie financing. But they do spend a lot. And that's where every tech company they have that same problem. But there is bad movies on Netflix. There's bad shows. There's literal money pits. And then you would be surprised how many of them they make a lot of niche content, for like people who just like, some people just like some of the stupid shows, but it's definitely not worth what they're spending. Yeah, HBO has been doing better in terms of dollar to content. HBO Disney, they're all still in the money burn mode though. Like, again, we have WBD because of the other one. I would love to see that come up there, but it's there. Netflix price to earnings isn't that bad, but again, it's just like the problem is if they stop growing, you're not going to get even 5 times growth, right? Where are they at now? They're at 28 times still. I think when we bought it, it was a lot lower, but it's still, that's the worry. But they have held up nice. And just remember, when they started dying, the problem was everyone said, that's it. Netflix is done growing. And once that growth, if you're like, oh, crap, you're not going to be able to add these subscribers and then you're spending that much money, everybody got really, really worried about that. But sure enough, the growth quickly returned, or it at least showed some signs of life in the last quarter. Netflix Worldwide, you get the niche foreign language. Yeah, they're pushing those a lot. The foreign, but then you have to realize all of those foreign movies, bro. They're getting them for $1. I know that sounds ridiculous, but like, if you actually, that's why like when the foreign shows pop off, if they fund one of those foreign movies and put subtitles, and it does good, oh my gosh, they make so much money because they're not spending anything on that. They're spending money, but in comparison, like they're paying Jonah Hill for a scene more than they will for that whole entire movie most of the time. Like, and then if it ends up being a hit, then that's it. They run it. Like Squid Games, they paid nothing for Squid Games. They made billions off of Squid Games, and they barely spent anything on it. Yeah, so here's the deal. Netflix's guidance last quarter, they beat by 44% of any guidance. So that's the crazy part. And it was October 18th. So this was your earnings on Netflix day. And then you actually went up, and then it started, I don't know why it went up so much more. I guess October 19th, the next day, this was the earnings. So you actually sold off, had a run up into the earnings, a giant run up. You did the 10% run up leading into it, and then this is where it was. They sold off, and then they started doing the little bounce thing. They sandbagging this time? No, they're not sandbagging because that's why they're up. So the reason why they're up still is because they guided really good last time. So that's gonna be the thing that's debatable about it. And then they moved 13%. But then again, last October, they did down 2%. October before that, they did 6.9. They actually suck in October. The last time they did good in October was even, but I think more Octobers are bad. But then October 2016, they went up 20%. But that was 140% guidance. Brent ripping. Bonds are dropping. Dollar still a little lower, but we'll see if we get back up to VWAP. Next announcement, January 19th. Yeah, so right now it's pricing in still 10.84 implied move. And the average move is 11.5%. In a weird way, Netflix is moving, it's pricing in a slightly less than their average move. And then, so yeah, it's a wide range too. I think for EPS, the average estimate is 42 cents. The lowest is 29 cents per share. Highest is 65. And again, this is their quarter where they make the least amount of profit. Brent on China. We had oil numbers not too long ago. And then like 45 minutes there. You think they overpromised and underdelivered? Yeah, that would kill them. Like if that guidance returns back, like, or let's say they do disappoint, it will be ugly. But I feel like if they are going to disappoint, I don't know. I don't think it'll be too big, but I mean, we'll find out. Dollar consolidating, oil rising, bonds falling, recession fears, jobless claims, stagflation. Could be. Or, but then again, it's kind of the, this is kind of the hangover from a damn generational rally. I laugh every time I say it because, bro, we went from this is the best start in a generation to now, like, you gave up half of it in 2 days. So I think it's kind of funny. But it's like this is still the hangover now. So it's like some of these indicators are being weird. Again, people are selling off value and buying bonds. That's recessionary. But then the dollar is low. And then the currencies are all still tripping out. So it's pretty wild. Who was saying that? That was a fact. So it was a couple of analysts were bringing it up. But, you know, as much as some people like it or not, that's a fact. It was, you know, from January 1st to January 17th, whenever we hit that high until we dropped from yesterday. That was the biggest global rally since 1988. So that's like 30 years? No, 40 years. So in 40 years, you have never, global assets have never moved like that. United States stocks, European, Asian, global bonds. Again, we read it today. There has been over $588 billion of bond issuance this year in 2 weeks. That's crazy. Almost $1 trillion of money raised in debt after one of the worst years in history for bonds. So pretty wild. So bonds are dropping now again. Dollars holding, but bro, that greedy short turned into the bounce. That's it. They cleared up the books. You're running now. So watch 3,900 again. This might level things out. We'll find out. I think it's 35 years. Okay, my bad. That was 10 off. I don't get it. I said the 88 to the 20. Add the 20, get to 2,000. I'm not good at math, man. You know, but that's a generation, I think. Options trading broke everything related to stats. As much as, you know, I think options have changed, I blame like $2.5–3.5 trillion of new money when it's all said and done. Options trading always existed, but everybody didn't have a bunch of money the last time options was around, or the last time options or even the market got popular. So, you know, don't underestimate. That's the $3.5 trillion plus is the source of all of our problems. Inflation, society, options, stock. That's the source of all of it. I truly believe that. Analysis for Ally looks good. And the profit 77, 15-time leverage for 2% turnover. I think my issue before, I think it's just going to be a premium, right? think that's going to be our only issue. No, they look great. Let me check the yield. I know Ally, though, they do have some high-risk auto loans. But low-key, looking at this, I mean, just even then, I mean, Ally is a pretty solid company. They're not as who did they spin off from? Didn't Ally spin off from someone? I see 4.6% yield. I think if you could get it around 10, it'd be a pickup. Who did they spin off from? I know Ally. Is it a spin-off of Santander? Because then that would make it a little worse. But Ally, I know they have a pretty strong book, but they also, Ally back in is it GM Financial? Yeah, because I know they took, in the early years, though, they were the reason why they blew up, like, and they did good, like 2014 to like 2018. They were the guys taking the loans nobody wanted. So they were the ones giving the lower quality loans to get the high yield. So, I would wait a little bit, but it's compelling. I'm not really against it, given that you're not paying too much of a premium, but you are at 2018 prices. If you could get it around like not sub 20, I'd say around 2015, 2017-ish levels, that would be different. This Ally, I'm pretty sure. I thought it was Ally Financial. It's Ally. We're going to call it Ally. I don't know why Ally. I want to give Ally my money. I'm like, who's Ally? I got questions. Ally is way more, you know what I'm saying? Ally sounds like you got a friend in me. Oh, you got a friend in me. You know what I'm saying? It's the way you're saying it. Yeah, okay. Thanks. I don't know. Alley? I'll be like, what's the kind of alley? Were you going to meet me in the alley and give me a loan on my new GM truck? Hell no, dog. This sounds sketchy. They also got a piece of profit on the vehicle sales. 4% yield is good, but I mean, I think they'll be a little bit more stable, but obviously, I mean, there is the potential of an auto reckoning, but just Santander's the one who's going to get killed. But that's how, like, any banker spinoff from like 2014 to 2018, if they're good, you just have to realize how they made their money almost 10 years ago. They were the guys giving the bad loans that nobody wanted to do following the, 3, 4, 5 years after the financial crisis. So, like, that's how a lot of banks and other things, there was people who were just, they were giving the loans people wouldn't qualify for. So Ally was like, yeah, normal credit union ain't going to give you a loan on this car. We'll give it to you, but we're going to charge you 17.5%, 18% interest. But then again, things got better, so they did good off of it. Ally Vi sounds best. You wouldn't touch it. That's what some chads say right there. I want Ally. But I want blue chip, though. At the end of the day, Ally, you got to think. If you get a good yield, that's great, but you're really playing growth. Like, the thing is, I'm like, I think having one of the big financial banks goes a long way. If you want anything financial dividend, so, like, that's the thing. Like, Ally at this price paying 4%, I mean, we're yielding 4% on JP Morgan. So you got to, like, if you wait, you might be able to, like, by the time if Ally goes down to 10% yield, you might be able to grab JP Morgan back at 4 or 6%. So, it could be good. Does Buffett have Ally? Oh, Chad's in sync. He might. You got some at 14. That's a good price. I think you are yielding 10% there. So I just ride it. I want to add into the highs. But not a recommendation. T-Row, the Lambo index. I've not checked. Apparently, new Lambo sales are doing good, but I still see a lot of what's it called for sale? I haven't. The used ones still seem clap. But then again, Ethereum and Bitcoin bounced 30%. I think that might be bullish for Lambos in the short term. Tesla, I mean, I think they'll make more money off the taxes, but I think Elon's gonna have to piss off a couple of people. And then it sucks if he recently just bought one. $511 on the index. Not bad. Damn, 217? Is this salvage? Clean title? Not bad. SBF tweet. He says, I'm glad Mr. Ray is finally paying lip service to turning the exchange on after months of squashing efforts. Carvana have an effect? It could. I mean, at this point, I think interest rates, just straight up aggregate demand, is having that effect more than not. USO. Yeah, again, I think Brent, J. Alt said that like 10, 15 minutes ago. Well, the data was bad. Crude, dude, the oil world is just wild because people are factoring in China for the future. But then even after the SPR stuff, the supply just keeps getting crazy. Netherlands and Japan set to agree on chip controls by end of the month. I feel like that would be bullish for the chips, but we'll see. Yeah, HKD I'm holding. I'm in at a much higher price, though, but I kept it very, very small. So I would just be careful with it. That one's just a lucky or hype play. ASML. There you go. That could be it on that. Yeah, Netherlands. Netherlands and Japan agreed on chip control. You're on the money on that one, J. Alt. That's the one that reacted like instantly and bigger to that. U.S. posed to get help on chip crackdown from Dutch and Japan. Poet chip stocks? I have not. Poet. Sounds like a good ticker. ASML still getting clapped. And then I think Super Micro gave guidance the other day. Netflix is supposed to move about $10, $10.80. 9:30 hour or 30 minutes here till Brainerd. SMCI, they came down. Bro, they gave like updated sales guidance yesterday. That was good. Oh, man. Yeah, bro, look at that was after hours. Oh, that hurts. Dollar General could be good. I think they still kind of hold a little bit of premium, but they're decent. They're breaking photonic chips. Who? SMCI still. I'd watch ASML. It sucks it's already down 3, but that Japan Dutch news just came out. Is it $30? I think, or no, 10%. Excuse me. I said $10. I meant 30. Yeah, it's 10%, $30. Yeah, about 31 bucks. It would be very, very good. Bro, we've been chilling today. You good? You feel chilly? You like it? Very risky, very. If ASML bounce, I might be down to short it, but that 3% is scaring me. Is Netflix about to drop the hammer? Dog, we don't know. It's gonna be big, though. It's gonna be big. Oh, there it not. ASML. I need bounce. It's going. But that just moves big. I like those, though, sometimes. The last time Netflix had earnings was October 19th. And the stock went up 19% the day after. And then continued, I think, another 19% following. Like in the following weeks and months. Apple's in-house. And then bonds just hit a new low on the day. Would you look at that? U.S. poised. Oh, we already had that one. Was it down? No. We had our debt ceiling talk from earlier. But, you know, just my opinion, but I don't think the debt ceiling has any effect right now. I think, right? Unless it gets really bad, but I think it's easier to look for that reason, but I don't even think it's really hitting like that. Those technical line charts. Oh, I don't know. What time, man? 9:30? Today's like moving slow now. It's like slow and fast. I can't tell. I have an urge to sell thing. Meta financial literacy is a priority skill for Gen Z. The fuck? Meta publishes 2023 Instagram trend report. They said financial literacy is there. But why you guys don't promote good financial literacy? Your Gen Z guide to trends across the platform, from financial renaissance to historic movements in politics. The survey features topics, issues, and centers at the forefront of the culture. More than half of Gen Z respondents said they plan to make their clothes in 2023. They have turned to thrifting when a clothing item they want is out of budget. 30% of Gen Z survey are old enough to vote. Teens use platforms like Instagram to vote with their wallets to support causes and communities they care about. More Gen Z consumers are likely to use makeup to express their personality than augment their feeling of beauty. Gen Z is also searching for climate-proof beauty skincare products. Alt takes on the metaverse. In metaverse, Gen Z could build digital experience to express individuality. For example, 67% of Gen Z feel avatars should better reflect diverse body types, clothing, and skin tones in the coming year. 64% of Gen Z surveyed says they plan to monetize a project this year, with a significant portion hoping to monetize Instagram. Nearly half of creators say they make their content to express themselves and have fun. Expect interests to turn into side hustles. That's what they mean by financial literacy. They want to monetize their Instagrams. Cultural curiosity. Gen Z is exploring culture through cuisine. 68% of Gen Z social media will either continue or would like to try food from another culture after discovering it online. Nearly a third of Gen Z users look forward to in-person experiences like creator conventions and creator meetups. And in 2023, Gen Z expects their favorite influencer to breach into new forms of media. Over 40% of Gen Z followers want to hear podcasts from their favorite social media creators in 2023. Return of the raves. Music raves are beloved outlets for Gen Z. 68% of Gen Z surveyed users plan to attend or want to attend a rave in 2023. And then members of Gen Z turn digital spaces to break the ice. More than half of Gen Z users feel more comfortable being vulnerable online and over text than in person. I don't think that's the full report. Those are the headlines. What the fuck is this? That's it? What do you? I think I did read it all. I don't want to download it. They're gonna take that as me voting. What percent of Gen Z uses Facebook? That was for Instagram. I like how they tried to say, yeah, Gen Z likes metaverse. No, they just said they want more avatars that are more diverse. Zuck, it's okay. I know they asked them that, and I don't think they got the 68% they were looking for. That was their metaverse highlight. They said 68% of Gen Z wants more avatars to reflect themselves. Man, why y'all hating on Gen Z so hard, bro? Damn. Y'all going off on them. Y'all going off on Gen Z. Every generation sucks. Y'all don't know how compound interest works? I'm just saying, bro. It started with the millennials too. How do you think we got here? And then what happened before that? Y'all don't even like the boomers either. Hold on. I'm confused. And then anybody between boomer and millennial, they don't even know how to use a computer still. You know that? They still using selfie sticks to take pictures. It's weird. So I don't know why you getting mad at everybody, man. And then, then the Woodstock generate, man, they were doing mushrooms before it was marketed to you by the guy on Shark Tank. I don't know, man. Oh, I don't know. We just need Jesus. Y'all don't like to hear that, but shit. I think I should throw that one in there. Everybody needs Jesus no matter when you were born. At the very least, you don't like Jesus, stop being so mean to people then. How the hell you don't like Jesus, but you so angry all the time? That make no damn sense. You like, I want love and this, but you violent as hell. What the hell? Like, calm down, sir. That's it, man. You don't gotta love Jesus, but stop judging your brother, man. That's all. That's all I'm saying, man. So, I don't know. It might be Generation Jesus, bro. It's facts, though. That's it. If you like, you're more rebellious to society now if you say you believe in something. Like, I don't feel me. That's it. If you're like, nah, like, I actually, I believe in hard work, working. I believe in a traditional family. That is more radical nowadays than any other time, bro. You are more of a rebel back then. That's like the Woodstock people. It's crazy, actually. That's it. I never thought some of my beliefs would be considered radical, and I'm like, what? Okay, man, fine. I'll go get 27 girlfriends. I'm down. Don't tell my girlfriend. Actually, I told her that before. She slapped me. But still, I was like, that's fine, man. I was like, that's weird. I didn't see that one coming. So good for you. That's it, bro. Y'all getting mad at me for telling you to save 10%. They're like, Gen Z cares about financial literacy. No, they just want to monetize their Instagrams. Save 10%. Man, this is crazy. So it's pretty wild, man. But either way, we just need more love in this world. We will all recognize we are all hypocrites. And until we can love the people we disagree with, until we can love everybody, I think it's going to get worse. I don't know. I'm throwing that one out there. You know what I'm saying? Until we can all put aside all the bullshit and show some love to each other and just like, that's it. It's just going to get worse. No matter how old you are, how young you are, no matter how progressive or non-progressive you think you are. That's it, man. If you always got an enemy that look like you or breathes air like you got a problem, sir. You got a problem. I'm just telling you now. It's not like a personal problem. I'm saying like, Houston, we got a problem. You know what I'm saying? Yeah, Disney kind of low-key a better pre-earnings play. Nothing but love and dividends. Stop. You feel me, bro? Stop playing with me. Amen. Enemy. I don't got enemies. I don't got no enemies. That's it. You fighting God at that point. Otherwise, I love you even if you hate me. That's fine with me. I still got love. That's okay. I'll put it in God's hands. You said enemies got me. Jobless claims data was strong, but then the other data was not as bad as yesterday, which kind of balanced it out. But overall, I mean, we're getting a negative reaction, but surprisingly, I think you're at the low candle of, you're right at jobless claims data, believe it or not. Google rocketing. They're up 2.5 on this, man. I think they did that for a photo shoot, but we don't talk about Greta here. Greta scares me out of respect. You know what I'm saying? Like, Greta, I swear to you, bro, she is like a mob boss. I don't know, like, what they do to get their money or something. Like, I don't think they engage in illegal activity. I don't know. I just don't know. But that's it. I low-key believe Josh is Jesus. Oh, no, man. You know, there was a time I was getting high as hell, and I had a bunch of hoes. So it's not like, I don't think that was anywhere in the apostles. I don't think we had that anywhere in the New Testament. You know what I'm saying? I'm just trying to make up for past sins at this point. So, nah, man. That's definitely not. Don't ever think that. Yeah. Do I still smoke? I haven't in like a really long time. I have not like in a really long time. Like, I think I've hit a vape, like a nicotine vape, before I've even hit some of that dank in a while. He might rock open toes, but that don't make him Jesus. Don't have regrets. No, I don't have any regrets. I'm just saying I'm not Jesus at all. At all. And that's why, man. That's why I think, I don't know. I appreciate what I believe a lot more. You know, that's it. Just knowing that, you know, I got a relationship with God, and it's like that grace is real, bro, for real. Like, it does not matter. Like, I don't know. Like, you could be, I don't know how far some of y'all have gone, but it's just like, it's very, very good, man. You know, it's very, very, very good in that sense. It's just like, what's it called? It's like losing all of your money and then still finding a way to get you, then becoming extremely successful. That's how I would define low-key life in that sense. How do you get a relationship with God? I mean, I think that there's not like a WikiHow on it, but it's kind of one of those things. If you want it, you'll get it, if that makes sense. Like, the desire will push you there. I don't know. You'll figure it out. But, like, if you actually want it, that's what I'm saying. It's not like if you just want it because we talking about it, you're like, ooh, that sounds good. You know, like buying a stock only when it's going up. But borderline, it's like if it's something, just like anything in life, if you genuinely desire it, you'll find. You said Mike Lindell. My relationship with God. Get your My Pillow and God. What? You could purchase that? 2 payments? Amen. But yeah, same thing. I mean, in the weird part, the same thing with God. Finding God is the same thing as finding wealth. And I mean that exactly as it sounds, because God is wealth. But even then, like, let's say you don't even want that Jesus in your life. I understand, bro. They try to shove Jesus down my throat at a very young age. I was like, I wasn't down with it, hence the previous hoes. But it's just like with money, man. That's why I really believe here too. You know, to pivot to a money topic is very simple. Like, you know, I think like some people out there, I was even listening to Ivan on the real estate. You know what I'm saying? It's like you want something, you really desire it. You're going to actually, like, it's not just like a passing thought where you're like, oh, I want to get rich one day, you know, or I want to get successful. It's like, no, you actually like think about it and pursue it and actually like, you know, go into it. That's where you start to really get there. Everyone's not Christian. I know I'm not Christian. I just believe in Jesus. So stop playing me. But I feel, and I love everybody, man, no matter what. I don't care if you Muslim, Buddhist, atheist, anybody else. I don't care if you like, even if you a Satanist, dog, that's fine with me, man. I mean, I'm praying for you, but I don't really even like organized religion. I don't, you know, I love your Jesus, but I don't like your Christians, is what Gandhi said. But I got love, and I follow Jesus Christ. That's it. But I don't really believe in organized traditions and churches and and all of that. But, you know, everybody got their own thing. That's why I just show love. Too many indulgences. Religious is form of control. Well, I've heard that a lot, but whoa. I mean, I'll just tell you this now. If you want a decent life, you're going to have some control, whether or not you're religious or believe in Jesus or not. And that's something I've seen with a lot of people. And you could tell the market's not moving if we're already ranting like this. But that's it. It's just you're always going to need some sort of control. So I know some people try to fight. They're like, that's how I was when I was younger. I didn't like being controlled, you know, but I've realized that having control and having discipline has actually set me free in that sense. So keep that in mind. Need principles and morals. I think principles. I think morality is very fleeting. I would even argue the ability for man to be even moral is very, very hard. Very, very, I don't know. That's a whole nother, that's philosophy at that point. We're just going to start talking morality of man. But I think minimum principles, or at some point you have to have something that you say no to. Or you could have some sort of ethics that you follow, but I don't know if, I don't know if full morality is even achievable to a degree. But I stand for principles. No matter what you are, what you believe in, you will need something. And eventually you will have to have control of something. Elon Musk in my religion. Yes. How quickly y'all have put Elon on the cross, too. That's the crazy part, man. You know, that's it, man. The story of Jesus was kind of reflected in the story of Elon 2000 to 2023. That was crazy. Bro, I've never seen so many people, like, straight up religiously follow Elon, and then y'all straight up crucified him. That's it, bro. Y'all straight crucified Elon. The same people, I was like, you were just talking about his miraculous 20,000% on your portfolio. Hold on. That's crazy. Who, the Barabbas? Mary Ibarra. I don't know who they chose. I don't think they chose anybody over Elon. That's the sad part. They said, don't free anybody, just kill him. Well, I think we're a lot more vicious than the Romans back then, believe it or not. I think we are, actually. That's a good philosophical concept. What do you think, Chad? Do you think we're more vicious than the Romans? Like back in the day, you know, the Roman Empire? I don't know if you're familiar. We chose John Fetterman. That's actually pretty funny, man. Vicious with words. Yeah, I guess we don't like slaughter people, but like we would be okay with them getting slaughtered. Like I think nowadays, bro, if there was some way to like vote on social media, if they were like, yeah, can we vote to throw Elon in the lion's den, and it was like government sanctioned, y'all would do it. I don't know. I think y'all, I'm speaking of this current modern generation. I think some of y'all would vote no, but you know what I'm saying? I don't know. I guess, yeah, we wage war online. Yeah, physically, I know they were savage physically. We didn't torture anyone publicly. It's called canceling, actually. So it's different. I don't know. We do excommunicate. That's what we ostracize people from society. But yeah, I don't know. Maybe somebody in the philosophy. Maybe we should run through it. And then coming back down, I'm waiting 9 minutes till Brainerd. 9 to 19. Communicate like John Wick. That's not what I meant, but you do understand the basic idea. So thank you, Hollywood. We got that there. She said John Wick. No, but yeah, I guess. Kind of. Exactly, actually. We're the softest generation. I mean, like I said earlier, every generation was messed up, man. Like, they were mean back in the day. Like, you got to understand why everybody is, like, so like, they really want people to be nice nowadays and politically correct. Bro, people were vicious still, low-key, though. I told you, my mom, when they came to America, they looked at a house in Santee, and the neighbor spit on my mom and said, "You can't move here." Nowadays they would do that if you said you were Christian, but still, it's just a little different now. But they were savage back then too. Everything, we're just savage. That's my point. We all suck. It's okay. That's why we got love, man. We need love. Reconciliation. Y'all ain't with me. Y'all ain't with me. Okay, that's fine. That's fine. People here, yeah, they were. That's why I like the Bible sometimes, because I'm like, damn, they had haters back then too. Like Nehemiah was just trying to build a wall, and they got mad he was building a wall. And please don't mention Donald Trump in this one, but they were still hating too, man. It's crazy. It's crazy. So I don't know. There's haters all day, bro, all day, beginning of time. Like, you know how old the Bible is, bro? And they got mad stories of just haters. You know what I'm saying? And they got stories of good people too. And then they like, why would you do that? Nehemiah, let's go, baby. Eve Adamson was listening to Eve. I mean, technically, I think God gave him the same command too. But, Eve probably had a booty. But technically, he was aware. It's not, see, that's why you can't play. You can't, he's like, she made me do it. Nah, she kept talking to me about it. Bro, he told you too. He told both of you. He said, don't eat from this tree. You had everything. You had one rule. Damn, bonds are dumping now. 0.36. Well, actually, I guess I can't say dumping when the SPY's down 0.9. Twitter will probably IPO maybe like 2026, 2027. I'd assume that'd be the best idea if he wanted to turn it around. I'm sure Adam and Eve, they're like, really sorry, bro. I'm sorry. I didn't mean to eat the apple. I'm sorry. All the apples are still there. I'm sorry. Yeah, Apple ain't moving at all. I think everyone's waiting for Netflix. You know what I know people haven't talked about since Netflix earnings is today, and we're bringing it up, and I've been actually kind of impressed with them? Apple TV. They low-key got some shows too. I don't know, in a weird way. I feel like Apple TV is silently climbing up the ranks though, because that's something I don't know if that we never talk about Apple in like content. But I think they actually got some solid ones, bro, and they spend a bunch of money. The Fed president, Vice President Lori Brainerd, or Laurel. I think she is speaking at I believe the event, it says 110 or 105. 105, Fed Brainerd gives economic outlook. So in about like 8 minutes. I'm long forever until the government tries to break up Apple Health. You're going to be good, bro. Because if you haven't realized at this point, the Apple is the government. That's it. That's it. Apple wins. That's too far. I can't even get rid of my iPhone. That's it. You know how many people who I don't like the government, they all have iPhones. Every single one. Every single one. You choose between iPhone or China. That's it. They win. The A in USA is Apple. It's US Apple. United States of Apple. Apple phones suck. You know, you probably got like a Huawei, Samsung. You got something, that's it. China is our friend. Well, we do have a nice working relationship with them. When you first started options, did you constantly get clapped? No, actually. I had my first option, I made like 10 grand and I was hooked off of like $500 or something, or I think $1,000. I hit like 1,000%er on earnings. And I was like, oh yeah, this is it. So, and then I've had a lot of random ups and downs. Usually it was just, anytime getting clapped on options was just it was just being flat out wrong, right? It was like, okay, I thought this was going to do this, and then I would just get clapped on it. But then, as of lately, what I noticed this year or last year, middle of last year, it was when, I was like, wait a minute, I was right. How did the stock drop 30%? And I'm up 10% or I'm break even. So I think that's where, that was the most sides of clapping. But I would get clapped on options, but it was just back in the day of being wrong. But my first options trades, I was very successful, which made me pursue it even further. First one's free, bro. First one's free. It really is true. Military still uses BlackBerry. Maybe I should get a BlackBerry. I think that is an American company. Right? And then it's not an iPhone. Oh, they're Canadian? Sorry. Canadians are nice, but they're still kind of, I don't know how they feel about freedom. I thought it was like a little baby America, and then what's his name? Trudeau, just out of nowhere. I was like, hold up, man. I didn't know you could just seize all that money like that. Damn. Sorry. They are baby America. I guess when I say it out loud and then the context. Oh, my bad. Canadians, don't hurt. Canadians, why are you guys getting mad? You guys don't even get mad. What's happening? Hold on. Am I getting clapped back by Canadians? You guys are the nicest people in the world. I was not expecting that. What? I thought I didn't know that was possible. Sorry. They've had enough. That'll be crazy though, low key. If what if the Canadians inherit all of like the American bad culture and they just start getting aggressive? Oh, dude. That'll be wild. That's it, bro. They're gonna like storm their capital with like hockey sticks. That'd be terrifying. Honestly, I'd be scared. Because they're nice people. They're beautiful people. I love all the Canadians. If I was in the Fed chair, what would you do right now? I think the stock market would be down like 70% already. So you really wouldn't be worried. I would have told y'all right away. I would say, listen, man, they pumped $3.5 trillion. I don't know what you're expecting me to do. So we're just going to raise the rates to 20 right now. And then I'll just cut it once we like drain this shit. Okay. So my bad, man. Then I would have told you from day one. I'll be like, yeah, you guys are right. It's not transitory. It's definitely not transitory. If we don't do something about this now, oh man, we got a problem. Apple pop again, dude, is doing it again. I think we talked too much about Apple. 10-year tips draw 1.22, allotted at high 65%. You only get 1.2 on the tips? That's actually wild. Yeah, bond auction. But that's for the inflation-protected treasuries. Rates will stay high. I'll be like probably like the next decade, man. I don't know. I think it's just it's pretty much a bond. It's like it's a treasury, but it's inflation protected. So I think they give you the real rate. So you'll always pretty much get a certain rate. You'll get usually a positive return. It makes sure that it's giving you a real value based on the dollar and then inflation. So that's why it's yielding 1.1 or 1.2 instead of 4.5. I would have done something crazy though. I would have done if I was Fed chair and I lowered interest rates, the time I would take interest rates back lower, I would make a condition for the banks that they could not loan the cheap money to companies that have had no performance in 7 to 10 years. So that way, even when we do lower rates to spur the economy, it wouldn't be going to the zombies. That's it. They do something like that, boom. And then I would do reverse interest on excess reserve. I would say you have to pay me for your excess reserves. So you still have to hold reserves, and if you have extra, you have to pay me. Boom. So they either have to loan the money out, still hold enough to prevent financial catastrophe, and then if they end up holding too much, they got to give it to me. And then boom. Again, I would destroy the stock market for a little bit. Brainerd is she's not live yet. We might get some written text, actually, a little bit in advance, but as of now, she's going to be coming on right now. It should be starting.
Oh, yeah, Richard was very
What? All right, I was trying to make that out. It sounded like a bunch of minions talking. And that's why you're not in that role. Yeah. And you dominate private industry, then you move to public service. Ask Jerome Powell. Don't ever forget, was he JP Morgan or was he Goldman? I forgot, but don't forget, bro. JP was a banker. That guy was running funds, was a lawyer, ran up a couple $100 million, and then became the Fed chair. So that's what you do. That's just how it is. So maybe, I don't know. Yeah, it sounded like that White Noise movie. For real. Yeah, he worked private equity. I think he had a fund. JP was a killer. That's why I was even thinking about it. You guys realize, like, we've had JP now for like what, 6 years now? By the time he leaves, that's going to be an 8-year tenure if he does decide to leave. What if Powell stays another 4 years? But I was thinking about it, man. At least, like, he does know a little bit about a lot about finance. The guy isn't. That's why I'm so always confused. Like, I was confused in 2019 when he decided to cut the rates there that one time, which I was very, very surprised about. But then it's like, I'm very surprised I'm surprised he lied about transitory. And I say lied because I genuinely think somebody of his economic skill definitely knew it wasn't transitory. But I feel the political pressure at that moment was just too hot to disagree, and I don't think you had it, but I'm surprised. Other than that, though, I'm very, he's definitely not that thing. He definitely knew. He knew 1,000,000%. He knew 100,000% it wasn't transitory. Nobody in their right mind, unless you if you didn't have any, education in economics, or you didn't have, the dude had a 30, 40-year history in markets or something. Like, the dude knew what was up, man. So, I just think it was, that was his only thing. But other than that, the guy he's a good guy to have there. I think political pressure from everybody all around. You couldn't just, you knew. He just knew. And then at that time, though, it's just because, like I say, I still stand by it. I know we bring up a lot of stuff here. Everybody has their own views. Some of you lean harder to one side than not. But I believe the $4.5 trillion is the source of the problem. And the point is, both parties did it. It wasn't Donald Trump did it. Biden did it. It's so I think both sides, I think it was easier to make it a broader common enemy than to kind of, be there. He tells the truth most of the time, I'd like to think, or at least I feel like he has a good grasp of the economy, and I feel like Powell is he is I don't know who I would rather have in that role of office. I think he is skilled and talented, and I think he knows what's up, but I definitely think he knew transitory wasn't real. Transitory was never going to be transitory. And I don't think you have to explain very hard why it was transitory versus just simply understanding why it wouldn't be transitory. So we'll see, man. We'll see. He does know what's up, man. He does, but that was my only thing with him. That's the only real gripe I've had. And then in 2019, he got bullied into cutting rates. I didn't think he was going to do it. I didn't think he was. That's the first TLT that we hit. That was another 30,000%er before 2020. But I remember I brought it up on the watch list. I showed you guys the Fed futures, and I was shocked that he even did that because I didn't think somebody of his economic nature and then again, he was kind of new at that point, but I was surprised he did that one. And then again, he had political pressure. Even Trump was like, cut the rates, you jackass. So he's not immune to political pressure, and I don't know if anybody in that position could be, but he's a smart guy. He's a smart guy, and don't underestimate his financial background. I'm waiting. Brainerd's coming up there. They're talking like minions. Here, I'll get it. I'll get the video up for you. Are they talking? The audio seems really shitty.
Hello, everyone, and thank you for being here.
No, not bad.
My name is Tanvi Mago, and I am one of the co-chairs of the Government and Policy Club
Watch
here
for
at
any
Chicago
written
Booth.
statements to come out.
On behalf of myself, my fellow co-chairs, Chicago Booth, and the University of Chicago's Institute of Politics, I would like to welcome you to Inflation, Markets, and What's Up with the Economy Now, with Federal Reserve Vice Chair Lael Brainerd and journalist Bethany McLean.
Baba Rip.
We are excited to be hosting this incredible opportunity today as we discuss who owns inflation, what the future holds for our economy, both nationally and globally, and what challenges 2023 may hold. We will begin today with a keynote from Vice Chair of the Federal Reserve, Lael Brainerd, which will then be followed by a moderated discussion led by Bethany McLean. Bethany McLean is a financial journalist who has notably written on the Enron scandal and the 2008 financial crisis. She has published a number of books, including The Smartest Guys in the Room and All the Devils Are Here. She has also served as a Fortune columnist, Slate contributor, and Vanity Fair contributing editor. At this time, I would like to introduce Vice Chair Lael Brainerd. Vice Chair Brainerd took office as the Vice Chair of the Board of Governors of the Federal Reserve System in May 2022 and has served as a member of the board since taking office in 2014. While serving on the board, Vice Chair Brainerd was appointed Chair of the Financial Stability Board Standing Committee on Assessment of Vulnerabilities and co-chair of the Organization for Economic Cooperation and Development Working Party 3. Vice Chair Brainerd served as Undersecretary of the U.S. Department of the Treasury and as counselor to the Secretary of Treasury from 2009 to 2013, during which time she received the Alexander Hamilton Award. I'll close by saying that we are honored to be hosting Vice Chair Brainerd for this discussion. Just as a note, we'll save 10 minutes at the end for audience Q&A, so think of your questions throughout. I know everyone is eager to dive in, so with that, please finish any food you may still have out as we welcome the Vice Chair of the Federal Reserve, Vice Chair Lael Brainerd.
They always eating. You know what I'm saying? Oh, that's Lael. What? Bruh. Are you kidding? What just happened? Is this a food break or did they just cut it? Man.
And at lunch, so enjoy your lunches. And thank you to Tanvi Mago for those very kind introductory remarks. And I'm looking forward to having a conversation.
Brainerd needs sufficiently restrictive policy for some time.
Has
required
declined
to lower inflation
in recent
to 2%.
Months, but inflation was very high. And it's going to take
see
time
wages driving.
and resolve
We're delayed now
to
because
get
of
it
that.
back 60%. Financial conditions have tightened considerably over the past year as the Federal Reserve and central banks around the world have tightened policy
She says
considerably.
possible to cool prices without
Just looking at
significant
a
job
few
loss.
indicators, the yields on two-year treasuries, the inflation
The
protected
written statement
securities
came out.
have risen by more than 4.5 percentage points and now stand at over 2% in inflation adjusted terms. And as many of you may be highly aware, mortgage rates have doubled over the last year. Inflation has been declining over the last few months against a backdrop of moderate growth. Yesterday, we got industrial production, which points to a significant weakening in the manufacturing sector over the last few months. And we also got retail sales, which similarly point to further moderation in consumer spending. Looking forward, weaker readings on real income, wealth, and sentiment all point towards moderate growth and on a subdued basis over this year, actually, over 2023. The widespread expectation that U.S. growth will have been well below potential both in 2022 as well as looking forward in 2023, in part reflects a significant tightening of both fiscal policy and monetary policy against a backdrop of much more moderate growth globally. Fiscal policy exerted a very significant drag on the economy last year and is expected to be modestly positive going forward. In contrast, for monetary policy, the drag on U.S. growth and employment is likely to increase in 2023 because of transmission lags from the very rapid and large swing from accommodation to restraint over the course of the last year. So over just the 9 months between March and December of last year, the Federal Reserve raised the policy rate by 4.25 percentage points and initiated runoff of the balance sheet. The lagged effects of earlier accommodation likely offset some of those initial effects of tightening over the course of last year. And it's likely that the full effect on demand, employment, and inflation is still lies ahead. With that in mind, let's turn to the implications for the employment leg of the Federal Reserve's dual mandate. In contrast to the slowing of
Again, the
output growth, we've
reinstatement has
actually
already been
seen labor
digested.
markets remaining quite tight
So what she's going to
throughout
say is
the
pretty
past
much
year, with layoffs
already
remaining
priced.
below pre-pandemic levels, openings quite high, and the unemployment rate ending the year at 3.5%, which was its lowest point in the last recovery. Even so, recent declines in average weekly hours, temporary help services, and monthly payrolls growth suggests tentatively that the labor market may be cooling. Employment at temporary help services firms, which tends to be a good leading indicator, peaked in July 2022 and have been declining since, and currently are at the level that we saw before the pandemic. Similarly, after peaking in early 2021 and then staying elevated through the middle of last year, average weekly earnings have declined and now are standing at the bottom of the range we saw pre-pandemic. And that's an important metric because it's the easiest margin for a lot of firms to adjust when they're facing declining demand, but reluctant to lay off workers. And of course, average payrolls growth has been declining over the course of the year. That said, labor supply is likely to remain constrained. On net, labor force participation flattened out over 2022 at a level that's about a percentage point below what we saw in the pre-pandemic period. And a lot of that looks like early retirements. Immigration has also been quite low. Despite that, wages don't appear to be driving inflation in a 1970s style wage price
we already have that headline.
Spiral. Wages have grown faster than the pace consistent with 2% inflation and productivity growth, but wages have grown slower than inflation over the past 2 years, and aggregate real wages have fallen. Workers in lower wage sectors, where you saw very high layoffs initially in the pandemic, and then benefited from job switching subsequently as businesses scrambled to hire, have seen wage gains in real terms. But in the aggregate, the gains among lower wage workers were more than offset by real wage declines among middle and higher wage workers. And overall, the labor share of income has declined over the past 2 years and is below its pre-pandemic level. In terms of just the recent data, there are tentative signs that wage growth is moderating. So if you look at average hourly earnings, it's cooled to about 4.1% annualized growth on a 3-month basis, which is below 4.5%, which we saw on a 6-month and 12-month basis. So in terms of retail markups, we have seen material increases in what could be described as a price spiral, whereby final prices have actually risen more than the increases in input prices in a variety of sectors. So the compression of those margins as supply constraints ease,
that one's new,
inventories rise and demand cools, could actually help with the disinflationary process. So what does that all mean for inflation? Inflation has declined in recent months from very high levels. Total personal consumption expenditure, PCE inflation, which is the one that the Federal Reserve targets, is likely to have run at about 2.3% annualized pace on both a 3-month and 6-month basis, as compared with 5% on a 12-month basis. And that's because energy and core goods, like used autos, each subtracted about 3/4 of a percentage.
This is the highest we've been since morning.
Those are reversals of previous large increases.
Again, mostly everything, even the written statements, is all
In terms of core
It's
PCE
Brainerd.
inflation, which is really the inflation that we are most closely targeting, it's now running at a 3.1% annualized pace on a 3-month basis. And
Vic's on the
similarly,
low
that's
already.
below its
Okay, I'm gonna go to the
3.8%
bathroom.
basis on a 6-month
I'll be listening.
basis, and well below the 4.5% that we see on a 12-month basis. Within that, of course, core goods is an important component bringing that down. And that reflects improvements in supply chains, improvements in inventories, and cooling demand. But to the extent that those are reversals of earlier high price increases, that will moderate. And when it does, overall core inflation could actually move up for a while before it starts coming down again. Housing services inflation are behaving quite differently. So they're very high at about 8.8% on a 3-month basis, and we haven't seen improvement there. In terms of how much housing services is contributing, it's twice as much as pre-pandemic. That said, housing is the most interest sensitive of sectors, and we've already seen house prices coming down by 2.5% over the course of about 5 months. And if you look at rentals on new leases, they've actually been declining for the last several months. So why are housing services still so high? It's because there's still some catch up in renewing leases. And so we won't see those new rentals actually dominating the average, probably until the second half of this year. And then the final thing that we look at very intensely within inflation is non-housing services. And those two are running high, about 4.4% on a 3-month basis, and haven't yet cooled. There are a range of views on what's it going to take to get non-housing services to come back down. Since wages constitute a very significant fraction of costs for most firms in those areas, one possible channel is through a weakening of demand. But to the extent that inputs other than wages may have been responsible for a large part of the price increases in some non-housing services sectors, you could actually see an unwinding of those factors helping to bring down that important component. And we do see some evidence that the persistent component in areas like transportation, recreation, food services, and accommodation, where I'm sure you've all seen large increases in inflation, may actually be correlated with some of the movements in core goods. So let me just wrap up by saying that the trends in core goods and non-housing services, the tentative indications of some deceleration in wages, the evidence that inflation expectations, despite the run-up, have been very well anchored at 2%, and the scope for markup compression may provide some reassurance that we aren't experiencing a wage price spiral of the sort that we saw in the 1970s. In that case, it's possible that a continued moderation in output could facilitate continued easing in the labor market and reduction in inflation without a significant loss of employment. What does that mean for policy? So the Federal Reserve moved policy into restrictive territory at a very rapid pace and subsequently downshifted the pace of increases in the federal funds rate at our last meeting. That gives us the opportunity to look at more data as we move the policy rate closer to what we call a sufficiently restrictive level, taking into account the risks around both our employment and inflation goals. In parallel, the balance sheet is continuing to run off. That said, inflation remains high, and policy is going to need to remain sufficiently restrictive for some time to make sure it gets down to 2% on a sustained basis. So with that, I'm going to wrap up and turn to a conversation with Bethel. Thank you.
Let's see. She focused on saying wage price. I mean, like we said, it just sounded like Brainerd. We'll see if any questions turn. This lady, hopefully she grills her. But she just focused more on the 70s thing. She did say the Fed won't stop.
Here. I'm going to ask some questions, and then we'll turn it over to you guys for about 10 minutes of audience Q&A.
Right,
so there was a headline today from the World Economic Forum. And the headline was that the love affair between governments and central banks is ending, and that there's increasingly going to be tension between fiscal policy and monetary policy going forward. as governments want to use fiscal policy to cushion some of the blows from central bank tightening, and central banks are still trying to get inflation under control. Do you agree with that framing? And if so, how do you think it plays out?
Yeah, so I think in that regard, the United States is actually in a pretty good position relative to some of our peers around the world. So in some economies, particularly in Europe, but also in other parts of the world, where they've seen a very large spike, particularly in electricity prices, natural gas prices, there's been more of a need or an inclination for fiscal policy to step in and try to cushion the effects of those increases on households and businesses. The United States has been in quite a different position, partly because of natural gas prices here being somewhat separated from the rest of the world and being lower. So here what you saw is we've already seen a very large adjustment in fiscal policy as pandemic programs expired. So we saw about 1.5 percentage points of drag on GDP last year from that fiscal reversal. So in the United States, as monetary policy has tightened, there's actually been a better kind of overall balance between the two to work with. And as I mentioned earlier, fiscal policy is projected to actually just return to its kind of historical contributions over the next few years. So the United States has a much better position from the perspective of monetary policy tightening being able to do its work.
More broadly, Chairman Powell said in Stockholm recently on a panel, he was talking about pressure from central banks, pressure on central banks in the new world that may challenge central bank independence in terms of pressure to be involved on climate change, pressure to take a stance on social issues. And he said we should stick to our knitting and not wander off basically to take on perceived social benefits. He said taking on new goals, however worthy, without a clear statutory mandate would undermine the case for our independence. How does the Fed navigate that tension going forward? And how do you think central banks around the world navigate that tension going forward?
Yeah, so I think for us, it really is clear that we take our statutory mandates that Congress has given us and to those. Now, in terms of our statutory mandates, we do have important responsibilities for making sure that the institutions, the banking institutions that we supervise are undertaking very effective risk management. And as risks associated with climate change, whether they be physical risks or transition risks, become more important in the economy, those risks are things that banks are taking into account. And so we do have important statutory responsibilities in making sure they have good risk management frameworks for thinking about material risks associated with climate change no differently than other important material risks. We also have important statutory responsibilities to deeply understand the forces acting on our economy because those are going to be pertinent to long-run growth, volatility. And so those are the two statutory responsibilities that are very pertinent. Some other peer institutions may have additional statutory responsibilities directly for aspects of climate, but of course, they would be responsible for interpreting that. But those are the statutory responsibilities that we operate under.
What about other topics like income and wealth inequality, some of which the Fed has been blamed for exacerbating over the decade before the COVID pandemic? Should those issues be ones that the Fed takes into account when setting policy?
Yeah, so the Federal Reserve has a dual mandate. We're responsible for pursuing both maximum employment and price stability. And in the course of doing that, it's extremely important for us to understand how income is evolving in the economy because it might affect both employment and inflation. And so in that context, it has been very important. If you think, for instance, about distributive issues, it matters a lot if parts of the income distribution are primarily wage earners, because we think about real income through wages as affecting consumption, and employment in turn affecting wages. Other parts of the income distribution may have greater reliance on wealth, in which case their consumption behavior may be more affected by asset prices. And so for us, it's just important to understand those distributive differences in order to understand how our policies might or might not achieve our maximum employment and inflation goals.
So stepping back a little bit, coming out of the pandemic, the Fed repeatedly described inflation as transitory. And there was a switch it was August of 2020, right? I get confused about the last couple of years' timing, where the Fed moved to a major policy shift with inflation targeting. When you look back on that, are there mistakes that the Fed made in not seeing inflation as more than transitory? And did that policy change has there been any rethinking of the policy change of average inflation targeting?
So I think, we have, as have, I think, economists and central banks around the world, we've been confronting circumstances that are really unprecedented. If you think about it, we've had a series of pandemic waves globally that took place over a very protracted period of time and affected shipping, affected key intermediate inputs, think about semiconductors, affected labor supply. So a very complicated set of supply shocks also affected demand, both during the pandemic and then with a surge of goods-directed demand at the reopening. That was then compounded by a war, by Russia's unprovoked war in Ukraine. And that added commodity price spikes to the picture. So I think what we have seen is a protracted series of shocks. And I think there are lessons to be drawn about the role of monetary policy in terms of keeping inflation expectations anchored at 2% throughout that time, and also taking into account whether the productive potential of the economy was much more constrained during that time. But in terms of policy frameworks, if you look around the world, different mixes of monetary and fiscal policy, some early tighteners, some central banks that tighten later, didn't actually lead to very different outcomes on inflation. So I think this has been a global phenomenon, and it has led to sharp spikes in inflation really around the world, regardless of when those tightening cycles began. That said, I think we have undertaken very forceful action. We've tightened a lot, and we are starting to see the effects of that on inflation. We're definitely seeing the effects of that on activity as well.
And is there any rethinking of the average inflation targeting framework?
So if you look at our framework, it's very clearly focused on keeping inflation expectations anchored at 2%. And it's got a very clear prescription when inflation and maximum employment goals are not complementary, that the Federal Reserve needs to focus on the part of its mandate that's furthest from its goal. And we've been very focused on inflation. So I think it's given us a pretty good operating framework. That said, I think it's always important to keep thinking about, whether there are aspects of the evolving environment that might lead to different prescriptions over time. And one of them is, as I said earlier, when you think about a protracted series of shocks,
that's not a good answer.
You might want to work more.
But I think it's foreshadowing.
For inflation expectations.
She might be the new Fed president, and then they're going to change it.
Question from a non-economist, but you mentioned that there are lessons about expectation management. To what degree is managing inflation, managing expectations? What's the role of expectations and what happens with inflation? Is there an easy answer to that?
Well, we think of it as being absolutely foundational to what we do. In the short run, inflation obviously is a whole host of different factors. Firms are responding to spikes in prices of inputs, in wages, and consumers are facing sort of short-term inflation on a relative price basis that may reflect very special factors. But we believe that over a medium term, it's our responsibility to keep everybody expecting inflations to run at our target, which is 2%. And that just makes the job of bringing the overall price level back down so that inflation runs at 2% a lot easier. When inflation expectations are unanchored, which is, I think, part of the story in the 1970s, then when businesses are setting prices, workers are trying to figure out how much to ask for in terms of raises, there is no common expectation about where those inflation rates are going to be 2 or 3 years out. But when you have a well-anchored sort of framework that we do, then everybody sort of knows, well, it's coming back to 2%. It may take another year or so, but it's coming back, and that helps bound those discussions. And the only last thing I'll say is if you look at a whole host of measures, they do actually suggest that inflation expectations are in the range we saw pre-pandemic, which is really important.
So I co-host a podcast with Luigi Zingales, who's a professor here at Booth, and we had Lord Mervyn King, who's the former governor at the Bank of England, on the podcast. And he had asked a question that had never occurred to me, so I'm going to ask it to you, which is, why 2%? Why not 3%? Why not 2.8%?
Yeah, so there, the kind of global standard for advanced economies prior to this period had converged on 2%, partly, I think it's been described by Ben Bernanke and others as a level that would allow rational inattention. That, if inflation gets too high, you actually have to track it and know, I need to plan, that inflation is at a certain level. But if it's kind of at 2%, that gives some space for volatility in the kinds of relative price movements that I was talking about earlier. But people don't have to think a lot about it. Now, is 2%, sort of a magical number in that sense? Probably not, but it is our number. And we're very committed to bringing inflation back to 2%. And we think achieving that target is just core to
You're approaching the high
to
of
our
the day.
overall monetary policy.
I like that phrase, rational inattention. I think I might have to use that more broadly. One of the other things that I've noticed in interviewing economists over the last year about inflation is that they don't agree or understand necessarily where it came from. Do you think, looking back on the past year, past 18 months, there's a consensus in the Fed as to what caused this inflation? Is it a supply shock? Is it demand? Is it a mixture of both? Is there consensus about what created this?
Yeah, so I think wouldn't say
There it is,
consensus.
new
I mean,
high
one
on
of
the day.
Great strengths of
Get ready for
the Federal
earnings.
Reserve
The
system.
volume's
We have
increasing.
phenomenal economists
Again,
and financial
she didn't say anything as
analysts.
bullish
Maybe you were thinking about
except for the fact
pillars.
she didn't say anything extremely bearish. She
They
played her
think
role, but we're
hard
just
and
maybe
use
we
a
fill
ton
the
of
gap
data.
now.
And, they don't have a uniform view on something as complicated as inflation. But I think there is a general view that it was a combination of really large, unusual supply shocks, a pandemic, series of pandemic waves, and a war. Pretty unusual circumstances, thank the Lord, but also demand shocks, so that the way that reopening demand came online misaligned.
Did she just say thank
with,
the Lord for a pandemic and a
the
war?
ability of the supply side of the economy to respond? And I think, one of the things that we had all gotten used to over the previous 30 years is we've just had an enormously elastic supply side of the economy. So, if demand surged in an area, businesses were great at, moving their production to produce those goods or services. And I think what was very unusual over this period of time is the elasticity of the supply side of the economy was very constrained. And we haven't seen that for a while, right? Because semiconductor plants shut down when, you had zero COVID in China, they would shut down ports when they got cases. And then you had just a, large decrease in oil supplies associated with the war, food supplies. That's a pretty unusual set of events.
How does the enormous question of China play into how the Fed thinks about inflation going forward? Both China's exit from zero COVID, the slowing demographics in China, the ongoing trade war with China. How does all this, is this a big factor in how the Fed thinks about inflation or a minor factor?
Well, as you think about marginal kind of sources of demand in the global economy, the kind of very rapid abandonment of zero COVID in China is a big event. Exactly how it plays out, I think, is the uncertainty that a lot of analysts are spending their time trying to figure out. It could be most salient potentially for demand in the commodity space. And so I think that's been a big focal point, trying to figure out whether that, given the supply constraints associated with the war, whether we could see some increased pressure in energy as a result of that. I think that's the biggest focus right now. But all of the factors that you talked about, consumption in China, could there be additional supply constraints in China? Those could all ripple through the global economy, as we saw during the period of zero COVID, when there were clear moments when shutdowns of ports and factories in China really rippled through supply chains globally.
Given the speed with which things seem to change in the world and all the variables that are out there right now, one critique of the Fed I've heard is that the Fed is too reliant on models and not fast enough to incorporate real world data into its thinking. Is there a change afoot there, do you think? Well, first, is that criticism fair? And is there a change afoot? If it is fair, does it need to change?
So we really rely on both, right? There are certain historically based relationships that come from the data that help inform our thinking about, how much, for instance, a 425 basis point increase in the federal funds rate is likely to flow through to both growth and inflation, and really importantly, whether that takes place immediately or slowly. And there's just a huge literature on lags that helps inform our thinking. And that's important because it takes a while for monetary tightening to really flow through and exert that dampening effect. But right now where we are, as we move very quickly, we're now in restrictive territory. We're probing for what we call the sort of sufficiently restrictive level of the rate at which we can be confident that inflation is going to come down over time. And that's a very data-dependent exercise. We're really looking at the flow of data. The more data we have, I think the better we'll be able to assess that.
So another ripped from the headlines question I read this morning: Fed policymakers are starting to show differing opinions on the path for U.S. interest rates this year. That 2 voting regional governments have backed moderating the pace of rate rises, while 2 other Fed officials have stated a preference for additional hikes. How does that play out inside the Fed?
Yeah, so we will have an opportunity to talk about those things at the end of this month, the beginning of February, when we meet. Usually we have very extensive discussions about the data and what does it mean. What we did over the course of the 9 months from March to December was we raised rapidly in very large increments to get to a restrictive level, to keep inflation expectations well anchored. Once we did that in December, we kind of downshifted a bit because we said that we recognize that there's some lags in transmission, and we wanted to code for the sufficiently restrictive level of the policy rate. And that logic is very applicable today. By doing that, it gives us the ability to absorb more data and to, I think, navigate what's a very uncertain environment and probably better land at a sufficiently restrictive level.
Is there a sense that it's better to risk tightening too much than not tightening enough? Is it better to intensify the risk of a recession rather than to intensify the risk that the Fed is perceived as not being sufficiently committed to keeping inflation under control?
Yeah, so we obviously, all of the work that we do is an exercise in risk management. And when we were moving very rapidly to restrictive territory, to a territory where monetary policy was actually going to be restraining activity and inflation, then it was really important for us to demonstrate that resolve and to make sure that people understood that, that 2% inflation is still the right anchor. We're in a somewhat different position today because we're now in restrictive territory and we are probing for the sufficiently restrictive level. As we get further into restrictive territory, those risks around our dual mandate become more two-sided. And so now we're in an environment where we're balancing risks on both sides.
You mentioned housing several times. How do you think about for lack of a better way of putting it, the psychological effects of housing, in the sense that it's a great source of middle-class wealth? And as the housing market starts to come down, with the Fed tightening, so does the sense of middle-class security. And is that something that can be picked up on in models, or is it picked up on in Fed thinking?
So housing is just an essential part, both for the services it provides, right? Shelter is kind of one of the fundamental services for wealth building, particularly for middle-class families, but also as the single greatest expense in monthly budgets, in household budgets. And so you're really balancing those things when you think about tightening rates. So housing services with inflation, as I mentioned earlier, in that component being by far the highest at 8.8% and being quite sticky, that's taking up a very large share of household budgets. And low-income households have the largest share of their budgets that are absorbed by just the basic necessities. 3/4 of their household budgets include housing, transportation, and food. So it's a really important salient cost for them. So it's a balancing act. That source of inflation, it's really important to bring it down. It's a very interest rate sensitive sector, and so we were already seeing the declines in overall house prices, but part of that process also means that residential investment comes down. And it is important over a medium term to see greater investment in affordable housing. So there's trade-offs there.
So speaking of, on the subject of housing, a slightly broader question. Most people seem to believe that the Fed's purchases of mortgage-backed securities played a pretty big role in bringing down mortgage rates to the ultra-low levels we saw in the aftermath of the pandemic. Is there a sense at the Fed more broadly of what the impact of QE really is? That seems to be another one of those things that seems like a really basic question, but that economists really seem to disagree about.
Yeah, so we have, central banks have a much longer history of adjusting interest rates and being able to run data analysis to see how much those increases in interest rates dampen inflation, dampen activity, increase unemployment. We don't have many episodes of using asset purchases to help provide greater support to the economy. Because we've been
kind of tempted to buy
in a world where
one share of Netflix every time I hear it.
Interest rates have been low for a long period of time. There's just not that much room. There wasn't that much room in the last two recessions to cut rates. And so you hit the zero lower bound when interest rates got to be zero. The decision was made to use asset purchases to extend that relief on interest rates out the yield curve.
And I'm buying a share of Netflix every time she says it.
Including mortgage-backed securities. And that helped to bring down interest rates further out the curve where a lot of borrowing was done. And now we're in the process of reversing that. Because we don't have a lot of episodes, we don't have really clear estimates of how you translate that runoff of the balance sheet into increases in the policy rate, but estimates.
I'm already at 20 shares now. I just doubled up.
Have it being equivalent to about 50 basis points, maybe 75 basis points of tightening, and that process is ongoing. And so there's some notion.
I was just reading y'all chats, and I'm like, stop making fun of her. But then now I can't stop hearing it.
Or buying and selling treasuries and MBS, that you might have gotten that benefit right up front.
So I added 10 more in that
is an
second
ongoing benefit. But do we have like great certainty around exactly the point estimate? No, there just haven't been enough episodes yet.
So I'm going to ask a couple of more questions, and I think the best way to handle Q&A is if you all line up at the microphone to ask whatever questions you have, unless somebody else has a better idea on how to handle it. But that seems like the right idea. There are a couple of microphones there and one there, so I think that would be the right way to go. I'm switching gears a little bit. So you talked about the Fed's role in supervision, and another one of the headlines I've been interested in lately has been that the Treasury market is the Fed's next crisis. And obviously in the pandemic, we saw malfunctioning of the Treasury market. And there's this dual problem of the huge growth in the Treasury market combined with banks' either unwillingness or inability to intermediate the way they once did. And it's obviously a huge problem given the US government's need to finance itself more pronounced than ever before. What happens?
Yeah, so we have been very focused on liquidity in the Treasury market and monitor the liquidity there very closely. And for the normal days,
I don't want to keep. I'll end up with 100.
But in a few episodes,
I'm cool with 10 more though.
What we've seen is that transactional liquidity, the liquidity needed to, in particular, cash in large amounts of securities, have become quite stressed. And that may have to do with the structure of the Treasury market changing over time. It may have to do with simply the very large amount of Treasury securities that are being transacted relative to the intermediation capacity. But it's something that we focus very, very, very intently on. Now, you know, the pandemic was pretty unusual, the kind of scale at which you had one-sided transactions and the dash for cash.
I really want to do it,
is pretty unusual. But there have been more modest stress events. And so there's now
do it again with Berkshire.
Robust reform agenda that involves the Treasury Department, the market regulators.
Her latest comment, we dumped from it, but it was bullish. She said
like more central clearing,
Fed policy is now unrestrictive.
Thinking about dealer capacity, thinking about PFTs. All of those things I think are important for understanding how to make that market less fragile at moments of stress.
So just a quick note, given there are a lot of you with questions, no statements, quick questions, please. And let's get started right here.
Hi. So between a soft landing and stagflation, there is a real possibility of recession. And the global economy is slowing down, and the UK and Eurozone are already slipping into contraction. China's 3% growth shows that it's already in the growth recession. And it's speculated that this could be the first recession in recent memory where the rest of the world goes down and pull the US economy down with it. So how much maneuvering room and agency is there for Federal Reserve in preventing a recession that could spread and spill over into the United States, and whether there is a chance for collective action from central banks of the major states to avoid a possible global recession?
Yeah, so there's no question that it's a very challenging global environment. You know, the war affecting commodity markets and spiking inflation there on top of the pandemic, and this being a global phenomenon has really created a very unique set of challenges. That said, I'd say for the United States, recent data suggested slightly better prospects that we could see continued disinflation in the context of moderate growth. And of course, we'll just be watching that very carefully. in part because of the very unusual nature of the labor market right now. There's a prospect that you could actually see a big decline in vacancies, for instance, without seeing large increases in layoffs, and still in the context of moderating inflation and loosening of the tightness in the labor market. But I would also say that more adverse outcomes have been ruled out. And I think we see that a little bit in some of the recession indicators that people watch in the markets. And of course, as you said, some of the foreign countries, our peer kind of central banks, have more challenging policy trade-offs that they're navigating. And that global environment could impede attainment of that more favorable outcome here in the US.
Good afternoon. Good afternoon. My name is Christopher Phillips. I'm a second year at the college. My question for you today is, it has been nearly 3 years since COVID hit, and we're still seeing a lot of volatility in the economy. Inflation went up 2 points last year before coming down 3. The previous year, it went up by 6 points from start to finish. You spoke a little bit about the causes of this volatility. I'm just wondering, while unemployment has been more stable as of late, do you believe that we're going to potentially see a hike in unemployment as the Fed tries to wrangle in inflation? And do you think that the volatility is going to get under control anytime soon?
Well, you're exactly right that what we've seen is very volatile inflation response. And that is because we saw an unusual inelasticity in the ability of the supply side of the economy to respond to changes in demand, increases in demand on reopening, for instance. And that reflected a series of pandemic shocks that were global. They hit, shipping, they hit production of key intermediate inputs, and they hit the labor market, and then they hit through the war commodity prices. So, that kind of environment just leads you to a very prolonged period of volatility. Now we are seeing those supply chains ease. We're seeing inventories build. I mean, all of those things are now reversing, which is why you can see in both commodities and core goods that relief. And maybe this will continue, which would be very, very welcome. So again, I think recent data suggests slightly better prospects of that kind of favorable set of outcomes on inflation and employment. But, it is a very uncertain environment, and you just can't rule out worse trade-offs.
Good afternoon, Madam Vice Chair. I'm Christian Johns. I'm a first year at the Public Policy School. And given the combination of higher interest rates on municipal bonds and the end of pandemic era fiscal interventions, i.e. the American Rescue Plan and the CARES Act, state and local governments are projecting massive fiscal cliffs or major deficits in the coming years. How does the Federal Reserve view this potential crisis, and how much of an impact would major budget cuts affect the American economy?
Yeah, so we do take into account the amount of fiscal support that is in the economy, and
they're asking the good questions because they actually have
and
puts
at the state and local
or
level.
calls.
And of course, we were very attentive to that during the pandemic because a lot of state and local governments faced or thought they might face very difficult circumstances. I think that generally speaking, the assistance from the pandemic-related relief programs really put a lot of state and local governments in much better position. You can see that we've seen much better hiring there recently. And so in general, the outcomes there so far have been much better than previously. But it is an area of potential stress, especially in an era of higher interest rates. And
you just got a cheek lay out of nowhere
to that risk.
Thank you.
Hi, could you please share what are your views in terms of the sustainability of sovereign debt levels, especially for countries with structural growth rates, Europe, such as Italy, desiring this environment?
Yeah, so it is the case that we look a lot at debt levels from the perspective of financial stability risks when you go into a high interest rate environment. In fact, thinking about interest rates rising is one of the key things that we do in our financial stability analysis. In the US case, I would say for a variety of reasons, we came into the crisis with actually pretty good balance sheets in the business sector and the household sector. And that's true in some European economies as well. But it is true that some European
with the
economies
meta
have
news,
very high
updated ad measurement terminology
of, sovereign indebtedness. And when interest rates rise, that tends to increase
this is the vice chair of the Federal
fiscal
Reserve.
Resources, and it leads to the need to pull back in other areas. And when you're dealing with the kind of natural gas spike in natural gas prices and electricity prices, governments then face very difficult trade-offs.
They said they're changing the ad
insulating
names,
businesses
ad
and
metric
households,
names, but not
and
calculations.
Having even greater calls on fiscal. So I do think there are some really challenging decisions that some fiscal authorities are making, particularly in Europe.
You don't see another sovereign debt.
Well, I think there's been a lot of attention to that since the euro area crisis, and a lot of really important actions have been taken. But it's an area that
I would have over 100 shares
by
now.
On that, a continued focus.
I think we have time for one more question. So,
okay. First, thank you for your time and leadership and service to the American economy. My question is, how do you assess the impact of rate hikes on emerging markets economies, and is that ever a concern to your policy decision-making process, or is that ever become a constraint to your decision-making on policy?
Yeah, so I certainly do take into account the global environment and potential stresses on emerging markets, both from a macro perspective and also from a financial stability perspective. And I would say back in the fall when global tightening was very rapid, we saw that the combination of a rising dollar and very rapidly rising interest rates in advanced economies was putting stress on some emerging markets. You could see that in reversals of capital flows. It clearly put stress on those who had dollar-denominated debt. The last few months, we've actually seen a little bit of slightly better financial developments for those emerging markets. And so we've seen a little bit of relief there. But I certainly keep an eye on it. And it's something that when we meet both globally as central banks and, in the context of the IMF meetings, we talk a lot about those potential stresses. And, they are very important.
Thank you.
Thank you all so much for coming. Thank you, Vice Chair Brainerd.
That's it? The audio mad weird, bro.
For this moment in history, I think we'll all take that.
Now eat your dinner. I'm trying to see if we get any hot mic moments. Wow. All right, so there it is. Her voice is better than yelling. It's a different effect. I mean, either way, that was just crazy. I know you guys have called that out in the past before with her. I thought you guys are being dramatic, but then I'm like, I just couldn't stop hearing it. I think I did like 10 shares in less than a minute. I think it was literally, yeah, bro, that was 1 minute. That was 45 seconds. 10. I was like, dude, that's a crazy rate, bro. That's a crazy rate. But that's the vice chair. She pretty much said she focused a lot on wages in the pre-written comments. And she was along the lines of saying that the wage price spiral, she really, really was saying that that's not going to happen. She sounded the same old dovish Bullard. It didn't seem like, or Bullard Brainerd. And then she did not, she did say we're going to get to 5, but it did seem like she was more on just, again, the same dovish side. And then that little comment towards raising the inflation target in the future, that one was kind of weird. But I think that's why they liked it. I mean, you didn't get any event risk off of her. You didn't have her saying anything, surprising. She really stuck to her script. So she is considered one of the most dovish members on the entire Federal Reserve. So like if you took all of her comments that she's ever made and like took the amount of language that was dovish or hawkish, she is literally the most dovish. So like that's an actual fact for Brainerd, but she didn't really shock anybody too much there. And not too bad. But we sold off. We hit a new high, and we might have filled the gap, and then we sold off. I added a couple of those Netflixes. I wanted to try something there with her speech, and it's good. We're still only down $20 now. I own 20 shares now, so I ended up doubling up. So is dovish language? No, but usually most of what she says, like in a real, all jokes aside, if you took literally what she has said, she speaks the most dovish or the most accommodative towards markets, policy, so on and so forth. But wow, that was good though. It got us. It gave us like what, an hour? Can you believe that? That was like an hour, dude. Did you know that? That was literally an hour. You can't see. It should say right here where trade price is. I don't know if it show. It doesn't show my mouse, but it's like right, in between the quantity. And right here, like you see, I don't know if I can move it. I can't move it around. It's this one. Oh, wait, do you see my mouse? Yeah, you see my mouse. Look, you see right there? So that's the trade price. So my trade price on Meta is $321.93. So I'm actually at a pretty good price, believe it or not. They have to be careful with every word. Yeah, but, I mean, I don't think you've ever heard Powell that's why Powell is just a G, but I think that's her thing. Everybody has their own thing. Like I talk like Elmo. She says a lot. That's it. What's wrong with Tesla? We don't talk about Tesla anymore. Expedia. Expedia is actually killing it. First rule of Tesla, you don't talk about Tesla. And Apple was doing pretty good. What just happened with Netflix? Again, we got earnings, man. Earnings in 2 hours. I need to go pee now. I already went pee during that speech. But then I downed a Carbo. Scarlet Fu is online. You want to hear? Oh, Netflix post-close EPS. Let them talk about Netflix. All right, follow me on Instagram at The Trading Fraternity. I love you. And then, amen.
In landscape, the putting your toe in the water, the very inaugural event is going and buying T-bills. Going and buying a 3-month T-bill at 4.5, 4.6% is the inaugural event to get you back into that fixed income indoctrination. But if you look at the entire universe, specifically in the front end, earning 5 to 6%, owning a 1 to 2 year bond portfolio isn't terrible at this point in time. And it actually helps to create the diversification needed to get through the uncertainty over the next few months, maybe the next year or two. And once you see the clouds part, you can actually make other dedicated asset allocations to more risk, either in fixed income or back in the equity markets or private markets.
You said you have to be aware of where we are in the economic cycle. So what does the latest data that we've been getting yesterday, today, tell you about where we are? Because investors' reaction to it has certainly shifted.
Right, without a doubt. And I think that what we find ourselves is a bit of a tug of war. The data that we're seeing in real time obviously portends to a softer inflation metric from that regard. We also see jobs figures, including today's weekly jobless claims, actually pretty strong. And some of these data are very conflicting, especially when you think an overlay where monetary policy is potentially headed along the way. That's the challenge and the reconciliation between the market belief and where the Fed is ultimately going to be in that destination. Markets are never wrong. They just reprice. And so we might find ourselves with that repricing one way or the other as we get further along the year. But what you do undoubtedly see is the retail sales being weaker, is the inflation metric.
Oh, man. I realized, because I went to the bathroom, I think I went during the speech, and now, man, I'm starting to get excited. I'm getting, earnings nervousness now. It's not even, I'm not nervous. I'm just, I feel it. I feel like the game is about to start. It sucks, though, because we got, 2 hours still, but, bro, this is it. The first big earnings of the year, Chattadonia. Are you ready? Are you ready or what? Are you ready or what? Oh, man. It's a good kind of, I feel like we about to go through the tunnel. You know what I'm saying? We're going to see like fireworks. That's it, Netflix. And then I can't wait for all the people to pop out. They be like, I told you Netflix sucks. They don't got anything. And then I'll be like, I told you I bought Netflix. I bought 1,000 dailies. I forgot to tell you about. I told you it's the best stock in the world. It's stock. Oh, dude, just right. You know what I'm saying, bro? Oh, that's it. Right when the results come out, you know, everybody turn into a genius. Oh, I'm telling you, in 2 hours, you're going to have a lot of geniuses. Just get ready for it, man. It's going to be excited. It's going to be excited. Oh, man. First of the year. First tech stock, bro. Oh, man. Am I ready? Yes or yes. I'm ready, man. I don't know. Anything can happen, bro. Oh, man. That's how it is. I love it. I love earnings, man. I love it. We own Netflix. Yeah, man. We good. Either way, I don't think our long term should be threatened unless they like absolutely do abysmal. Oh, but man, it's gonna be good. Put short 1 share, bro. 1 share, 2 shares, 3 shares. That's good. I mean, we made $15 yesterday. I have $3 of gains now. I think we could thank Leo for that one a little bit. You know what I'm saying? So it's good though. But you know, if you want to make small flips with no premium, I thought I was gonna be able to do a lot more. I said I should have sold out the first shares here, went short, but then it's just like it really has stayed within this range all day. I have 6, 3, 20, 25 call. There you go. You do get bragging rights. There you go. Either way, man, it's a battle. It's a battle. Netflix web traffic is up. I mean, either way, I think we've seen a lot. I think, was it Netflix? I think last time I heard that they dropped 30%. So you got to be careful. Just really, because again, you know, Wall Street, the algos, the analysts, everyone's going to be looking for something very specific. They want those paid ads. They want the guidance. We want to see some level of metrics on the ads and how that works. So we will. This time last year, was it this? Yeah, I don't want to. Yeah, you got to be careful, man. Yeah, chill. My bad, man. I feel you. I would love it to go up for the long term, but then we'll see. If it drops, though, unless it it has to really get killed for me to buy more, though. Because, again, we got a good price. That's it. That'll take us through the whole year, I think, with our Netflix. Because then let's say it drops 20% every earnings, we'll go back to break even. And then we could sit there, break even at that point. If Netflix does drop like that, I mean, just get ready for the rest of the market. Well, yeah, it will be a very pivotal one. We still have a lot more. This is still the pregame to earnings. That's what you got to realize. You got Meta still in 2 weeks. Next week, you got Tesla, Microsoft. We get a lot of the Dow components. So there's the rally. Apple hitting a new high. Yeah, we are up 40%. I think just under, right? Just under. Oh, shit. So on the YouTube account, we're up 47%, the small one. And then on the big one, we're up 35%. So we got some cushion. You know what I'm saying? We got some cushion. So all you need. So I think we'll be good, man. Netflix is small, but it is important for the market. I think it is. I mean, at the end of the day, I got to bring up a good friend of mine, Snapchat. Just don't forget, Snapchat single-handedly destroyed more market cap than it would ever be worth ever. That's all. That's what I've witnessed last year. You just got to be careful. Netflix is a small company in terms of big tech. It's still pretty large, but you just got to keep in mind that it's emotional. You know what I'm saying? They're going to, whatever happens with Netflix, people are going to think about Apple. They're going to think about Disney. They're going to think about this. Then people are like, I told you, earnings compressing. I told you. You see, the geniuses will all come out afterwards. So it creates a lot of emotions. So that's where I kind of stand on it. Consumer, well, it is a consumer discretionary, you know, not everybody needs Netflix. So I don't think we're at this point, Netflix isn't going to tell us as much as about the economy. Even though it's a discretionary, as much as people just want to see, does big tech still have the ability to grow, especially Netflix? How is their spending going to be? How are these pivots to new, financial avenues, new segments, their ad spend, all of that? That's what we want to figure out. But at this point, there will be more of a focus on the Dow names or anything consumer discretionary, because that'll tell you a little bit about the economy. But I don't think we're going to get that out of Netflix today. Let's go. We're gonna get, if we don't get to a high here, we're gonna die. A lot of bids. They actually broke through that. The volume's decent. It's not like high, but it's not low. We haven't even touched 39.20 once. If you do get past 39.20, that 39.30, 39.28 from yesterday. But we'll see, man. We still got an hour, 45 minutes. Yeah, man. We got a lot of time. We got a lot of time. There's no way to maintain huge growth and have layoffs. We're going to find out, but did they really lay off a lot? Or did people hire a lot? But that is still the question we need to see. And in general, I mean, I forgot who said it, but like somebody said it the other day, but it's like big tech is like notorious for cutting too late. So like the question is, have they even cut enough to make an impact, right? Otherwise, you know, if they're just starting to cut now while growth is already slowed down a lot, is it going to have an effect or not? So we are going to see. We are going to see. Supreme Court says team unable to identify person responsible for what? On leak investigation? Oh, that's probably for the Roe v. Wade. Yeah, we are going to be here. We're after hours. Usually Netflix comes out right away or within like 5-10 minutes, and then the conference call isn't till like an hour later, I think, or 30 minutes later. Party City, just be careful. I mean, I think a good example of anything, just right now in this environment, the reason why I don't like a lot of these hype plays, especially if it's like bankruptcy, is, I mean, it's bankrupt, but I think a good example of just like what I'm worried about and why I caution all of you to wisdom. Supreme Court says unable to find person responsible for the leak. It's just like right here. Just don't forget the first day of the year, SI went up 50%. Then the next day it dropped 50 or 70%. Then again, another day where it shoots up almost 30, 40%. And then 2 days later, you're back down. So it's a game of musical chairs. If you're willing to play hot potato and you're willing to play that game, feel free. But I just think all of those I would be careful of. I'm not really in the game like EA. Nigel, we'll see, man. Nigel he still hasn't got his medical requirements fulfilled. And then Nigel, I mean, we'll see. We'll find out. I'm in the game like EA. Balked. Oh, balked candle. Whoa. There you go. Balked is moving a little bit bigger. Crypto snaps 14-day winning streak. Okay, come on. What do you have for me? Shout out to fellow lurkers. Amen, man. Shout out all the people ready for earnings. Ooh. We have just Netflix today. I think there's is there one more? I think it's just Netflix. There's a PPG and SIVB. That's it for the rest of the week. There'll be Ally in the morning and a couple of others, but this is really all about Netflix now. Netflix will be the good one. U.S. probing reports of American detained in Russia. Oh, that's not good. CJ and the biotech. We called that one earlier. Oh, there's your catalyst. Did it get news? Yeah, right now, 1421, accelerated approval of Tukasa. Oh, I think it popped on the earlier one. That one could be decent. Yeah, FDA approval, accelerated approval of Tukasa in combination with tucatinib and trastuzumab. Colon cancer. It's kind of popping decent. All right, I grabbed 25 shares, 132.29. Okay, they actually gave me a decent fill for a little bit. I'm down for a flip on that one. SGen FDA approval. It's only up 1%. That literally, we were looking at it earlier, and then now that news is just coming out. So we'll see. Otherwise, I did 25 shares though, because just in case if it drops $3-4, it hasn't really moved. I won't get clapped too hard. Incoming flip. What if? Come on, I want to see it to move, though. I want to see it to move. I think any one of the approvals was pretty good. It was like 134, 135. I don't know if they have earnings soon. Caller put. That one was just shares. 25 shares. Again, I've been doing the shares a lot. Even our Netflix, man. We got $40, bro. Oh, man. See, small Netflix shares. It's small, but we stacking with it, man. New high on the market, too. 2 shares. See, so I'm down like $15, but, you know, if this was $100 or 100 shares, it'd be a lot bigger, but you keep it small, you're good to go. You keep it small, always playing small on the shares. Shares is actually a pretty decent way to even go about flipping the news, just because you don't have to deal with, again, any of the IV, and it's just really about dollar for dollar price. See, so I'm already down $1 per share, but $32. Not anything detrimental. Now, Barron's article. Netflix is breaking out to highs now. It's still down 0.83. Market has some to go. This is the high. Again, watch for like 326 on Netflix. That is like yesterday's price. And that's like kind of the middle. Maybe we'll stop at like 325. I don't know. Doing decent, though. Why are we running? I think just Lael Brainerd didn't give anything bad. He kind of said some bullish things, but that's about it. And then now I think we might even be trying to fill the gap here a little bit. And then again, earnings. People getting ready for that. Apple's even hitting a new high, but it's chilling out every time we hit the high. Like you're getting these big runs leading into the high, and then right when you hit the high, it's lasting for like 10 seconds. And then that's it. Oh, come on, CGen. MA. MasterCard. Bro, I wish I got a Discover in the morning. That one was ill. And volume is low. There's low volume, and you're playing with everything else. No Netflix YOLO. I'm just playing small shares to flip on the way up. We got like $2 a share for now. And then we go from there. Melly, I've been calling that one out. Melly it moved so much at the beginning of the year. I've not been a fan. I'm like, dude, this thing went 800 to 1,000. They're holding decent, though. Higher and higher lows. Indeed. I mean, if this could hold up, if we could actually get a breakout, I just really think SPX just fill the gap and then we'll chill. Seagen is FDA accelerated their approval for one of their drugs. Colon cancer, apparently. I don't know much about it. I remember seeing it a couple times. Jay Alt bring it up, and then that news just came out, and then it was only up like 1%, so I figured, hey, could be decent, but I made sure I kept it small in terms of shares. The gap down is 328, 329. That's where the SPX closed yesterday. Well, this was the high yesterday on CGen, like 133. It was up to like maybe 135. That wouldn't be bad. Oh, Kathy likes CGen? Ah, young Kathy. Bullish Netflix. I'm bullish in terms of like team spirit, but I don't know what's going to happen with the earnings. I think it's pivotal. And again, I was expecting a pre-earnings run-up on that. I was willing to bet some money on. And again, by playing it small, it's not bad. I was just going to, typical pre-earnings strategy, but I don't really think there's anything pointing towards up or down on it because they did guide up, and this is one of their worst quarters. So that's the part I don't like about it. But the part that will be good is that those new ad tiers, it could pretty much pad the stats in terms of paid subscribers. So that's going to be it. And then there's a chance they give a lot of new guidance. So there's good and bad to the report. It's pricing in 10%. It moves 11% on average, but hopefully you could see there's a couple pieces to the pie, but it's very hard, at this point of the year, everything else to say, there's nothing that gives me extreme confidence on either direction. Green light, almost. You're above 39.20, so actually, if we could hold that, but if this quickly rejects, no green light. If it holds, it's good. I mean, Netflix could lift you up a decent amount, because remember, Netflix is still guttered. They were the underperformer. And then Apple is the one outperforming. They sandbagged. I don't think they did. I think they went up because they gave solid guidance. So that's why I'm like that might end up hurting them this time. But I think they reverse sandbag. But then again, they could always just come in with good guidance, even if they don't do that good this quarter, which is kind of usually their first quarter mantra, fourth quarter, first quarter type beat. So we'll see. Yeah, if Netflix beats, the market is going to get hyped. I think people will just feel, you might be able to bring in some of that euphoria or optimism back. The analyst range is very wide for Netflix. It's like EPS is between 30 cents and 60 cents. It's like 100% different. Let me see if I could get it for you. Barclays. Yeah, I think 42 cents is the average or something. They said they won't be adding subscriber info. That might save them. But then, if you only look at the revenue and shit, it's going to be bad. The revenue will be decent this quarter, but total net profit, free cash flow should be awful. Just because fourth quarter. And then the margin is going to go down to 4% in this quarter. But then, again, how they guide. So you're doing it again. You barely get above the high. You're setting these highs here from that low. And then we still got we have an hour and a half left. So Viva see, my friend. VWAP time, maybe. VWAP has actually climbed up, though, since Lail. That was the thing. The first Lail rip actually started tilting VWAP up. But now you're back almost to opening levels. Netflix, yeah, I think they have cut a lot of jobs. Their ads are probably shit. My concern is how do they report it? You see, are they going to report revenue? Is it going to have its own segment? Are they going to bunch in paid subscribers with ad tier subscribers, which they most likely will? And then, they're going to have ways to game it, but really, though, when it's all said and done, you know, next quarter guidance will be on the money. And then again, people are going to want to see, you know, are they saving money? Are they still burning it? And then, you know, the growth story. Just remember, when nobody wanted Netflix, it was because in middle of last year, everyone said, that's it. It's done. Netflix is not growing. That's it. Everyone thought the growth story was over. So if you viewed this like a storybook, right? And it was like Netflix was the little boy, and then he grew up. He became Hercules. He took over, and then one day they slashed his Achilles heel. He was no longer able to grow. Once he was a king, and now he's a peasant. What will he do? All the townspeople said he had no more left in him. So then they're like, so what happens on this one? After he finally wins like a semi-pro battle, he goes to the Pokemon, the Pokemon arena. It's not like he's going against Team Rocket, but like he just like is able to defeat one of the smaller Pokemon trainers and people get excited. But now what happens when he faces a formidable opponent at this next earnings? So that's what people are going to be looking for to see, is the growth there or is the growth over? So yeah, a little bit of, I guess, yeah, that's how it is. Oh, you're going right back up. Bitcoin moving. That will help the market go up, even though Bitcoin's already leading, but for risk assets. I wouldn't say this is the final boss, but this will let us know. It'll let you know if his growth story is over or not, or at least we'll get a better idea compared to everything else we were just dealing with. Okay, Web. FOF on the high. What's a FOF? An Apple. No. I won't sell laundry. I sell the vintage gold chain for the house stuff. Hey, go into the house. Let's go into the house. That's good. Are you almost done with that too, right? That's going to be exciting. I like WBD, but I would never buy it. So I got it because of the AT&T spinoff, but I don't think I would have ever purchased it without that. So we own it in the long term, but that's just like free spinoff shares, but I'm not really like, yeah, like, woo. But I think HBO Max is compelling, but until we actually like, once it starts like really ripping, then it'll be good, but that's about it. HBO Max is quite clearly the best out there. I mean, I haven't really heard anybody say HBO Max has bad shows. That's the good part about it, but I don't know if it's going to get to the size of Netflix, but I think they're good. TikTok ban hype again. Meta just to 2.8 today. Dude, that was our chance. We had the chance in the morning to cut out, but no. They don't have a lot on there, yeah, but the shows are fire. Do you watch ads or do you pay to watch ads? I mean, remember, the Netflix paying thing with the ads is all new. That's what we're about to find out here. But, the other like 200, 300 million subscribers or whatever, they're all paying without ads. So that's why this is such an interesting story, because we're going to see, does it get better or not? You just hit a new high on the market? Habibi. Oh, yeah, 39.20. We're actually going back up here. Again, Meta's leading pretty nice. It is doing decent. Velma is on HBO Max. Yes, it is. I know because I saw it there the other day. But I didn't watch it. I didn't know. Is it hype? Is it a hype? Should I be watching Velma? I ain't never seen. It's vile. What do you mean vile? What? Micron going up. Yeah, 0.82. It's got nudity. Isn't it a cartoon? What? Isn't that like hentai? What you mean it got nudity? It's a cartoon, dog. Is it disgrace to Scooby-Doo? I think both right and left have agreed to cancel it. It's in your face trash. No. I didn't watch it. I didn't know when I was scrolling through. I wasn't like, yeah, let me watch this Scooby-Doo cartoon. But it got rated the worst movie ever. Wow. Maybe I have to watch it. That seems like it'd be comedy. Netflix. Come on, Netflix. It's sexual. It's Scooby-Doo. I don't like any of y'all. I have too much of imagination. Y'all telling me the Scooby-Doo cartoon is sexual. There's nudity. And all I could think about is a dog in a cartoon. I'm like, where is this going? How does it even get there? Nah, bro. It is sexual. No, what? How? What's Scooby doing? There's no dog in this one? Okay, well then that eliminates one. So I was like, this is probably sick as fuck then. I was like, y'all got some bestiality in this mixed in with the hentai. This is way too much for me, man. I need to go read my Bible again. Hold on. Okay, I think I have to watch this though now. I just want to see. Yeah, what's Scooby doing? That's what I'm saying, man. Hold on. Oh, it's an adult cartoon. Okay, so it's not for kids? Or is it still for kids? Because I don't know how they do things nowadays. You better than that? Nope, you misjudged me. I'm just saying. I ain't better than anything, That's how you fall into the ego. And that's how they get you, you know what I'm saying? Otherwise, you want me to be like, you better than that, Josh. Why are you spending your time streaming? Why are you better than that, Josh? You better than that. So you got to watch out for the you better than that logic. That's how they hit you. Your 10-year-old saw it and you watched it and you said, WTF? I think my question was valid. Is it hentai? I think that's a valid question. I think I feel like the chat would know. I feel like some of y'all into hentai. Y'all weird, but that's cool, man. I'm not judging you. I'm just saying I feel like if you play video games and then some of y'all down with that. So I'm like, I don't know. I wasn't down with anime at first, but shit, shout out One Punch Man. Oh, you gonna correct my pronunciation on that? Okay. Exhibit A, friends. Wyden urges Supreme Court to uphold precedent in Google case. Yeah, One Punch Man all day. It's pronounced like Thai food. I don't know enough about this. Attack on Titan. I think someone told me to do that. I only wrote One Punch Man. That's it. I'm going to go watch One Punch Man again. I miss it. I don't think I've got my girlfriend to watch One Punch Man. She doesn't. She's an anime hater. She's not a fan of anime. Every time I talk about One Punch Man, she think I'm really weird. And I'm like, I am weird. You know this. It's okay. Watch Chosen. Capital One eliminates more than 1,100 tech positions. Bro, Chosen, the Bible movie's good. I haven't finished it yet because I know how the story ends. But like I think I'm on like episode 2 or 3. It's actually really good. It's like a Game of Thrones visualization of the Bible. It's actually like, it's a good film. Like even if you're into movies, it's a much more entertaining view on like the Bible stories. But I'm down with it. It's just great TV, bro. That's it. It's on YouTube and it's on Netflix. I think it is on Netflix too. It's called Chosen, I think. But it's like actually like it's the most entertaining like Bible version or Bible, like it's like it feels like even if you didn't know it was about the Bible, you would watch it because it just like it feels like Game of Thrones type, like it's just set in the old days. The way it's much more entertaining than any other Bible thing that I've ever watched. So it's good. I haven't finished it yet. I think I'm on episode 3 or something. It's not anime. No, it's not anime. It is not Superbook. Is it called Chosen? I think it's called Chosen. Bro, Apple's ripping here. Netflix gave it back up. Come on, Netflix. And then Meta's going. Google. Bro, you're only down 0.25% now, so we're really close to filling that gap. It's called The Chosen. I mean, I feel like if you like Game of Thrones, you might like it. Yeah, it's like an ancient medieval drama. And then but it's about Jesus, but it's not like, no, it's not Bible hentai. Stop it. Go watch Velma. Capital One affected employees invited to reapply in firm. Yeah, high production, just entertaining. I've never seen the Bible story represented like that. That's what I was like. It's pretty good, man. It's pretty good. Like very entertaining. They fired people at Capital One in the tech position. So as long as you're not a tech position, you're good. Oh, Boeing ordered to appear at hearing for MAX 737 victims. That's awkward. I don't think it's going to have an effect, but that just came out. Unlimited time off. Nflx is still down. I know the solar ETF still clapped too. Damn it. I lost all my I have $40 on Netflix. That would have been nice. $60. Netflix, come on. What are you doing, man? You're supposed to have actually we still have an hour 15. I'm just getting too excited. I thought we only had 15 minutes left. I was like, woo! We have an hour and 15, you guys. She clapped me with the she hooked me up for a little bit. Still got Santa with Powell on the thumbnail. I do. I have everything. I honestly have way too many pictures of Powell. It's kind of awkward. I even have I have new pictures of Powell. I got like computer generated Powells. Like I made up my own Powell. Like you see what I'm saying? I got different versions of Powell, dog. Like, you know, I went real deep into the Powell rabbit hole. I started designing Powell myself with the help of some other things too, you know. Like I got mad, dude, I'm telling you, I got Powell, bro. Like look at that. That's not Powell. That's a new Powell, bro. I got my own Powell. I was gonna call it Powell Hentai, but y'all gonna misinterpret that. But you know what I'm saying. I got Powell everywhere, bro. I got Powell everywhere, bro. That look like Powell. It looked like Powell if like he was a super villain. You know what I'm saying? Come on, stop playing with me. Like, you know what I'm saying? That's like Powell if he worked for like CNN. That's like CNN Powell. Come on, you can't stop hating, bro. Look at that. That's like Powell. You doing? He got the jawline, bro. Look at that hair. He already got a killer hairline, though. You already know that about Powell. Yeah, man, I got you. Is Powell on steroids? Whoa, I've never really thought about that. That's a crazy thought. Like, imagine if Powell took steroids, but then, like, you'd have to factor in, like, the real-world effects, not only on his body, but then how emotionally he would react to things. And then, like, Powell just starts doing steroids. He gets super ripped. But then every time they ask him questions, he starts having, like, Powell-type, steroid reactions. You know what I'm saying, bro? Oh, dude. And then the world, like, imagine that. Then that's a whole different timeline. Anyways. J Powell hitting deadlifts. J Powell, man. Good guy. I hope J Powell knows that I love him. Like, you know what I'm saying? For all the times, like, I've titled videos, like, J Powell's crazy. And, like, anytime I, like, put his face on something, I really hope he knows how much I respect him. Even though he lied about transitory. And it's okay. It's not okay, but it's okay if you get what I'm saying. Like, I don't know. I hope he knows. I hope I don't cause any, like, I hope Powell never, like, scrolls the internet and just sees anything and just like, man, screw that guy. Because, like, I hope I don't make him feel bad in any way. Bloomberg talking about Netflix clawing back gains in 2022. Uh-oh, let's hear it.
Fast forward today, we have 60,000 people. And fast forward today,
150 million they didn't get for foreign exchange. So if you roll through 23, which flattened down on strength of the U.S. dollar weakening a bit, that's going to be right to the bottom line. So watch out for that one for those looking at estimates.
Right, that's going to be an unexpected tailwind for the fourth quarter. What about spending on content? We're looking at, $17 billion that Netflix has earmarked in cash for content. Is global replication kind of the way that it's going forward? A South Korean version of Money Heist. Is that the most efficient way for it to spend that budget?
So they've been about $17 billion for a few years, and they're expected to be at those levels for the next year or so.
I think that's the content.
They probably get more out of their programming than anyone for every billion spent. And it's at local country with the opportunity that it could be scaled on a global basis. Having they're so far ahead of their competitors with a technology platform and distribution that is able to really make those kind of incremental gains in terms of who watches their programs. It's really powerful, whether it's a program from Turkey or Squid Game from South Korea, and a great lineup. Part of the challenge with churn in this business is making sure that you have a continual rollout of great programming. And Netflix has done that totally organic. They haven't done this through mergers and acquisitions.
Right.
This is the same management that's been in place for 10 years. No shareholder activists. They can grow organically. That's what makes Netflix the most attractive in this space.
All right, Ken, always great to get insights out of you. All eyes, of course, going to be on Netflix after the bell tonight. Ken Leon, CFRA, Director of Equity Research. All right, a lot more coming up here on the program. We're going to talk.
Yeah, we'll see. You think they got transitory wrong? I know I've thought about that, but like I said today, I think Powell is way too smart. So that's, and I respect the guy, but I think he knew. I don't think it would have been the best thing to say at the time. So it's like, I think he could have caused more problems by going with the reality of it. It's kind of like if you knew the ship was sinking, would you really tell everybody, yeah, bro, we're down, bro. That's it. You wouldn't want him to panic to it, if there's still a chance you could save it. But I think he's too smart. I think he's way too smart, and I feel like wait till you watch Powell. Like when Powell is out of office, just wait till you start seeing what he says about policy. He's like one of those guys. You know what I'm saying? Like how like you'll hear from Larry Summers and like Ben Bernanke and all these guys say stuff afterwards. Like I think you're gonna see some dope comments from Powell when he's not in office, and I think the guy is extremely talented in terms of like what he understands about money, the economy. I don't think he's as dumb as some people that have been elected. Like I think like if it was like NBA 2K, like he'd be like a 90 plus overall. Whereas like Yellen would be like a solid 68, maybe like a 71. But with like, no, I don't think she would have like sharpshooter or anything like that. You know what I'm saying? Points transitory that we didn't see. I think it was too obvious. I think he knew. You know what I'm saying? Like I think he knew. Yeah, Yellen have no badges at all. But you know, Powell have a couple of badges. You know what I'm saying? Like Powell actually, like, dude, Powell, like, just great defender. You know, like he's good under pressure. Like you know what I'm saying? Like Powell, bro, dude, that's a solid. Like you would be like he should be a 97, 98, but like, you know, to be like realistic, he's like a 91 or like a 93. You know what I'm saying? They didn't want to make him too OP, but nah, he's too smart. He was just too smart. Like if I would equate Powell to like borderline Muhammad El-Arian. And that's why I'm like, there's no way. Like even Muhammad El-Arian was calling it from a mile away. I think it was better to show a unified front. And I think, again, the political pressure made sense why he played the transitory card. And then if his plan was to raise the rates, you know, faster than anybody, I think that's what kind of, you know, balances it out. But I do think Powell knew. Powell knew it wasn't transitory, but I think he had to say it was transitory for whatever, you know, greater good it would have caused. You know, word to Sam Bankman, I guess. I think it would have been better for them to lie because entrenchment would have been worse than getting called out for being wrong. Yeah, I could agree 100%. You simping on an MK Ultra plant? Dude, come on. It's Jerome Powell. I respect finance. You know, and I know some people are good at finance and not, but like maybe Janet Yellen, but Powell, like, just remember, Powell was a figure before anything, more or less, but like Lil Pump is a plant. Like, I don't think Jerome Powell, but just the fact is Jerome Powell did what. Yeah, again, I love what Level 18 said, just quite simply. I think it was just better for them to lie or to, you know, to say that rather than, you know, having inflation be entrenched. I mean, you know, all without sounding any way, shape, or form, like logically speaking, I think that is a solid answer. Where it's just like if Powell didn't say transitory, inflation would have been entrenched a year ago, and that would have been way bigger of a mess than saying, okay, we were wrong. Here's 4.5% interest rates in 12 months. You know, so he's there. He's still working, but I don't think he's like. I don't like watch. Just watch when he's out there. Powell's gonna live a nice retired life, and he's gonna go back to call it whatever it is. I mean, they did have early intelligence about the Russia stuff, but overall, I just think, just quite simply, you know, without getting too deep or assuming too much, you know, based on my premise is Powell is too smart to have ever thought it would be transitory. And I just think there was a utilitarian decision that it would be better to say it was transitory than not. And again, I think inflation getting entrenched is that reason. I disagree. It's okay. Even if it's okay to disagree with that. That's my take. That's my hot take for the day and maybe for the year. But I know he knows. That's it. I don't know. Deep down, Powell he knows too much about that. Even now, even with what we're going to experience, I don't trust Powell, like in the sense of I do kind of believe the bond market a little bit more, but like I don't think the guy he's not a dummy. That's all. Even at the end of the day, I know the guy is smarter than I am, and I mean I don't even think I'm that smart, but I do think that Powell he knows a lot, bro. He knows a lot. And that's why I think there's no way in hell he thought it was transitory. But did he say it was? Yes. And I think there was some reason for him to go about doing that. But Powell knows his shit. And that's why I'm like, come on, this guy. And he knows even psychology. Like, he knows the psychology of markets and sentiment. I think Boomer said that early, and I think he's really good at that too. Why he waited? Because then they had to play the transitory card. That's it. That's why he waited so long to tighten. Because he had to say, oh, well, it's transitory, man. Ubed, yallah. He didn't hike rates sooner because that wouldn't make sense for transitory. If you were like, oh, it's going to go away by itself, but let me raise rates, that would have gave it away. But then, again, you have to realize Powell raised rates faster than anybody in history. Again, like, what's his name? Like, Volcker went crazy, but Volcker, the rates were already high. They already raised the rates and all of that. But the way he came about it was very aggressive afterwards. And that's why I said I think the damage of being wrong in that sense would have been way less than what Level 18 said about being entrenched, which I could firmly agree with. He could have said it to give the Fed. The thing is, it's like, remember, I've talked about it, and even Powell has brought it up. There's a psychology to inflation. You got to realize, if Powell just said, nah, man, inflation's not coming down, psychologically in the minds of every American, every investor, inflation would be a lot worse. I hope you guys can realize that. Musk directed Tesla autopilot video saying car drove itself. What? That's a headline? Yeah, that just came out. But he knew. But the psychology of it is the crazy part. But that's why I like the guy. I like Powell. I still respect him, but the full analysis. That's why, I mean, even then, I'm telling you now, even if if the economy is about to crash, Powell, in the sake of psychology in the market, he's not going to tell you until it's too late. Like, it's the same thing with transitory. You see what I'm saying? It's like, I know these guys know stuff. I know they're ahead of the game, and I look for broader factors, but I'm not expecting them to tell me exactly, I'm expecting Powell should be late on inflation, right? He should have been late to raise the rates, and he will be late to cut the rates too. So, but that's why it's like, you don't have to follow them per se, but it's just kind of understanding the nature of it. But I know Powell knows. I know he knows. I'll get a good workout, baby. Let's go. Najee, Lending Tips emailed you. I think we're going to need to list that property within the next week or so. So if you want to do it, get back to him. And let's get that popping. U.S. red meat production fell 6.6% in December. And now we're chilling. Funny. Yeah, I don't know what happened with Uber. At least it's up. Bro, it was up 3-4% that one. We're going to talk. All right, let's get it, baby. Let's get it. CJ, I'm still in that one. I'm down $6. Again, it's Power Hour, actually. Power Hour in Netflix. Taking Disney for Netflix, not a bad strap. Netflix still, or Disney still below 100. Up. Am I interested in an off-market house? Of course. Sir, honestly, that's like the best question I ever get asked. You know that? I love it. It's actually great. I would love an off-market house. Yo, Boomer gave the AI a speech, and he said, what's it called? He said he gave him the AI speech about Powell doing steroids. So this would how speech from Roid Rage Powell would sound. Good morning, everyone. Thank you for being here to help me discuss how to better control interest rates. It's no secret that interest rates have continued to increase over the last few years. Controlling this increase will have significant benefits for our economy and its citizens. The Federal Reserve and I are working together to make sure this increased and managed appropriately. Our solutions may not only be rigorous, but they also must be achievable. We must not only be mindful of our expectations, but create and have an open mind. I understand times are tough and money is tight, so it is essential that we ensure that this increase, if any, is not only sensible but appropriate and necessary. As Federal Reserve Chair, it is my job to make sure that increase is managed reasonably. I plan to do this by employing a multifaceted approach that incorporates all necessary tools, including setting institutional goals, discussing recommendations on policy changes, and regularly monitoring our progress. My team and I are positive that solutions will effectively address our current interest rate and improve financial security of our citizens. This is why I've been taking certain measures to make sure that I'm able to do the best of my job for years. I've been using steroids to make sure that I am able to work harder, longer, and more efficiently, even when times get tough. This has been extremely beneficial for our country, and it has allowed me to better manage this current interest rate situation and manage our economy's growth. However, I am well aware that consequences and risks associated with my regular steroid use, I must remain vigilant to make sure that I am not overdoing it and risking my health. As I continue to take necessary steps to ensure that we successfully manage our current interest rate situation, I will also remain cognizant and cautious of my regular steroid use. Thank you for listening to my thoughts and concerns. As I continue to work tirelessly, I grow increasingly more... Oh, where'd it go? Increasingly more... increasingly more frustrated by the lack of progress. It sometimes feels like no matter how hard I try, I can't get ahead of this issue. I can feel the anger boiling up inside of me like a volcano ready to erupt and spew forth great amounts of rage and aggression. I can feel the tears welling up in my eyes as I overcome by my emotions and my body shakes in rage. This isn't me. This isn't something I can control. My anger intensifies. My thoughts grow darker and darker. I can't help but feel like I'm losing control. I can feel a hatred like never before. All I want to do is lash out and destroy anything and everything that stands between me and what I'm trying to do. Thank you. Bro, it started off so good. It started off so good. That is not, it's real, but it's not real. That's what an AI created if you asked him what a Powell speech would sound like if he did steroids. As everything goes dark around me. Yo, Powell, chill, dog. Bakkt is still going. That's up 10% since the first one. We could pull up the levels. Stocks pair losses as dollar fades on Brainerd. You're right. Again, I think we need to get above 39.20 and then go from there, but that's it. And then Netflix had its little pop. A little pop as we start to go down. Maybe it does that. Netflix buys rights to horror film Run Rabbit Run. Why are they announced? Just wait till your earnings, bro. Morgan Stanley raises net. Is that right now or earlier? I have the what's it called? The analyst recommendations. I have all of the analysts. So like Barclays, actually here, I'll give you the recent ones. Citi gave the most recent upgrade on Netflix, buy target 315. They did that today. Phillips Securities, they're not even ranked. They gave a 346 target. Huber Research, overweight, 325. Again, these are all today. Morgan Stanley was yesterday at 300. They're equal weight in line. The latest one, Goldman Sachs gave them a sell with a price target 225. And then Benchmark gave them a sell as well. And then Morningstar, some people haven't updated their recommendations in a while. Beating low estimates that streaming is very saturated. Netflix will be the one to be hurt most. Well, that's what that guy was just talking about on Bloomberg. Even though the streaming is saturated, Netflix is out of puberty. So even though you would think they would get affected, especially in this marketplace, Netflix doesn't have to spend as much money as everybody else now. Even though they do spend a lot of money on content, it's there. But as far as their estimates, I feel like the estimates are high this quarter. They're just expected to do bad because it's fourth quarter. So this quarter, they don't even do that good. So let me see. Let me check where everything's coming in at. So this is going to be December. So like revenue is only going to be 100 million higher than last year, which is, and then it'll be the lowest revenue of the fiscal year for them. So 7.85 billion, the estimate, that would be the lowest revenue in the last 5 quarters for Netflix, except for September. EPS is going to be, this will be the lowest. So like even last end of the year quarter, last fourth quarter for Netflix, their EPS was, I guess it came in at 133, but it's now expected to be at 42 cents. EBITDA will be one of the lowest. This will be the lowest EBITDA on Netflix. So I don't know. Maybe it's kind of low, but I feel like they guided up a little bit higher last time. That's what gave them this boost. I don't know. Maybe they might be able to kill it, actually. Because I think they guided up, but when I'm looking at I think estimates are still pretty low in terms of analysts. So like EBITDA is the average. This is all based on the average, not what the company is there. But 575 EBITDA, but that would be the lowest. If they came in line, that would be the lowest EBITDA even for last December. Last December was 695. But then that was December 2021. So things were still actually good. I don't know why it says gross margin 30.9. I thought it was going to be 4. And then this will be the lowest. This will be half of their pre-tax income compared to last December. So I don't know. Even if they came in line, a lot of these numbers would be like 40% lower than last year. People, it's because they spend a lot more money during this time. So this is where they spend a lot for holidays and to get, they just do a lot of spending, and then this isn't their quarter. I think it could even be with billing and other expenses, but again, revenue is just slightly lower. But yeah, net income is supposed to be almost 3 times lower than last December. This will be 197 net income is the expectation. They've never, I don't even know the last time they've even done that. Yeah, bro, that's crazy, actually. This is kind of low. Bro, the last time they reported a net income, so the expectation is 197. The last time they reported net income that started with 1 was December 2018. So, yeah. I don't know. This isn't based off of the company estimates. This is based off of analysts. You see, so I'm giving you the average. The company, they have their own estimates. I don't know where they're at. Let me check. Where's the other one? Give me the damn filing, dog. Quarterly, there it is. What are you fetching, Habibi? Yeah, so here's their company forecast. So they're forecasting 7.7 in revenue. Analysts are saying 7.85. So analysts are higher than revenue. Where's net income? They didn't give a forecast for that? So analysts have that, but these are their estimate. Oh, net income 163. So I don't know. They kind of, that one's not too good, but maybe that's priced in. So analysts are expecting 197, and they've factored in 163. And then operating income 330. Where is that? I don't have operating net income. I have analysts are expecting 575. So this is their forecast. This is what they did last quarter. And then again, margin is 4%. Analysts are pricing in fucking 30. I said, I don't know about this. So that's something that could be good. If their margin doesn't absolutely plummet, that could be a bright spot here today. But again, all the analysts are actually higher than what the company even guided up for. And then EPS 36 cents. Analysts are at 42 cents. So this is the company's guidance, and I've read you the average expectations. But it does seem kind of low. But I remember people were impressed off of that last time, but none of it even seems that impressive. So swing puts. I would say maybe play it after. I mean, the best part about it, if you're willing to miss out a little bit on the first candle, I would just wait till the release comes out, and then, when it's all said and done, it's really going to be all about the follow-up for them. Europe and Latin America turn the World Cup. Tesla is abnormally chill. Damn, I went negative on it now. Bacht is still holding. Big dead cow. Expect the drop. I love the emotions. That's the beauty of it. Because if Netflix does good, people are going to get squeezed. If it does bad, it's going to get thrown right back into the gulag, and then it's going to be good. But that's why I think guidance will have a little bit more importance. Depends on economic outlook. You can sandbag at the right time. But if you do it when everyone is expecting a beat, it's clearly going to beat you. Yeah, well, that's what a couple of companies did last time. So it's weird because I think that guidance, this is still low, even for the company. It's low guidance, but it's lower than analysts. But then it's not like any analysts are expecting, a magic run up in Netflix all of a sudden. So I don't know. I think it's kind of tempered, more or less. The only problem is the stock is up so much since all of that happened. Enphase, all the solar names are clapped. Do companies ever sandbag during earnings so they kill it on their next one? Or would it show massive unexpected beat? Sometimes that's why they call it a sandbag, but like Level 18 said, it just depends when you do it. You can't keep sandbagging. Ask Snapchat. And then if you just do it if you do it in the wrong time, it will have more of a disastrous effect than not. You know what I'm saying? So, if you sandbag when the economy is bad and you're trying to, get ahead of the next quarter, it might just deteriorate confidence and then put you in a way worse situation. I think Netflix was decent. That last time, remember, they just had a huge beat last time. But then again, I mean, you see it. Everybody is very willing to write Netflix off very early on. And that, I think, worked in their favor because they ended up not doing that bad, but a lot of people thought they were going to be awful. Day of earnings. Netflix is down. It's actually dropped 3 days, and then the last time, this was their last earnings. The last time, because you had the October 13th, and the whole market was running, but they went from 215 to 250, 240 the day of their earnings. Yeah, right after, I think we should get it almost instantly. It's going to be fun. It should happen right after the bell or within 5 minutes. You'll get Netflix, and then the conference call gets released on YouTube shortly after. Whichever way the earnings is, it will be forgotten about next week. Wow. Hit them with it. Oh, man. You figure Tesla will be the worst. I like that comment, though. In a weird way, with everything going on, maybe. But then again, if they are able to do good, remember what happened last time. Right when Netflix had good earnings, and then the rest of the market dumped, Netflix just kept going up. So in a weird way, once it does if it secures good or bad, that could let it give it some immunity. Kind of like Survivor. They get the tiki. Right? So if they end up killing it and then and everybody else does bad, people will flock to it and they'll get to be the immunity card. But other than that, though, if it's not a big beat or a big miss, I could kind of agree. Everyone's just going to kind of turn it into everything else. I'm excited. There are 40 minutes, Chad. Do you feel it? Do you feel it right now? Do you feel the energy? Do you feel everybody? As good discussions we've had, I feel like you guys should know what's going to happen right when the data comes out. So we'll know compared to their own estimates and everything else and analysts. A lot could happen here. Oh, I really hope Netflix brings the whole market down with it. Okay, there you go. So that's a very positive one. Feel it, man. With all due respect. Nah, it's fine. It's fine. Yeah, I feel that's. It's just, he said, I hope it all dies. Kill it all. Let the strongest survive. Disney will dump if they do bad. Yeah. Bad earnings. That we'll get to find out. Oh, just imagine, dude. Imagine they do awful, and then it drops like 20%. And then everybody just buys it, and then it goes back to break even. How pissed off would oh, man. I would even get a little mad. I'd be like, oh, come on. I hope Ethereum gets my Ethereum long pumping. Hey, watch your mouth. I'm still down like 17,000. But I feel you. It's okay. It's okay. Don't worry. Maybe I'm going to join team. I hope Netflix kills everything. That's my plan. Buy the dip. Okay, we'll see, man. We'll see. Short Disney. Longeveron trial. You guys have been talking about that. I'm over Longeveron, though. Remember, they added a lot of shares since our first run with them. Yeah, they have the publication of final data from LPIS 1 trial. Netflix is going down. Let's see, man. See, make your play. That's it, man. I know. We're going to get a lot. That's why. Just be ready. You know, maybe everybody gets humbled. Maybe it just does nothing. They just take the premium, and then, like, it goes up, and then it goes down, and then it goes back up to break even, you know? Oh, man. Something's going down on earnings. Something. I don't know, man. I do not envy any analyst during Q1. Seems so uneasy. A lot of them are confident, though. I feel like, and there's some who've been doing great. So, like, a couple of the Netflix analysts, they actually are not too bad. Like, I think a couple of them have actually been killing it. But let's see. Number 1 ranked analyst for Netflix, Barclays. He's equal weight 235. So, but then his but if you followed that guy, you would have lost 22% last year. And then the only other people with rank would be Chuck Lee for Shanghai. He's a buy with a price target of 339. But his 1-year return, if you followed him, would be negative 36%. And then Morningstar, Neil Macker, price target 290. And then if you followed him last year, you would have made 46%. I bet you he just bought Netflix. Atlantic, he's number 7. Overweight, 336. But if you followed him, you would have been down 22% last year. JP Morgan, Douglas Anamuth, overweight at 330. And he updated his target 10 days ago, but if you followed him, you would have been 35% down. Here, there's only like a couple analysts that were actually positive last year. So out of a list of, how many is that? Out of a list of about 50 analysts, only 6 of them had a positive 1-year return. So that was Needham. And Needham, Laura Martin, she's at a hold with no price target, but she had a 55% return. Neil Macker, Evercore, Mark Mahaney, he's outperformed on Netflix, and he raised his target to 340 January 13th. He has 45% gain from the last 12 months. Timothy Nolan of Macquarie, 285 target, neutral. He would have had a 42% return last year. And then Christopher Cherblanc, Societe Generale, he's sell rating, 215 price target. He had a 36% return last year. And then Brian Kaft of Deutsche Bank, 350 price target. He would have had a 19% return last year. And then every other analyst, there's like some who are like one person was break even, then the next person was negative 8%, and then all the rest of them, the rest of the 50 lost 22% minimum down to 55. Let me see. Did anybody upgrade? Overweight. No upgrades recently. No recent downgrades. Most people have kept it the same. Netflix going down now. So they listen to the winners? Well, no. Only 10% of those analysts were positive in the last 12 months on their 1-year return. So, like, some of them got absolutely washed. Then you could, like, see their overalls. Like, yeah, most of them were losing 70 to 30% last year. So there's only a few winners when it's all said and done. Those are really the people who are probably like, yeah, buy it. That's it. Again, I that's what I was trying to tell some of y'all, man. Like, I hope you've recognized what we already went through. And that's why I'm like, bro, shout out to long term. If you're holding something that is even like, you know, decent right now and you did not get totally washed, like, bro, the best and brightest minds of the world last year, and I mean, that's arguable depending on how you view analysts, but they got killed. So, like, and then even the people, like, who are right in some areas, like, let me check, like, Airbnb. So, like, Airbnb, out of 39, 44, 42, 43, out of 43 analysts, only 1, 2, 3, 4 of them were positive that year in the last 12 months, with the average return about negative 30%. Man, Spotify is ripping. We'll see, man. Yes, I'm getting this from BB. This is just looking at analyst rankings on companies and then who is who. But Netflix was very interesting. $1.1 billion to the sell side. Did I misspell Netflix? Roblo, we're not allowed to do it. It's too hot, man. It's hot in these streets. Man, Netflix, now I'm down $20. I should have took my 40 when I had it. It would have been nice small gains. But you have about 30 minutes left on the dot. Not the year to be in speculation. It was just crazy. I mean, it was few and far between. Like, if you went positive last year, you were in a very small minority. 10% or less people, analysts, big places actually had some sort of positivity. And then if you were able to lose less than 10%, That's the other 10% minority. And then over 80% of like Wall Street, big banks. These are top analysts. You got to realize all these analysts are getting paid quarters of millions of dollars a year, if not more, to give these recommendations for some of the biggest banks with the biggest clients. These are people who are, you realize every single one of these guys has a, what's it called? They all have like, they all have like reports. You know what I'm saying? So like these guys all like, they have written reports on all of these companies. They have gone through, done calculations, done models. Like they have all like, they have written crazy theories as to why they have made their decision. You know what I'm saying? So it's very, very good. $250,000 is nothing. That's how much do you make? I'm sorry, I have to ask that question. I feel like that's a lot. Imagine if you get paid $250,000 minimum to just make stock picks, and then that's it. Don't even matter if you lose 70%. That's crazy. But these are, it's just like you have to think about it. They put a lot into this. I can't do well. A lot of people would have been able to do it. You could be wrong and keep it. I mean, eventually people get mad at you, but I mean, in this case, they did good. Is it well? A lot of this. I mean, that's why. Remember, I was telling you. I was like, dude, these Airbnb things were just crazy. Like even last year, the analysts. I think some of them are not the brightest, but they are. Like I respect a lot of them, and like, they get their positions for a reason. But I'm just like, how? You know what I'm saying? Like, how did you end up doing this? I'm trying to see if I could get one of these research reports for you. This guy's crazy. Talks about irrational human psychology at a professional level. It's a hard game. But I think even with the analysts, like you can't underestimate, bro, it was hard going against the crowd in 2021 because that's it. If you were an analyst who tried to like stick to like, no, don't do that. Like, oh, that's not a good thing. Like, you know what I'm like, you got left in the wall. Like you got left in the dust. It was actually crazy. So that's why like a lot of people kind of played the game of, I'm sure they had to find a way to justify going after stuff because if you're all of your peers, if the other 40 analysts, 50 analysts, if they're all like, yeah, this is a great growth potential, and then they recommend the stock, and then everything goes up 97%, they're like, well, see, there you go, and then you're the one who said, no, I wouldn't buy that. That makes no sense fundamentally. For a year and a half, 2 years, you underperformed by a big margin when a lot of people were like, okay, well, shit. Like, there's like, oh, Gordon Haskett, like, he's on Airbnb. No, let me see, like, dude, there's some people who just gave super low price targets on stuff and then they got out. Like, that's it. You got left behind. So there's definitely a big effect when that's all said and done. Yeah, that's crazy. I'm just looking at some of them. Then you see some of the other stuff they were in with. Pretty crazy. Oh, wait, I just found it. Netflix is going to be right after the bell. You'll get the release. Well, you have to I have to really search. I'm trying to show you some of the work they put in on it because it's actually wild. But hopefully you guys feel good about, maybe you could hold your own in the market and just remember what you've gone through, my friend. Remember what you've gone through. Enphase falls as much as 10%. Test January support. Spotify. Still. That one I'm mad about because I'm going to have to buy it higher if I want on the tax loss. Okay, I'm going to go to the bathroom. Follow me on Instagram at The Trading Fraternity. 20 minutes till the earnings.
For earnings. Now, all those tech layoffs that Romain just showed us could be good news for at least one industry. Bloomberg Autos reporter Gabrielle Coppola joins us now to explain. And Gabrielle, this is something you saw for yourself when you attended a conference earlier this year.
Yes, I was at the Consumer Electronics show in Las Vegas just a couple weeks ago. And a theme I picked up on right away was that all of the automakers were talking about software and how they were hiring or looking to hire lots of software engineers. Volkswagen in particular was very vocal about that at the show, but they are certainly not alone. Stellantis, which owns Jeep and Ram, the car companies are taking Toyota. They're all taking steps to try to move more deeply into software.
And I mean, and Gabby, this probably didn't come as too much of a surprise here. I mean, obviously, there's a lot of focus right now on the switch to EV and alternative vehicles, but more importantly, just how complex these cars have gotten. I mean, this isn't really a feat of mechanical engineering as much as it is now sort of a feat of software engineering.
No, that's absolutely right. And what you said is right on target because there is so much computing in the car and it's increasing to do things like more sophisticated software services and infotainment features or assisted driving. It's too much hardware in the car, so they've got to kind of reinvent it and centralize it, and that means they're ripping up the script and they're doing it with a lot more software integrated into it.
And Gabby, I'm curious though too, when you were talking to these folks and they talked about hiring, I understand that, okay, you got great talent out there and I'm sure they're going to offer some great pay packages for some of those folks. There's also an issue though of geography and location. You're asking people in certain circumstances to move from probably what is relatively cushy conditions in certain parts of California to other parts of America, and all of America is great, we should point out. But, there is sort of a lifestyle change that some of these people would be facing.
And winter.
Yeah.
Well, I don't think everyone is moving to Detroit per se, and yes, it is very grim here right now. This is not a good month to sell Detroit, but I think that when your skills are so in demand, I think CEOs are more flexible about what your work conditions are, and that's certainly the case with Volkswagen. I talked to the head of their software unit, Cariad, and this is a German company who does all their business in English, so you don't have to speak German to work there. And I think they do have people coming into the office, don't get me wrong, but they're more flexible. And also these software hubs for the automakers, they're global companies. Their hubs are all over the world. It's not just in Munich or in Seattle or San Francisco. It's in Portugal. It's, Germany. There's all different places. China.
Right. No, that's a really important point as well, Gabrielle. I'm curious whether these are entry-level.
Oh, no, Netflix. Oh, no, Netflix. Chad, what do we do with oh, no, Netflix now? China. Concerta Pharma rallies on buyout deal by Sun Pharma. CNCE. Oh, it's already up 20. And then Spot's killing it. CGen's moving, but bro, they put you right back to the level. Let it ride. I don't know. Well, we'll see. I mean, at $20 shares, every $10 will cost me $200. So even then, even on 20 shares, if it goes up 10%, you'll make $600. If it goes down 10%, you will lose $600. And then, yeah. So we'll see. It might be better. I might want to get out of it, and then we'll go. But it depends. I don't know what it's gonna do. I think it's gonna be a very pivotal earnings, and I think there's good and bad. I'm leaning for more. I'm kind of leaning positive, so they pad the stats. However, I don't really trust anything. Even going over all those analysts for you, I don't think anybody knows. Stick with the Netflix so my puts print. I got you, bro. I got you. I feel you. Thank you. I appreciate it. I appreciate it, man. I appreciate it. That's a flusher. The market flusher. Where's CGen? Some good biotech. SPX 3920 to hold up, but you failed it already. You're at 39. You break below 3910. Real test going to be 3907. And usually it flushes like 5 points at that point. Either way, God is good. I'm going to watch Emily in Paris. Wow. It's a good comment. There you go, man. You'll be good. That's a great comment. Yeah, either way, I'm going to watch Emily in Paris. That's a good show, I guess. I've only seen it in the background, but my girlfriend's a big fan. Big fan. I'm a fan of, like, I'm for team spirit in the sense, I mean, I have it in the long term, and I do think, like, I like Netflix a lot. I'm bullish in that sense, but I don't really have any confidence coming into this earnings. And I hope that's fair enough. I got a pretty decent analyst recommendation, too. Like, when we go through, I think my picks on the last year, I think my ranking would be decent. We bought Meta last year. I think like JPM, Abivai, and Uber. Where was it? I think we're actually up on that 2020 price target. So I don't know. I think I'm decent, but I have zero price target. I don't know. That's unfortunately. Price target 1 million. Was he on paper trade? Good work, bro. Good work. You either push it to the limit or not. I don't know. Netflix, man, coming into the end of the day. You're making the final moves. 15 minutes. 4 minutes till 10-minute rigged. What you gonna do? What you gonna do when they come for you? Rate hikes, rate hikes. Man, it's here, bro. It's here. SIVB, I haven't looked into them. Wayfair preparing to lay off 1,000 workers? 1 million workers. I thought Wayfair was actually outperforming. Oh, damn. Wayfair's kind of cheap now. What the hell? They got a little bit more downside left in them, but shit. Bro, Wayfair, they didn't even start. I guess they started off the year pretty good. Netflix is pricing in $30 or 10%. They already announced them. It could be it. So CGen gains as FDA incrementally expands cancer drug use. The therapy is already approved to treat a form of breast cancer. RBC analyst says the approval is unsurprising given the registration data from the Mountaineer program with highly positive outcomes, as the indication expansion is an incremental positive. And then Cohen analyst estimates peak sales of $100 million, calling it an incremental commercial opportunity. So again, an update there on CGen. The analyst just came in to tell you everything about it. All right. 10-minute rigged, 30 seconds. Get ready for earnings. Oh! Chad, what do we do? What do we do? What do we do? You excited? 10-minute rig. Let's see. They're kind of clearing orders, but we again, final 5 is usually better. I have my 20 shares of Netflix. I may want to hold it, but I'll get it break even really quick. I think it's smarter to cut out before. But I'm small enough where I'd want to hold, but we'll see. I don't want to lose my $15 that I gave there from yesterday. So we'll find out. 10-minute rigged. Oh, it looked pretty rigged right there. Decent amount of contracts turned into a net sell. 10-minute rig. 39.23 on the futures. 39.07. So watch out. Like I told you, around here, I'm pretty sure we flushed pretty hard at this level every single time. At least like 3 or 4 points. So order just got cleared out. Watch. Market on close, $4 billion to the sell side. Oh, wow. Oh, CGen, damn analysts. They're clapping it now. I had $30 on it. CGen dropping after that analyst comment I just read you. See these damn analysts, bro. These damn analysts. So here are some key estimates. Total subscribers additions. People are looking for 4.5 million. Revenue, 7.85 billion. So this is where it's supposed to be. I think that is net streaming subscriber additions. And then this is the total. So Citigroup's Jason Bizinet said the focus will be on fourth quarter subscribers, the forecast for first quarter revenue, the profit outlook, and any commentary regarding the new cheaper ad service that started during the quarter. Note to clients, he said the ad-supported tier was only offered in 12 markets, likely had a slow start. So people are going to be looking for these metrics here. They're getting some comments in now for it. That's cool. I didn't think we would have coverage this early. So analyst Mofin Nathanson of Netflix says Netflix has hit subscriber maturity in the United States, Canada, and Western Europe, and it now faces a number of strategic challenges that cloud future earnings and cash flow growth prospects. Among them, he said, are creating an option with ads that creates an attractive price point for consumers to sign up without creating a high degree of spin-down behavior, meaning subscribers switching from high-price ad tiers to lower ad includes price tiers. These analysts don't know shit. Username Colt banned me. I like that, man. God bless. I'm glad you're here, man. Let's go. Let's get. That's a very unique username. You ready? That's it, man. May your rebirth be special. You know. Amen, bro. Amen. Today you found out bad news is bad news. Good news is also bad news. Who would have thought? It's a tricky game. Still got a minute and a half. Clapped. Oh, you think that's funny? Huh? Oh, you think it's funny he got clapped? Oh, you're going to love this one. You're going to love this next one. I got you, bro. We're all about redemption here. Why you got to laugh at my boy like that? Come on. It's too easy. Bloomberg Intelligence, Geeta Ranganathan says things are finally falling in place for Netflix as a solid content slate that includes hits like Wednesday and Glass Onion. Oh, he listening, bro. It easily meet and possibly exceed guidance for $4.5 million. Quote, though investors will be looking for the color on adoption of the ad-supported tier, which debuted in November, we expect this to be a slow build that will eventually boost average revenue per user and revenue through 2023, especially when combined with the crackdown on password sharing. Stephen Cahill, analyst at Wells Fargo, says analyst comments about cracking down on password sharing will be the big focus of today's earnings calls. As Street better understands password sharing, we see it as an upside to revenue growth estimates, he said in a note to clients on Wednesday. Did I get clapped? Nah, you good, man. You good. But somebody laughed at the guy. Oh, what the Netflix? I'm down $80 now. Damn you. What's her name? I forgot her name. Brainerd. Glass Onion. I liked Glass Onion, but then maybe I'm just an Edward Norton fan. You know, Netflix has been testing different strategies to crack down on password sharing in Latin America for the past year. It'll step up these efforts in the first half of the year. It's a risky move, our colleague Lucas Shaw writes. Netflix will need to roll out this plan gradually. It doesn't want to alienate customers by forcing them to get a new plan right away. Instead, it will send them increasingly suggestive reminders. If Netflix can convert 10% of the moochers, that's 10 million new subscribers. Shit. There you go. And oh yeah, final five, bro. Final five. I don't know though. This is now we've moved. How much have we moved down? So you're down $20 from the highs. This is just setting up to do nothing, like low key, but I think it could still drop a little bit more. Netflix has been using this week to tout its film and TV lineup for 2023. Wednesday brought a list of 31 movies coming out, including Murder Mystery starring Adam Sandler and Julia Roberts, Extraction with Chris Hemsworth, reprising his role as a Black Ops mercenary. The company revealed titles for kids and families, new episodes featuring the Mighty Morphin Power Rangers, Pokemon, and Sonic the Hedgehog. Oh, shit. I forgot. I'm reading you analyst comments, man. I'm just so excited for earnings. I forgot. I know, we got to bring it down now, man. Yeah, right, ladies and gentlemen. We're making our final approach. As we make our final approach, you guys are holding on to any bags. Please throw them in the overhead bins above or firmly beneath your seats. We'll be coming through the aisles with the trash bag if you'd like to dispose of those bags. But as we make this final approach, we're going to be landing here into the second link terminal. Second link terminal in description. That's going to be your nightly watch list and main channel layover around 4 p.m. Pacific time. Then we are going to be taking out promptly around 6 a.m. out of sunny San Diego, California. California. We will also be having about an hour, 30-minute layover here for Netflix earnings. So if you plan to stay, please remain seated. But as we make this final approach into San Diego International Airport, it's about 56 degrees, mostly sunny, not too bad of weather unless Reed Hastings shits on everyone. But either way, we are no longer under COVID guidelines, so no masks are required. But we do ask that you exit one row at a time and drop a GG on your way out. As always, we appreciate your guys' business. If you're interested in your Call Rapid Awards program card, please flag down your flight attendant, and we'll get you that as soon as possible. As always, thank you for flying with the Colt, and hopefully have a wonderful evening. Ladies and gentlemen, boys and girls, I think I'm gonna hold the Netflix now. I didn't think none of this would happen. I'm down $100. $100 on 20 shares, so you can see big earnings, bigger amount of shares. I'm 4 times bigger, so I would have only lost $30 if I didn't add to any of that throughout the day. Damn you, what's her name? But I might be down for the risk now. I might be down to risk it for the biscuit. But you got to decide if you're with it. Chattadonia, what are you going to do right now? Oh, man. This will decide a lot for big tech. It's not about Netflix. I want you to think about everything else. The emotions after today. And then Friday, we got nothing. There's nothing tomorrow. And then we'll find out. So, Chad, bring it home. 1 minute. Go, 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 go. Ladies and gentlemen, boys and girls, you're coming into the bell. The big earnings are on the way, and we have to finalize the first week of going down in the year. Oh, my goodness, Chad. What are you going to do? You got to bring it home. You got less than 30 seconds remaining, Chad. Oh, my, are you ready? Dude, they're dumping the Netflix. How did this even happen? Oh, my God. What, bro? They were, oh, dude. I'm waiting for, I only saw one earnings leak comment. Oh, dude, they're going to bring it down to 300 before the bell. Can they do that? 8, 7, 6, 5, 4, 3, 2, 1. Ding, 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 ding. Or nah, let's go, baby. Oh, wait, is it already out? Hold on, I think it's already coming out. We don't even have time for GGs. Hold on. Peter's name, wait. Reed Hastings gives up CEO title? Oh, no. Wait, is it moving? Wait, is it out? Dude, that's it. Reed Hastings has given up CEO title. Oh, my, I'm already up 120 on it now? What's happening? Wait, the earnings aren't even out. Wait a minute, the earnings aren't even out. Oh, Netflix. Oh, they killed it. 7 million subscribers. Oh, let's see. Wait, where's the revenue? APAC 1.8 on Asian. They missed on Asian, but total paid net. They padded it with the ads, bro. Oh, they padded it with the ads, man. Oh, 7 million EPS. They guided a little bit lower for next quarter, 2.82 versus 2.99. So it's like it's in the middle. It's kind of coming. Oh, no, it's negative now. The pop lock. Oh, dude, everyone's going to have to digest this. I don't know how I feel about it. They killed it on the paid. Hold on, let me see. Paid net 7 million. You can streaming paid net 900,000. Estimate was 500,000. So they're killing it on subscribers. EPS for next quarter is a little lower. EPS on this quarter came in below at 12 cents. And then revenue was 7.85 billion, roughly in line. Oh, man. Wait, am I doing the right one? Is it there too? No, it's ripping now. 337, 338. Oh, 340 now. Oh, my gosh. They killed it on that one. I think the market. All right, I sold out at 338. I made like $300 on it. So shout out to the after hours. I'm out of it, though. There you go. So our Leo Brainerd shares paid off. That's it. $300. I did not expect $300 on that. But there you go. You're already up. You're half of the expected move. So I'll take it. So the small shares prevails. Oh, that's huge, bro. That one's, again, it's weird because fourth quarter's down. Let me get you a little bit more. Operating income was $500 million. It's out. It begins by saying quarterly revenue and operating profit and membership exceeded the company's forecast. We continue to lead the industry by engagement, revenue, and profit. Co-founder Reed Hastings is stepping down as CEO, and they named a new replacement as well, too. But again, they see first quarter EPS 2.82, estimate 2.99. And then again, dude, they almost doubled the expectations in terms of what was expected. So that one is pretty fire for them, but we got to hold it. That's the key. So I sold out of my shares. You have bragging rights, but you have to be able to sell out in the morning. That's the only problem, my friend. But otherwise, you should be like what? I think you're like $10, $15 in the money. So GG, baby, GG. You know, my humble shares did good, though. The watch list thumbnail's been fire. Thank you, my friend. Thank you. Disney's rocketing up. Even Disney past 101. I think, bro, look at After Hours, bro. You just popped up pretty decently on that. Oh, man. Netflix says 2022 was a tough year with a bumpy start but a brighter finish. We believe we have a clear path to re-accelerate our revenue, continuing to improve all aspects, launching paid sharing, and building our ad offerings. Yeah, where's the fucking ad stuff, bro? Hold on. I want that ad news. I want more updates on the ad segment. Again, they killed it, and they doubled up net additions, which is shocking. Again, as everybody said, nobody watches Netflix. They somehow added 7 million paid subscribers in the fourth quarter. Again, they see first quarter net 1.28 billion. Okay, that's not bad. Shares are up 8% post-market. You're still below expectations. We're streaming. God bless you, bro. God bless you. Oh, man. Disney might get a really, really active off of that one. Texas Instruments, they name Haviv Ilan as president and CEO. They plan to resume buybacks in 2023. That's bullish. Again, remember, they cut buybacks. They just brought them back. I'm pretty sure. Yeah, then they see first quarter operating income, $1.6 billion. More numbers are coming in. That's pretty bullish so far. I think we're solid green, but you could still move up another 5%, but they're bringing back buybacks. Fourth quarter free cash flow is $332 million. That was better than expected. But again, they're not up that much, but then they just recovered. Actually, technically, they've moved 8% because they were down 3%, so keep that in mind. They're almost to the point of getting there, but where does it put them? I think they're still in the awkward middle. Yeah, they're right at the last earnings, so maybe. I was thinking 360, but right now they've filled the full gap. I would say like 350-ish would be where it stops out. But that looks good for now. Netflix plans to resume buybacks. Disney and Roku follow. Net cash provided by operating activities, $440 million. I believe that was higher than any of the analysts. That's a good start to big tech for now, as long as it doesn't give back up. But I don't think anything about the report was bad. I'm waiting for an analyst to shit on it. Nobody has yet. It's a $30 expected move, but remember, it was down like another $10 when the bell rang. So literally, it's already moved about $23 to $25. Just keep that in mind. So that's your first couple of red candles. See what happens. Disney is popping big. Disney, I think actually Disney came down. Oh, Disney came down. Oh, Disney came up. They cracked down on password sharing. I'm waiting for more. They see first quarter revenue growth of 4 to 8% on Forex neutral basis. That's decent. And then again, Reed Hastings stepped down. Nordstrom's is getting clapped. CGen dying. Yeah, we're down $7. It's hurting bad, but that's bro, the power of the shares. So this is where I sold out a little bit, but we realized like $300 on that. I don't know how. I guess, man, that would have been bad to the downside, but we already down 150. We went 150 at closing bell to a $300 net profit on Netflix within 1 minute and 50 seconds. That's it. I got out. I got out at 338.50. So not too bad. Netflix going crazy. What the hell? We're going to see, though. So, again, details. Fourth quarter, EPS was 12 cents. Estimate was 42. Revenue was 7.85. Estimate was 7.86. APAC streaming subscribers, 1.8. Estimate, 1.9. The Canada streaming page streaming net change, 910,000. Estimate, 553. And then streaming paid memberships was 230 million total. Estimate was 227. So they beat by 3 million on the total. And then again, they beat, again, it was like, I think it was 3 million positive. And then Netflix sees first quarter 8.17 billion. Estimate was 8.1. So first quarter guidance is in line. And I think we're kind of slowing down now. This one's going to be interesting. And then again, the conference call, I believe, is at 3, and then they're going to announce what's his name leaving. Great bounce back in subs. It really was. It really, really was. I'll take it. But again, I mean, remember what I told you? Yes, you're right at that 336 now. That's the interesting part about this. So you need to get above that 340 and 350. So I think this is going to be your reloading, and then we go from there. But if it can't get above 350, I think we're going to be damned to 336 hell. It's a good report, though. It's not bad, but now I think they're getting back to reporting in line. So now they had the sandbag, the beat, the double beat, and now I think they're going to start reporting everything with analysts now. Well, let's see how it is, but I don't think anybody was expecting another 3 million net additions paid, but we need more update on whether or not they were paid or not. So Netflix addresses the new lower-priced ad-supported plan, which launched in November, saying we're pleased with our process to date across every dimension. The company says the lower price point is driving incremental membership growth, and it's seen very little switching from other plans. But Netflix also warns that revenue and profit growth for the new initiative will be modest, given that it will build slowly over time. So let's see. But Chad, let me go grab a water real quick. I'll be right back. But I think that's it for the most part. Overall, they missed on a lot of estimates, but it was good in terms of showing some of the growth, and they didn't do that bad. But Chad, it's that moment. It's that moment. Oh, man, how do we feel right now? It's back then. Now, look at now. It's back to 2. Where the genius is at. I feel everybody kind of confused now because they did good, but they still kind of missed all of the estimates. They reported more in line. The CEO left. The stock went up, and now it's back up, but it's not like, look, it's 1% on the day. Oh, man. So shares of other streaming companies are riding. Walt Disney's up 1.7, Roku up 3, Warner up 2, Paramount 1, Fubo 2.5, music streaming, Spotify's even up 1. So they said they'll roll out paid sharing more broadly in the first quarter and say subscriber growth will likely be greater in the second quarter than the first. From our experience in Latin America, we expect some cancel reaction in each market when we roll out paid sharing, which impacts near-term subscriber growth. But as borrower households begin to activate their own standalone accounts and extra member accounts are added, we expect to see improved overall revenue, which is our goal with the plan. They addressed the lower tier. I already went over that. That's it. We've already gone over most of it now. Oh, my gosh. Look at this, bro. Look at this. Look at this. So where is it? Their forecast for next month. Operating margin back to 19. Margin is pretty decent, but lower than quarter 1, 2022. Diluted EPS is expected to be 282. Still lower than the other one. And then they don't have any other addition forecast. That song was called Earnings Season by Uncle Answers, baby. It's earnings season. That's why, man. Yeah, it's on all platforms. You got it on Spotify. That's nasty, man. That's nasty, G. Everybody trying to make the fastest, G. Competition. I'm going through the shareholder letter right now. Again, they did decent. Average, I think no one's mentioned that. Average revenue per membership has gone up like 10, 20% on this quarter than last quarter. And then they have year-over-year growth by 10% overall, even on Forex neutral. Forex neutral, they did 5% on revenue. Non-Forex neutral down 10. Very interesting. Oh, Netflix fading. Now the stock is up 2. Actually, it's down 0.3. You near top ticked it. I left a couple dollars on the table, but I mean, that was a wild ride today, huh? Yeah. Should we get back in? No? Okay. I could get back in. I'm down to get back in. Let it flush a little bit. Let's get the conference call. They say they making lots of money, but they talking non-GAAP. Oh, right when now it bounces up, man. I don't know. Is it just Netflix? Yeah, nobody else cares about anything else. There's like another one, but that was about it. Like Ocean First, SIVB. Is going back because everyone's digesting it. There was a lot of good and bad. They're talking about, losing subscribers because of the password sharing, all of that. These guys basically gambling now. Yeah, huh? They said that to me when I bought it at 218 too. Okay? Come on, my earnings geniuses. You always do this after earnings. Shh. It's okay. It's okay. We'll get through it together. We'll get through this together. Don't worry. Are you trying to make me buy it? But remember, we said we were expecting this now with all the back and forth. We said this was totally possible. Let's see. I'm waiting. I want to see. If it flushes, I'm down to, I'd be down to buy it at those pre-market lows, but 328's higher than any other part where you got it at. It could also rise up tomorrow. We're going to get the upgrades now. So that's what you got to realize, all these analysts. But, I mean, don't tell me this isn't what we talked about. Look at what just happened. You literally shot down 2%. You shot down 2% in the final 3 minutes. You popped up 8% or 5% after the report for 10 minutes. And then now you are back to literal break even on the morning. So you got to take that as it comes. You see what I'm saying? So yeah, this is going to hurt the premiums, but then now everyone's going to start debating it. But I don't know how I feel about that because that's what we said would be the bad news. But it's there in a weird way. I'd actually kind of want to go for Disney instead, but Netflix might be able to do its own thing. Let's check it up here. 328. Damn, that flushed to 316. I think you had a lot of people buy in there. The volume's still decent. Again, conference call is in what? 15, 30 minutes maybe? But I think their guidance just isn't as hot. Again, the algos are probably reading they missed every headline number. So when you look at EPS, all of that, and they missed on everything. But the subscriber growth, this is just back to the whole Netflix subscriber growth. Again, I think average revenue per user was fire, and they had some other decent things there. But other than that, though, you got to, if you really want to be picky, they did miss on every level. Where's the numbers? Like, they missed EPS, they missed revenue barely. They missed on Asian Pacific streaming additions. They beat America and Canada, and then they just killed it by 3 million more subscriptions. Yeah, 328's like right here. Oh, well, watch out. That's the reload. The dip buyers will be there. How do they miss on revenue, but revenue per user increases? Cost-cutting measures and other things. And then that means people canceled at lower prices and signed up at higher. They signed up more people at higher prices. Well, we're gonna wait for the call. I think now you're doing the earnings dance for now. I mean, it's decent. scared of this one, but I'm going to do it. Damn, son, why'd you scare me like that? The fuck? After hours. I bought 50 shares of Disney at $99.78. Remember, I sold out at like, what, 100 and some change earlier, but I'm going for the sympathy before trying to double dip on there, but because now as we move forward, people might get hyped up on that. And then if it drops back down to like low 320s, I'd buy a little bit more. And I'll just do the small shares once again. But again, even keeping it roughly smaller there on Disney. Nordstrom. Yeah, I don't think Nordstrom had earnings, but I think they had a downgrade. I bought Disney shares. I bought 50 shares of Disney. I mean, they're up the same amount. But I'm looking because now everyone's going to start. It's either Netflix will outperform or Disney now might be able to do its thing from here. T-Mobile doesn't experience or expect material effect on operations from incident. From what incident? Their earnings until February 8th. So 2 weeks. That's the whole idea. But then again, the sympathies could easily get clapped. Costco buyback. Let's check. Is it up, dude? Oh, yeah, I forgot. Netflix is even bringing back, they're bringing back the buybacks. They were up only 1 million subs for last year. Well, that's when the growth started slowing, but that number is crazy. They added pretty much, it's like net 3 million more subscribers than anybody was expecting. This is just what happened last time. So I just don't think people, I don't really think anybody was really putting that one in the cards. I wasn't. I mean, I thought they would do decent, you know what I'm saying? But it's, I didn't think it would be 3 million more. Like, that's a lot. But again, like comparing them to fourth quarter 2021, just don't forget, they didn't die fourth quarter 2021, right? This is fourth quarter 2022, this report. But at fourth quarter 2021, Netflix was up a lot more. I mean, again, last January, they were at like $500, and then they dropped to $355-ish. So they're doing good and bad in some ways, but you know it was a $500 stock then. Best of luck, David. I know if it flat. It's crazy because we talked about this and we were like, nah, but yeah, it really did that, bro. They really did it. But they got those 3 million at a higher membership. Yeah. That's crazy, actually. Bro, I can't believe it. They dumped it on us. Bro, they dumped it on us. Then they ran it up and then brought it back to break even. You're kidding. Dude, I mean, you know who the winners are. So, like, I was like, that's crazy if you really think about it. They're just counting people who unsub and resub. You could say that, but the net subscribers have gone up. So, again, they went up to, 270 million? Or 230 million? So, I think there's a pretty picture for it. Let me see if I can find it. Where is it? APAC. Where is it? Theta gang at it again, just like Vegas. The house, bro. They can miss on balance sheet. Because the revenue miss was by 100 million. The EPS was a big miss, but they had a wide range anyways. But it's more like I was telling you, the story has to do with growth. That's it. Otherwise, you don't buy Netflix if it's not growing, or if you think it's the end of an era and they can't, like, if you think there's no more subscribers to get out there, Netflix is a whole different stock. So that's why it's like, you know, where you're holding up break even and you were down, you're technically up 4% right now, because we were down 3.5% at the end of the bell, and then now you're up 0.8. I want the little pretty picture of how many people they added, but again, the subscribers are up. So Reed Hastings stepping aside is not entirely unexpected, as he notes in the blog post. So quarterly membership growth blast through forecast, shares rise. Hastings gives up CEO title, named co-chief. Netflix says add back tier drove subscriber additions. First quarter profit guidance trails estimates. Bloomberg senior analyst Geeta Ranganathan says the results show Netflix is set up well for the fiscal year. Fourth quarter traditionally has been a strong quarter for them, and what they've done really well in terms of execution in the third quarter and fourth was a steady cadence of content hits. While Reed Hastings stepping aside, Netflix announced another leadership change. Bella Bajaria, formerly head of Global TV, is now chief content officer at Netflix Film Division, and then Scott Stuber has become chairman of that unit. Netflix has stopped giving out subscriber guidance, but they did say they expect modest subscriber additions in the first quarter, and that'll be fewer than the company added in the fourth quarter. So fewer than 7 million. So the biggest news other than co-CEO stepping down, Netflix's huge subscriber beat. The company added 7.6 million new customers, well ahead of 4.5 million. Netflix cited strong lineups of movies and shows, which got new customers to sign up and kept older ones from leaving. Oh, I know what I'm going to do. All right, let's see. Oh, damn it. It's already moving. I know exactly how to get back into this, Chad. Man, they're scamming me. I bought my 5 shares now. I don't need to go with 20. You see that? The small shares are back now. Where the fuck? Oh. 332.40. 5 shares of Netflix. That's how I could do it in 10. Is it 5 shares now? Now I'm back to 5. No more Lael Brainerd. But again, everybody, even again, Bloomberg is even getting bullish on him. So all we got to do is wait for conference call, wait for analyst, and then we'll go with our 5 shares after tomorrow. It's not a long-term ad. No, this is to trade. Remember, I've just been trading, you know, again, even with 20 shares. How much is even 20 shares? Every 10 shares, 20 shares is a decent amount of money. But remember, I've been trying to show y'all you could go pretty much little by little. It's like 6K. 6K, and then I think that's only like 1,000 on margin or something. I made 100 off of 8 Netflix shares today. I'm out. There you go. And then again, the whole idea is you wouldn't have like the most we were down on that play was 100, 150 at the close. Then we went up, but now I'm back to 5. And then, you know, we just been taking it light, bro, taking it light. Again, let me show you the small share strategy, bro. The small share strategy. We did start with the first ever Netflix. Remember that first one? And we made money on that one. It was only like $70 at the time or something off of like 10 shares or whatever it is. But I do hope you guys see it. And then again, playing with the shares, you see the flexibility that we have after hours in terms of everything. So again, like, you know, if you had options, you were up a lot. Now it's different. And then again, you're at the mercy of where it opens up. But the whole idea here is, if you, like I've been telling you, if you could just do a little bit at a time, day by day, I mean, the shit does start to add up, and it's not too bad. All right. So, Chattadonia. I hope you enjoyed your day, but that is it. That is it. We made it. We made it, Chad. That is the rest of the day. I just want to tell you thank you for being here, and I appreciate you. I hope I see you on the watch list. You know the link. Y'all liked the video today. It just took a little bit of threatening you. Yeah, you know, because y'all showed me y'all holding them likes. I didn't know like inflation hasn't hit y'all yet. I know, GG, baby. Let me get a GG. Let me get a GG. You hear that sound? I like it. It's weird without any music, bro. You know what I'm saying? It's weird without any other music, bro. But, Chad, I love you. Follow me on Instagram. Fill out the prayer request wall. You better be on the watch list. And follow me on Instagram. And again, I already said all that. Prayer request, we good. But I'm going to just head out. I'm going to just end it on that one, man. I'm going to end it on that one, okay? All right, let's get you one more. Let's get you one more. Let's go, baby.
I'm just tryna teach some, so let me taste. I'm just tryna eat some, so let me eat. I woke up in beast mode, they still asleep. Told them hit they free throws, and back on D. I could hold the L, bro, that's on me. Told them take the game slow, keep the peace. Looking at the table, my enemies don't know where I came from. I'm like E.T. running. Money ain't the motive, but it's service motivating. You ain't a hoe, but love complaining and just celebrating. You sell a home, you know I'd love to have a conversation. We was buying cribs before you knew about inflation. You ain't gotta give me credit, boy, the banks give me a lot of that. I meant it when I said it, we gon' take it all and give it back. I learned a couple lessons, the wisdom that came from all the bad. I learned the repetitions, I put that shit on my dad. My money ain't getting lag, I wanted, could get it now, but I cannot force the hand. I buy that shit when it's there, your homie just look around. We did it, I say a prayer, we bit that shit from the ground. And the foundation they saying, y'all ain't feel it though, nah, but we ain't need them though. I ain't being cocky, I just won't look in the mirror, bro. Doing more than talking, boy, the empire empirical. Every time I sign a dotted, boy, it still feel like a miracle. I'm just trying to teach some, so let me speak. I'm just trying to eat some, so let me eat. I woke up in beast mode, they still asleep. Told them hit their free throws, and back on D. I could hold the L, bro, that's on me. Told them take the game slow, keep the peace. Looking at the table, my enemies don't know where I came from. I'm like E.T. running. Market's gonna crash, but I could kick another lesson. Till the curve uninverted and I don't talk recession. Till the dollar was stronger, then I ain't really stressing. But the fact it won't crash it until the Fed admitted 15 on 50. Boy, the kid already seen this shit. Only way to get tricked off bullshit is to believe in it. 2022 like 92, you should go read this shit. Japan and how they move might really make you think they lead this shit. Inflation, hot money, boy, it sound like today. I'm not playing, it ain't funny, even the fix was raised race. Both the problem and solution started with a central bank. Call it what you want, but that one cost a decade.
Tryna eat some, so let me eat. Eat some, so let me eat. I woke up in beast mode, just still asleep. Oh, Chattadonia. Chattadonia. You did good, man. You did good. You did good. I hope you blessed. That's it now. We got to get ready. It's going to be a very interesting effect tomorrow. It seems good. It seems like you're going to get a little bit more optimism. So we're going to find out. But, Chad, I hope you know that we love you. I hope you know that you're blessed. And, you know, pray for the long term. And, you know, just don't ever forget why we're here, okay? Just don't ever forget why we're here. And why we keep going. Why you don't back down. Why that faith, hope, and love ain't ever going out of style. And why you got to save 10%, baby. Why? Figure to the sky, baby. To God be the glory. And through the grace of God alone. Amen. Amen. Amen, Chad. So I love y'all. I'll see you tonight. I'll see you in the morning. I think I'm curious. I'm very curious of what's going to occur here. It's an interesting one. So, Chad, I love you. I hope you enjoy the day, and let's go. Let's finish it out. It could either be the first red week of the year or not, but either way, you're going to be with the Chad, baby. You know what I'm saying? You're going to be with the Chad. It's gonna be good, man. It's gonna be good. So that's it. All right, man. I'm out, man. Peace out, bro. Enjoy your day. Peace. Yes, ladies and gentlemen. You spent 7 hours tuned in to 101.5 The Code. If your mama raised you well, we could clearly tell. You don't gotta go home, but you gotta get out of here, baby. Watch this on the way. Netflix earnings with a weird, obvious beat, but not a beat. And then we gotta play out tomorrow to end the week, baby. I hope you enjoyed it. I hope you stay blessed. And drink that water, baby. Colt is out.